for consultation. I'm sure all of you all have already sent your consultations in the entire power ecosystem, which, as you say, is needed for data centers. Which part do you think will or should or could get some benefit? Will it be the distribution piece? Will it be the transformers? Grids? Because there is a lot of kind of dysfunction when the grid has to adjust for solar and adjust for between thermal. What are you expecting at all?
No, I'm expecting 2-3 things. One thing, absolutely, we need a more manufacturing, local manufacturing, end-to-end manufacturing is need to be there. At least 2 to 3 times more than what capacities we have, and that is what is required. And then we need a lot of, not only the PLI, but in a PLI 2.0 kind of things, where we really need to rapid productions, rapid manufacturing, rapid, skill sets. It's not only just, bring the technology and manufacturing it, but we need an end-to-end manufacturing focus is required. And that's number one I'm looking forward. Number two, on the discom side, because most of the data centers will be located in the states, and you need to have a very robust power, sanctions, power flexibility, and that needs to be done in that. So discoms has to be empowered. Discom need to be, create separate cells for the data centers, because the data center growth is going to be huge, and it's not like, normal industry will take 3 to 4 years. Some of the data centers are, we see in other parts of the world, they're building in less than 12 to 18 months time frame in that. So whole ecosystem has to adjust to this kind of time frames, including supply of transformer, for example.
Okay.
Yeah. No, I think 2 years back, they allowed sovereign wealth funds and, that category
to invest
in infrastructure. FDI infrastructure, that was tax-free. But the point is, Lata, that FDI, all these guys come in as FPIs. They're registered as FPIs. So if you want to do something for them, you'll have to just do something for the category as a whole.
Yeah.
And of course, AI is not just AI. It's not just roads and bridges. It's all kinds of infra. Now, AI is, of course, something which Mr. Venu said. Mr. Venu, we have more questions, but as always, on a day of the budget, we have limited time. And I request you come back once the budget speech is over to discuss this more. Thank you very much for joining us here on the program. Let's cut across to Shireen now. She has the star-studded panel, former Revenue Secretary Tarun Bajaj, former Defense Secretary Mr. Aramne, and the former CBIC Chief and Senior Advisor at KPMG, Vivek Johri. Shireen, over to you.
Thanks very much, guys. The budget editors are here to decode what Finance Minister Nirmala Sitharaman is likely to deliver. And without further ado, let me get straight into the big issue that the market is hoping for and certainly waiting to hear the FM speak about. The former Revenue Secretary here with us, Mr. Bajaj, let me start by asking you, the big chatter that Digi Yatra for foreign investors and domestic investors, frictionless entry, that is what Nilesh Shah just told us on the channel. Do you expect any change at all on LTCG, any change at all from a FPI perspective? Are you working with that assumption, expectation at all?
I would say the way the numbers are coming for the current year, I would have my doubts if there's going to be any changes in LTCG and STCG. But you never know. The budget always gives surprises to the market. But my own view is that it is very unlikely that there would be any changes. And I think the changes having been made last year or last year. So I think stability is the theme of this government, so they would like it to continue for a few years. So I'll be very doubtful if they do.
You'll be surprised if at all it happens. So what do you believe the government could do by way of sending out a message to both FDI as well as FPI?
So I would say the first thing is we really need to analyze why the FDI and FPI thing is happening. The FPIs are taking money out. Though there is a good gross FDI, I think it is about $60 billion, but the net FDI is much lower. It has to happen that after a long period of time when the FDI was coming, some money would start going out. The Indian industrialists will also start investing outside. So I would say even if these little changes are made, which the market is anticipating or the Bombay is expecting that to happen, it may not change the way FDI and FPI will behave in the times to come. So the dollar is actually becoming stronger as compared to the Indian rupee. So it doesn't make sense for the FPIs to make investments. As soon as they make their investment, the very next year they're investment goes down. So I would say it would need a different kind of a mindset rather than
any
tweaking.
short-term fix, short-term fix at this point in time. Mr. Jory, the big story that's playing out on our screens right now is the crash in commodities that we've seen overnight. Silver, gold, all of the stocks reacting here in India as well. Do you believe that there could be the possibility of a higher duty, import duty imposition on gold and silver? Would it make sense at this point in time?
It's quite tempting to do that, but there's a downside to increasing duties on gold and silver. And in the past, our experience has been that if you increase duties beyond a certain threshold, they always lead to more smuggling and more, illegal, sort of illicit imports. So if at all there is an increase, I'm not putting any bets on it, but if at all there's an increase, it will be moderate.
Moderate.
Only from the point of view of raising revenue.
Will disinvestment be revived? That's my hunch. And as I said, the evidence shows that it's unlikely to, given that we've seen that it's been virtually dead over the last few years. Do you expect a revival on disinvestment, Mr. Bajaj?
So I'll answer that question by saying that I hope you're right. But the way things have happened in the past, I don't think it'll be a big bang. We are expecting IDBI to happen. I think I read it in the papers yesterday that would happen. And some small bits might happen here and there. But I don't expect that what was announced earlier, that one bank or two banks will go. I think it'll be slow and
steady. There is consensus, though, on just one item, that this is going to be a year for defense allocation, Mr. Ramne, to go up, if not by 15%, perhaps even higher, 20 to 25%. And that's the number that you're working with as well, correct?
Yes. In fact, defense capability improvement is most important at this juncture because of the regional conflicts and also global situation. So capex in defense is likely to go up. Whether it's 15% or 20% will solely depend on the readiness of the department and ministry to place the orders and also to take the delivery. The increases will be contingent upon the previous orders which were placed and which are ready to be delivered. So all in all, there is a scope for at least 15 to 20% increase because of huge orders placed over last 3 years, and they coming to maturity and fruition in the current year is likely to increase the budget by at least.
As well as the emergency procurement.
Yeah, the second important aspect is the emergency procurement. 2 tranches of emergency procurement are right now going on. If both of them mature into delivery or at least to come to certain stage, I am hopeful that the capex will increase. Apart from capex, there will be huge increase in the non-salary revenue expenditure, which will basically help the services to shore up their inventories and other equipment.
Okay, so 15 to 20% higher allocation for defense. But, gentlemen, I want to understand from you, because both these individuals here have been part of the budget-making process till very recently. Part B is likely to get more focus and attention is what we're giving to understand. What would you read into that, Mr. Bajaj?
So to answer your question very curtly, I would say I'd wait for another hour to see what it contains rather than speculating on national media as to what it would contain.
But I'm not asking what it would contain. I'm saying, what do you believe it signals the decision to focus more on Part B or give Part B as much focus as Part A?
The Part B always had more focus than Part A. I've done Part B and Part A separately. And I would say that most of the people, and especially your audience, would be more interested in Part B than Part A. But here I would say maybe the government wants to give a longer vision or medium-term vision, because there's always been this speculation by the foreign investors that there is no stability in tax systems in the country, and every now and then we get a surprise. So maybe something to that extent would happen, because I also see that the government has done enough on taxes. The GST thing has happened. On the personal income tax, it has happened. On corporate tax, it's already happened. And customs, Mr. Jory is here, and he will bear me out that this time we are expecting a lot to happen on the customs side.
Correct.
So I would say that is it.
Mr. Jory, what would you read into that? And customs, I think, again, there's consensus that import duty rationalization is going to be the big one. And you've told me as well, you expect we've gone from what, 23 to 8, and now you expect 8 to 4 in terms of tariff lines.
So yes, it's quite fair to assume that there would be a big push on customs rate rationalization, like we did for GST. And I expect the number of rates to come down at least to 4. But more, other than that, I also expect Part B to delve deeper into ease of doing business. Because there's a lot of concern. You talked about FDI and all that. There's a lot of concern about uncertainty in the current tax regime, and how investigations get taken up, interpretative issues get converted into disputes. So I think there will be some vision that will be laid out on how to deal with that. Maybe some immediate measures and maybe some medium-term measures, administrative and legal, on how we can deal better with disputes and closing disputes and so on.
Mr. Bajaj, before I hand it back to the markets, because the markets are also fairly volatile, the Nifty now moving into the green, as has the Sensex. But how much fiscal space, how much fiscal room does the finance minister have to maneuver? I mean, everybody has put out a wish list on what they want, but at the end of the day, you've got to balance all of those out. How much fiscal space does she have, you see?
So what I would say is that over the past few years, the revenues showed a very good buoyancy, which has not been the case this year, especially after the relief given both on personal income tax and GST. So in that sense, the fiscal space would not be as much as it has been in the past. So I would say that the budget has been going up by almost 7, 8, 9% in terms of the total budget size. At the most, we can expect a similar increase in the current year, because there would also be a base effect, because the GST changes came up in September, October. Till September, we may not have that much of a rise in GST. So I would say that the space would definitely be lesser than what it has been in the past, looking at the trends that we have seen in the current year.
So that is the budget setup as we count down to Finance Minister Nirmala Sitharaman's 9th budget. Limited space, but do expect a lot as far as import rate rationalization is concerned, and perhaps even a longer term roadmap that the government may hold out as far as taxes are concerned. And defense, that's the big story there, that the defense sector allocation is going to be significantly higher. GST collections in 1.93 lakh crore rupees for January 2026. I remember we every month we would chat about GST collections. Are you missing doing that?
No, I'm missing teasing you, because you would every time ask me, when will you cross 1 lakh? And I said, I'll stop that question.
We're almost at 2 lakh crore rupees now as far as GST collections are concerned. But Prashant, back to you guys. We'll have, of course, our budget editors with us through the course of the day. Back to you for the market.
Absolutely, Shireen. And there is a lot happening, right? And look at the Nifty, 15 points higher, which means it's come back into the green. And while underlying commodity prices on MCX have not recovered, and this is the point I was making earlier, stocks are a different matter. Stocks have recovered. Look at something like a Vedanta. Just look at the intraday of Vedanta. It's recovered 6% from the day's lowest point. And then maybe just look at Hindustan, steel stocks, actually. Steel. Names like JSW, Tata Steel, I think those have also recovered. The pure play, Hindustan Copper, Silver, which is Hindustan Zinc, those have not recovered. MCX has come off about 4% off the lows. It was down 15%, MCX. A lot of brokers trading gold and silver for their clients would be out of margin. And I guess that is the reason why there is I think, no doubt, forced liquidation this morning, which is underway. There is, remember, expectation that perhaps import duty, and that is the reason why futures on MCX for both gold and silver were trading at an 8-9% premium. That may still happen, but that is only when the speech comes. So, but you got to live till then, and they will be, because of lack of margins, etc. And margins have gone up substantially from under 30% to 60-63% on Friday evening. All that is kind of playing out this morning, as we have been highlighting from the word go. We'll take a quick commercial break here. Markets, of course, because of this commodity thing which is going on. Otherwise, I mean, going into the budget, especially till 11, it kind of goes flat, very, very quiet. And then things pick up. But because of all of what we've seen in commodities in international markets, and consequently here, there is all that activity. We'll be joined on the other side by Dinesh Kanabar of Dhruva Advisors, Sunil Badala of KPMG India. We'll start talking about, of course, the elephant in the room, if I can call it that, taxation. Stay with us.
Fiscal.
In the heart of the jungle roams the finest creature, and through the chaos of the sparkling city lights, I am reminded of the timeless valor of the majestic tiger. In life's wild journey, we have one shot to thrill. And when done flawlessly, we unwind and allow our spirits to rejuvenate. Royal Ranthambore, India's finest, yet.
This is Network 18, and you're watching CNBC TV 18.
Welcome back. The Nifty and the Sensex have just about moved up into the green. So clearly a lot of losses washed off. I guess early morning positions, especially on metal stocks, had to be corrected. Thereafter, there is a lot of optimism on defense stocks. Drone Chari is the one that's doing extremely well. BEL, of course, Paris Defense among the mid-caps, that is. Mid-caps were at one point minus 0.7%, and now it's about 0.48%. Gokula's exports is up. That's indicating some hope.
Look at the Nifty, Lada, right?
I know.
This is the right state of the Nifty. 1 point change.
That's how it is.
It is usually very, very flat because, it's tentative. It's kind of,
And today being a Sunday, it ought to be. But we had a terrible Friday of metal.
No, the
stocks.
only thing which is throwing everything off, as I said, is commodities and metals, right? What happened? And, it's a historic one for Friday. So obviously, without international prices and feedback loop functioning, I mean, what's happening is happening.
Absolutely. I mean, when would you have a backdrop where there is a 27% drop in silver?
Yeah.
So, there, and of course, other things, copper and gold have also had.
Just one more word from the broader markets, while we're talking about the frontline names, there are stocks that are moving high on very good volumes. IKEA Lightings, that's up 13%. Volumes very, very high out there. You have Euro Pratik as well, that's higher. Shilpa Medicare, that one as well. Volumes very, very high, for a few minutes into the trading session. All these stocks, I'm highlighting them because they're up more than 10%. So market is taking note of some of the earnings reaction and bidding up the stock. Aztec Life Sciences, that's another stock as well that's up and about. So select stocks, they continue to do a thing of their own. And it's good to see at least markets taking note of some of that good news.
Yeah. And TPC Green, Nigel, right? And TPC Green is up 4%. I'm not sure.
They're expecting something on nuclear.
Exactly. So it's all, a little bit of, there is that budget element of, people can say that budget doesn't matter, importance is faded, but everybody before the budget or on the day of the budget.
For a trader,
it's very much
important.
Absolutely. Valchandnagar Industries, right? I mean, it's a defense company out of Pune. It's up 4%. It's got volumes as well. There is Idea Forge drones, perhaps, right? Defense and drones. So 5% on Idea Forge at this point. Avanti Feed. There is always the seafood sector, shrimps, etc., which finds a mention in this speech. I remember going back many budgets. So Avanti is up 5%. Dredging Corp, shipping, commercial shipping. We were talking about. It's done very well, by the way. I mean, it's actually had a one-way rocket-like move, but 5.5% higher there. So you can kind of, look at this stuff. There is MTAR Tech, again, defense company, 5%. So a lot of stuff which is coming through is perhaps there is no other reason at this point in time except for expectations.
Just one point, Prashant, with regard to the metal index, which is down as we have been mentioning.
Yeah.
But I'm just wondering whether from here on, ferrous names could outperform the non-ferrous names.
Yeah.
The last 2 months, the non-ferrous names have done very, very well. Vedanta, Nalco, Hindalco, all of them because of the global factors. Because now there is a possibility that the dollar strengthens, because we have seen some kind of profit taking. Let's see whether or not the ferrous names, and if you just look at the screen, JSPL, Tata Steel, JSW Steel, all of them have gone bid up, and that they're on the verge of moving into the green. Because Q4 will see good demand. Pricing has improved by 3,500 rupees per ton as well. So let's see whether or not the ferrous names can actually fight back and outperform the non-ferrous names.
Especially if it's going to be a manufacturer in India theme, then these could get a leg up. Though the survey very clearly mentioned, don't give protection to upstream because downstream becomes expensive if the inputs are expensive. But let's see. I mean,
these guys have already got what they want. They shouldn't hope for anything more.
Okay. Well, actually, the elephant in the room, as we have been saying several times, too many elephants in the room. It's always tax. After all, that's what the government can do, isn't it? And therefore, to decode what we can realistically expect, we're joined by two stalwarts, Dinesh Kanabar of Dhruva Advisors and Sunil Badala of KPMG. Gentlemen, good morning and thank you very much for joining us on a Sunday and for your patience. Mr. Kanabar, what's your expectation list?
Couple of things. You rightly mentioned that what is it that the government can do having regard to wherever we are today. So you look at things. We want manufacture in India. I'm seeing the notes about Anand Goenka, for example, talking about how do we have a manufacturing push. Then we have global tailwinds, headwinds, whichever way you look at it, where people who have studied in USA might not be able to get an H-1B visa and might want to come back to the country. And then you are saying that India wants to make its mark, whether it is in the manufacture of semiconductor, whether it is in artificial intelligence. How will we achieve all of this? How do we connect these dots? And two things come in. One is that we need extremely more investment in research and development. That's what's going to keep us ahead. And Lata, whether we agree or not, the Indian corporate spend on R&D is a minuscule of global corporate spend on R&D. And we need to up it. And can the government do something which will allow that investment to happen? Remember that not all R&D is successful. It's a patience game. It's a deep pocket game. And if the government can incentivize this, and Lata, I had an occasion to discuss this with government at great length, and two responses come back. One is, give a proof that if we give this incentive, people will spend more. And second, there are people who abuse it. That cannot be the basis on which you get law. If there are people assuming you need to have guardrails to protect it. But I do hope and wish that the government does give a boost to R&D and thereby give a boost to local manufacture. That's one very important thing. The second important thing, Lata, which I'm looking to and I'm reasonably certain that this will happen, is amendments to customs regulation. This has been one area where digitization seems to have given a go-by. Huge amount of paperwork, backlog, litigation. It's estimated that about 1,52,000 lakh crores are stuck in customs litigation. And there's a huge backlog out. Can we come back? Can we first of all rationalize our rates? We have 8 rates. Can we sort of put it into a better form? Can we just have 4 rates like we did for GST? Can we do a Vivad se Vishwas sort of a thing under customs, get a lot of money released I think that's very, very important, very critical. And actually, I'm reasonably hopeful and expecting that that's what's going to happen this time.
Yeah, and absolutely. And I think very, very important points, Mr. Kanabar, that you made. Sunil, if I can come to you, your sort of, top 2-3 expectations about where you feel there is a real likelihood of something will happen.
Okay, so I think, obviously I entirely agree with what Mr. Kanabar mentioned. Incrementally, I would say that I think the market is expecting a few tweaks in the capital gains tax regime, as well as in the bond market and in the mutual fund. So let me just quickly touch upon all three. I think there is a concern about STT and the increased long-term and short-term tax rates which were proposed in last year's budget, and there is definitely a rationale to kind of reduce or eliminate STT or capital gains tax rate, as the case may be. But having said that, of course, I'm conscious of the fact that the government needs to have the fiscal room to actually do that. And I personally think that if government can find the ways, and I'm sure there are ways in which you can collect more revenue, then I think this is a good thing to do. It will boost the overall sentiments of the market. We have been seeing a lot of stress on the FDI investment. Also, we've seen FPIs pulling out the money consistently for last year or so. I think if you focus on some of these aspects, it will be good. The other thing I think we should look at is the bond market. Yeah.
Right. Sorry. Let's just take it, and I'll come to you on the bond market because you have a sort of idea in terms of what should happen there as well. But Mr. Kanabar is with us as well. Mr. Kanabar, you heard Sunil, right? You're smiling, so I think you're all of us would be happy if these taxes are brought down. But it's about what we want and what perhaps is possible in that sense. So, what's your sense on this point, equity taxation?
So I think actually a slightly different point of view, if I could just tell you. There has been this whole going back and forth on tax treaty interpretation. And very recently, we had a Supreme Court judgment in the case of Tiger Global, where the two earlier Supreme Court judgments, which was in the Azadi Bachao and Vodafone, have been, so to say, overturned, where the Supreme Court has come back to say, under what circumstances should tax treaty benefits be given? And speaking to the venture capital, the private equity industry, there's a huge amount of concern that what seemed to be a settled situation has suddenly become unsettled.
Okay.
And I know for a fact that the government is concerned about this development. And I'm hoping to see that what sort of a certainty can the finance minister provide with regard to that. I think to expect a reduction in the rate of tax, of course, it's a utopia. It's something which we all the time always want. We want a reduction of STT, and we want capital gains tax to go away, and we want no taxation on bonds and all of that. But all of that really does not fit within the fiscal framework. There is a merit, of course, to the point which Sunil made about parity in taxation between equity and debt. But leaving that aside, the way I would put it is that government needs to give more certainty rather than look at reduction of rate of tax. That certainty is critical, and believe me, it will give a lot of impetus to the market.
Absolutely. Sunil, that bond market point, quickly, 30 seconds. Just quickly.
So bond market point is very simple. I think on the listed bonds, we obviously know there's a parity between listed bonds and the equity. It's only about unlisted bonds, I think, that we're talking about, that they need to be brought at par with the listed.
Fair enough. Actually, even debt indexation for mutual funds was taken away, and that's been a negative too. I take a point on debt. But gentlemen, do stay on. We have to go across to Shireen, who has a brilliant panel with her. She has Anand Goenka, the president of FICCI and the vice chairman of the RPG group with her. Shireen.
Ali, thanks. Lata, let's go straight across to Anand Goenka as the markets have moved back into positive territory. Very, very flat at this point in time. Anand, counting down, let me just check the time. We're literally just an hour away from the finance minister presenting her budget. Anand, as a manufacturer now, what is the best case scenario that FICCI's leaders are penciling in? What do you believe the budget is likely to take forward this time around?
But I think it's very important for government to continue to push to make India a manufacturing powerhouse. From FICCI side, there were a couple of ideas, suggestions that we had. One is to look at particularly creating an ecosystem for EMS sector. Just as in China, we have a complete ecosystem approach as in Shenzhen in terms of a mega electronics IT park that will get a lot more value addition and cost benefits coming in. The second is an increased defense outlay, which will help the defense manufacturing sector, particularly in light of Sindoor and the uncertainty around the world that is happening. Two areas from the manufacturing side. The second big area that comes in place is infrastructure, whether it is data centers, power transmission and distribution. These are two large areas which will need a shift with AI coming in. And the second part of infrastructure is roads and railways to bring the cost of doing business down.
New schemes that you expect, any new sectors that are likely to fall under a PLI scheme, anything on that front, Anand, that industry is expecting? Any incentives for R&D? Is that what you're hoping for?
Yes, I think R&D innovation, clearly we have not punched above our weight here. There's a lot more that can be done. Usually what we've noticed in the budget is that the finance minister has laid out a long-term plan, whether it is giving insight into the R&D and R&D 1 lakh crore scheme or the national manufacturing mission. I think there will be more announcements in that nature or setting more clarity on the previous announcements that have been made. I think providing that long-term vision, continuity will be very useful on areas such as R&D, job creation, focus on MSMEs, and leveraging the FTAs that have recently been signed.
Anand, before I let you go, I'm doing a pulse check. What is the mood within FICCI at this point in time? How many people, when we last spoke, you said that capacity utilization at 80-85%. How many people are looking at adding capacity? How many people are looking at hiring? How many people are looking at, better than average wage growth, which has been between 7 and 8% over the last few years? What's business confidence like?
Right. So post GST 2.0, we had a pre-budget survey, and we found that overall the mood is fairly optimistic. GDP growth rates are expected to be about 7 to 8%. We do expect an increase in private capex because demand has grown up. We are seeing about nearly 15 to 20% growth in the auto sector, as well as other discretionary and consumer product spends. And so as that utilization goes up, the mood is fairly positive in terms of private capex coming back.
Okay, private capex is the hope that industry is going in with, and that's certainly going to be the big wish of the finance minister and the government. Look, they've been saying for the last few years now that we've done our bit. We've given you corporate tax cuts, income tax cuts, GST cuts. What more can we do? Indian industry now needs to start doing the heavy lifting in terms of investment. But Anand, we'll come back with you once the finance minister's speech is over to decode the highlights of Budget 2026. Prashant, back to you.
Thanks very much for that, Shireen. Good chat there, and interested to see what corporates really are looking out for here. 8-point change, so markets are in the green, they're off the lows. Nigel has walked across to the big wall to tell us exactly what's happening in terms of single stocks. Nigel, over to you.
Well, for whoever's trading, Prashant, is looking a little bit better than what it was a few minutes ago, because the Nifty, as you said, has seen a bit of recovery. You have stocks like Sun Pharma actually bursting away from the Nifty pack itself. That's up close to around 3.5%, and the markets have moved into the green. Let's focus on a couple of big names then. The metal index, that's the big loser this morning, and that index, in fact, is underperforming by a mile. But there are some of these metal-sensitive stocks that are still under pressure, though they've recovered from the lows. You have MCX that should come up for you. That stock, in fact, is still lower. Let's get that stock up for you. That's lower, but that, in fact, has recovered a little bit. As is the case with Muthoot Finance as well. That stock as well, still trading in the red, but that's recovered considerably from the low. I'll tell you what, from the metals pack, if you look at it, you'll pull up a few ferrous names. JSPL, you should pull up a JSW Steel. Both of them actually are on the verge of moving into the green, or they're almost more or less flattish. While the non-ferrous names, whether you look at Vedanta, Hindustan Zinc, as well as Hindalco, And from the non-ferrous names, I think Vedanta is standing out because the contribution of silver to the overall SOTP is rather low. And that's the reason why that stock has recovered close to around 7% from the lows of the day, because the contribution of silver is minimum. It's bigger aluminium play more than anything else. A few more names come up for you from the broader markets. Gala Precision, massive volumes out there, stock up 10%. IQ Lighting, that stock as well should come up for you, up close to around 10% as we speak. Big move is what we're seeing on both those two names. And throw in there, Euro Pratik as well as Shilpa Medichem. All of them are flying away. So fair bit of action from the broader markets. There are a few names as well that are moving up. If you look at a PNC Infra, that stock, I think it's got beaten out of shape, but that's pulled back a little bit. And you have a divestment hope as well. IDBI Bank, that stock, in fact, is up close to around 3.5% with volumes quite high. So plenty of action actually in the broader markets, guys, though the headline index is just moved into the green. Not so bad times.
Absolutely. Thank you very much for that, Nigel. And, you know, a very snapshotty view of what's happening right now. Sajid Chinoy is with us at JP Morgan. Samiran Chakrabarti is with us at Citi. Gentlemen, good morning. Great to have both of you here. Thank you very much for joining us. And, you know, we, the equity folk, get very excited, and we need... you know, economists to bring us and keep us on an even keel, if I can say so. So thank you very much once again. It's a Sunday morning, and it's good to see both of you. Sajid, let me start with you. You know, I read that report, and I think it's a brilliant way you capture the essence of what to expect, right? 5 questions, and there is so much in there. But, you know, 1 or 2 things which is really top of mind as you get ready to hear the finance minister lay out the budget speech.
So, Prashant, I think first and foremost, I can't think of a time in recent years when there's been such a hostile and uncertain global backdrop. Remember, in the COVID year, the budget happened in February, COVID kicked it in March. The next budget was a year later, by which time, you know, we had some sense of how COVID was playing out. This is truly uncharted territory where, you know, the system that we've known for the last 80 years globally is unraveling. That creates both near-term uncertainty and creates concerns about medium-term growth. So I think the challenge before this budget is twofold. That on the one hand, when you've got all this global uncertainty in financial markets, the typical tendency of emerging markets is hunker down, right? Create buffers, create fiscal buffers, create monetary buffers, create external buffers. But, you know, that sometimes comes at the cost of growth. Whereas the other impulse is going to be in such a, you know, environment where, you know, economic heft determines geopolitical heft. The tendency and the temptation will be to be adventurous and to be expansive. And so that for me is the central challenge between this budget. How do you simultaneously be conservative and be adventurous? My sense is that the way this will happen is the fiscal math will be conservative. I think, as was just said, you know, a lot of the fiscal action happened last year. Direct tax cuts, GST cuts, with nominal GDP growth expected to be in single digits. There isn't much fiscal space, so I'd expect there'll be fiscal conservatism, which has been the hallmark of this government, to under-promise and over-deliver. I think we'll meet this year's target of 4.4, and there'll be more consolidation next year. So the numbers, I think, will be quite conservative. What everyone is hoping for is, outside the fiscal math, can we get announcements that excite not, you know, investment and hopefully attract back capital flows? But it's that mix of conservatism and adventurism, I think, that will be key in today's budget.
Okay. Hi, Sajid and Samiran. Thank you very much for sparing time for us. Samiran, you know, you've read the survey with a fine-tooth comb. Can you help us with what sectors or ideas may get prominence?
So thanks, Lata. I guess there are 2 broad questions in front of the budget today. One is about allocation of capital, both domestic and foreign. At this point of time, we have less of foreign capital into the country and more of domestic savings coming in. But within domestic savings, there is a preponderance towards equity rather than debt. How do we manage this through effective policy instruments in the short run is one of the challenges that I will be looking out for in the budget. And the second one, as Sajid was mentioning, that in an absolutely hostile global environment, we need to rethink about our broader growth strategies. The survey is indicating that we should push towards manufacturing, not only domestic side, but also manufacturing for exports. We have heard this before, but this time around, what kind of newer strategies the budget throws up to achieve that goal? I think that's also will be very important for me. So both the financial side of the economy through better allocation of capital, and the real side of the economy by pushing for manufacturing in a bigger way. I think these two would be top of my mind.
Okay, let me persist with that fiscal math, which Sajid took us through, Samiran. You know, we now have the new how the new CPI series might look. And it looks like the CPI is going to be about 20, 30 basis points. Sonal Verma is saying even 50 basis points higher. Plus, the real GDP is forecast by the survey at 6.8 to 7.2. So do you think that the budget would be well within its rights to work with a nominal GDP as high as 400 trillion? Would the bond markets be upset that the calculation is too aggressive if they did that?
I think about a 10% plus nominal GDP growth in the budget, 10 to 10.5, I think will be treated by market as quite reasonable. But on a slightly different note, I think the challenge in this whole new CPI series is that the more the FY26 numbers are higher in the new series, there's a chance that the FY27 numbers will be lower by an equivalent amount, because the base effect will work in the reverse direction then. So what we have written is that while we understand that 40 to 50 basis point is FY26 numbers possibly higher, but at the same time, everything else equal, there's a 25 to 30 basis point downside risk to our FY27 CPI just because of this reallocation of weights.
Okay, fair point. Sajid, what's your sense about any sectoral push? Any read-through from the survey?
A couple of things, Lata, just to finish the discussion on the fiscal math. I think it's important to appreciate that we first have to hit this year's deficit. I have no doubt we will. But just to let you know, gross tax growth, even though December was very strong, April to December is running at about 8.5%.
Lower. And
so you get an asking rate of above 20% in Jan, Feb, March to hit your budget target. There's a sense here that gross taxes could be as high as 0.4% of GDP lower than was budgeted. The good news is that there were always buffers built on the expenditure side, and you've got buffers on non-tax revenues because both PSU and RBI dividends have been very high this year. So my sense is you'll get a rebalancing in the RE number in terms of taxes and non-taxes. Lower gross taxes and lower net taxes, higher non-taxes. Similarly, in the expenditure side, don't be surprised if capex actually beats last year's target, but revenue expenditure is much lower. So the first point is just to understand how this year's math plans out. No, I think on going forward, the survey makes a very fervent, passionate argument that India has to prepare for a new world. And in a new world, that's what I began. Geopolitical heft comes from economic heft. Somebody once said very famously many years ago, the best foreign policy India can have is to grow at 10% for a decade, right? And so I think the survey lays out some of the guidelines. I agree with Shaumiran that exports have to be the centerpiece of any such strategy in a world of global value chains. And therefore, what I'm looking for is you've had a series of reforms the last 6 months. What will be very important to complement it with it is on the import side. The oldest adage in economics is an import tariff is the same as an export tax or as an equivalent import tax. So this will be a wonderful opportunity to clean up the whole customs duty regime, right? Simplify it, clean it up, rationalize the rates, correct duty structures. That seems to be a natural complement to the series of FTAs that we've signed. And I think the survey did talk about how protectionism upstream creates pressures downstream.
Yeah, just one quick point, Sajid. The RBI dividend number, it was 2.7 odd lakh crores last year, right? What could that be meaningfully higher? I mean, at the end of the day, gold, dollar are assets, right? Rupees a liability. Rupees depreciated. So could that be, could it be really chunky, bigger?
So I think this year the sense is, the dividend is going to be about 30,000 crores higher, but you're exactly right? The revaluation gains will be higher, next year if the rupee continues to depreciate. So that's one, source that has been reliable over the last few years, and that takes a little bit pressure off tax revenues next year. But again, I want the government to be conservative. I think nominal GDP of 10% would be par for the course. Anything above could be ambitious. We're in a world with lots of Chinese excess capacity. Yes, you get some technical readjustments from the CPI rebasement, but the fact is goods prices are going to be under pressure for the foreseeable future, given what's happening out of China.
Okay, all right, got that, Sajid. Samiran, let me get you into the discussion then. The rupee weakness is something that has spooked the street, the equity markets as well. Some believe that maybe it's getting stretched on the downside. What do you think?
And what do you expect?
So it's rupees of...
No, what do you expect from the budget? Yeah.
So rupees of function of balance of payment. So what I was mentioning initially was that one of the challenges for us today is that we are not getting as much of capital inflows that we used to get earlier.
Yes.
We are a lot focused on the FPI number, but the big swing factor has been the FDI number. So in a sense, if we can push for manufacturing in a more clearer way through deregulation and all, then there's a chance that the FDI numbers can also increase. If there is more tax certainty, that could be another factor driving that FDI. But somehow to push the FDI thing will, in my view, in the budget, the best support for the rupee currently. The current account is doing just fine. So it's all will boil down to how we manage the capital flow side. I'm not really very keen to look for more sources of FPI increase through different kind of tax concessions, etc. That's a very short-term approach to getting capital flows. The real big one is to get the FDI numbers much higher.
Fair point. Sajid, you have written an excellent edit on how the states also have to contribute if we have to come down in terms of debt to GDP. The center can move the needle only that much. The states have to move much more. It's possible, therefore, that all programs, like we saw in the MNREGS case, will come with more responsibilities for the state. How does it impact capex? Is there anything for the markets or for the economy from that kind of a move, which I very strongly expect, more conditions on the state?
Yes. Yeah, my worry, Lata, is that we've had the surge of cash transfers that's proliferated across states. It's now become very fashionable to do so. And as the economic survey also pointed out, these things come at a cost. And the cost has been twofold. One is you're seeing upward pressure on state deficits. We now have the RBI report on state finances. Last year was 3.3% of the deficit, which is not small. It's been widening in recent years. And there is a risk it's even higher this year. Remember, when there's a shortfall of gross taxes at the center of 0.4% of GDP, a lot of that is then shared by the states. So there'll be a shortfall of taxes for states as well, right? Number one. And number two, the other hit has been that we've just begun to see signs the last 6 months that all the spending on cash transfers affecting capital expenditure by the state. So what the center may propose, the states may dispose. So I think the real story in the coming months is going to be state finances, not central finances. And I'll say one quick thing also. Small changes in nominal GDP growth have huge implications for the asking rate for fiscal in the next 5 years. If the nominal GDP growth is 10%, the center can take its deficit from 4.4 to 3.6, most of which will happen by interest to GDP going down and meet its 50% of GDP debt target. If nominal GDP goes to 9%, or is running at 9% for the next 5 years, which is not implausible, then the center's deficit has to go all the way from 4.4 to 3%. And in that environment, if states don't consolidate, debt on a combined basis doesn't move at all.
Sajid and Samiran, thank you very much for joining us. It's a big day. It's one of those days where, I think the markets interface with macros directly, and the big numbers make all the difference. We'll speak to you as soon as the budget speech, of course, ends for your first reactions out there. Let me toss it back to Shireen in Delhi. She's got another star-studded panel. Shireen, over to you.
Sajid, I've got a power-packed lineup here at the CII, and everyone's calling you Professor Chinoy. So thank you, Sajid, for doing a stellar job of putting together the micros and the macros for us here on CNBC TV 18. You're getting a tip of the hat here from the folks at CII who've been listening to your conversation. But let me bring it back here to my conversation with the leaders of industry. Rajiv Memani, 30 minutes to now go. The big ask is there going to be specific measures or at least broad direction as it comes to FPI and FDI? We were chatting about this. you think the likelihood of any tax-related changes is low, but broadly, direction-wise, announcement-wise, what would you expect?
See, I mean, if you look at the overall scenario, I think the macroeconomic fundamentals are very strong. The GDP growth numbers are very strong, but we have a very uncertain geopolitical, geoeconomic environment. And we also have tax revenues that will be lower than what the budgeted estimates are. So if you look at that, my view is, and it appears to me that there is going to be a lot of focus on manufacturing and how do you make manufacturing more competitive in India. So if there are steps around that, that makes manufacturing very clear, identify products, how India can be part of global value chains on some of those products, clear incentives, PLI schemes that are there for some of those products.
More PLI schemes, you think?
Yeah, incentive schemes, PLI schemes, whatever, depending on the product. I'm not saying for everything, but depending on what the product is. I think once you have clarity on that, then I think FDI will flow. Yes, I think from an FDI standpoint, if you were to look at concern, Shireen, the biggest concern is around, tax, legal uncertainty that happens in India. I think if we can clearly lay out, whether it's advanced ruling, advanced pricing, settle negotiations, if there have been some judgments that have come up in the past, that there will not be any retrospective changes in that. If we can have those broad level assurances that are there in the budget, that India will be looking at that, then given the GDP growth, given the clear focus on manufacturing that we have, and a clear outlined path, I think FDI will pick up.
You think she will specifically address the Supreme Court order?
I don't think in the budget she will address this. I mean, that's my guess.
In her speech, maybe?
Yeah, I can't speculate on that, but I think at some stage, whether in the budget or outside of that, I think if they can specify, I think that'll be helpful.
Okay, so, lots for the manufacturing sector is what the industry is hoping for, linked to specific products, etc. And of course, that mega park that everyone seems to be betting on to further boost the EMS sector, the electronic manufacturing sector. I think that's one of the big ideas. Again, there is plenty of consensus that we may see that go through. So, Chitra, many thanks for joining us. What are you working with? What are your key expectations now?
I would want to focus again, taking off from Rajiv, manufacturing needs to be the push that we need to get forward. Clusters, tech parks to come around across the country, and also sectoral clusters is what I think we need to do so that we can, the ease of bringing the value chains closer to us is very important. There's no point in, getting things from all across the country. So this focus on sectoral clusters will be very important. The push on manufacturing is very much also there for us in the life sciences industry, and also R&D, the innovation quotient that we have to keep upping as we go forward. The public-private partnerships that are required, because the government does a fabulous job in facilitating, projects and collaborations and partnerships between academia, research institutes.
Yeah, so perhaps more of that.
Yes, private players like us, and
And specifically, as far as some schemes on R&D is what industry is expecting, whether or not we see a return of that, because as you heard our previous guest, the government has had this apprehension that, we give out incentives and we don't get back enough. So whether we're actually going to see a return of R&D linked incentives is the question. Mr. Bucketman is here with us. The last year, it turned out to be a leaky bucket, because what you were hoping for and what you had asked, the actual number delivered was much lower. So you've tempered your expectations this time on capex.
No, I haven't tempered at all. I'm just as aggressive on the ask for infrastructure spend as I always was, because the maths, it's not me saying this should be the budget allocation. It's the maths that suggests itself. Shireen, there is reasonable unanimity across political dispensations that infrastructure spend in this country should be around 7% of GDP. Now, it is also well known as a thumb rule that half of it comes from the union budget. So 3.5 should be on GDP is the infra allocation that keeps pump priming the economy. And therefore, with the expectation of a 400 lakh crore nominal GDP in FY27, 3.5% of 400 is 14 lakh crores. So the maths suggests itself. So I'm only asking for an allocation of 14 lakh crores.
You're only asking for what the math is suggesting at this point.
What the maths is saying. So I'm asking for the same thing. But last year, the allocation was virtually flat. And if we were to see 14 over last year, it would be a 27% increase in allocation. And with the current uncertain environment that the world is facing, we still need public expenditure pump priming GDP
Sunil
growth.
Mathur, you're smiling. A 27% increase in the capex budget. Is that what industry is? I mean, if that happens, that would be a bazooka, right?
Absolutely right. And I think if we do get to the 14 lakh crore amount, that would be a bazooka, because there is no doubt the country needs infrastructure as a foundation for private sector investment as well. And we need to speeden up on railways. We need to speeden up on airports, ports, reduce logistic costs. All of this is absolutely critical. So,
but what's the reality on the ground? You know, both in terms of tenders being awarded, tenders being executed on. What are we seeing today on the ground, both from the private sector, but more importantly from the government, because that's what is doing the heavy lifting still?
So I think, to be honest, a lot, the 11 lakh crores, close to that has probably happened. But it still feels slower than what it should be. The pace at which tenders are actually coming out in the last 6 months has actually slowed down. There's a lot in the pipeline, a lot that will happen ostensibly over the next year, but actual tenders with firm dates hitting the ground. And this is
the government and the private sector both?
So this is government. On the private sector, we do see a pickup in the last 3 or 4 months. It started coming. I think it'll take time to pick up over a period of time. I think the next 3 to 6 months will be critical to see whether this is a sustained growth or just a blip on the private sector side. But we are beginning to see bit by bit growth in the private sector as well.
27% higher capex. Where is she going to fund that from?
I mean, I'm sorry to...
Bust his bubble.
Not bust his bubble. I just think that to get 3 lakh crores incremental money, you know, when you have total revenue of what, 48 lakh crores, to get 8% incremental is going to be a challenge, given the tax buoyancy is not there.
Yeah.
And they've given this thing. I think if they can find a way, I mean, my realistic expectation is somewhere between 12 to 13 lakh crores in that vicinity. But if we can find ways to also incentivize private capex, because balance sheets are under leveraged, banks have a lot of money, there's also a lot of cash circulating. So if we can push...
what can they do?
No, I think the government has been doing a lot in terms of reforms. I think that's reflecting in the growth in capex that has happened. And private capex is happening. It's not that private capex is not happening. But I think it can be, hopefully, you know, if we can move on projects faster, if there's greater focus on ease of doing business, clearances come faster. As Suchitra said, you know, availability of land, power cost becomes more competitive. We have a clear glide path on 50 to 60 products that India needs to go after, or 70, 80, or 100, whatever that number is. I think, you know, I think investments will come in. I think we need to get the projects ready, whether it's PPP, whether it's otherwise, and move fast on the approval process.
Yeah, and
I think that is more realistic.
So, Vinayak Chatterjee, there's no consensus even on this panel to go with your number.
I'm not asking for consensus. I'm only saying there is a macroeconomic maths, and the maths suggests this figure. That's all I'm saying. I'm not even asking for consensus.
But I think, I mean, just to go on to that, Shireen, it's not only about the funding, and both Rajiv and Vinayak have their perspectives. It's also on the implementability, right? So you can put whatever you want to put, the number you want. It's actually got to be implemented. And the government has got a very good track record of now implementing 80 to 85% of the number that they put out there. So I think it's also important to take that factor in to see how much actually can get in.
You know, it's interesting in terms, there's something I wish to point out as a very interesting change in the conversation that I'm noticing. You know, traditionally, the budget allocations on infra would be Jal Jeevan Mission, Pradhan Mantri Gram Sadak Yojana, Awas Yojana, NHI, those nice public. See what the language today is. Even pre-budget, we are talking high-speed rail, coal gasification, battery storage, nuclear, semiconductor, hydrogen. So the nature of the incentives and the allocations
and the sectors,
we have moved from, I think it's an important shift in the budget lexicon, that we are shifting from traditional public sector driven Aam Aadmi type of stuff to new age infrastructure technologies being incentivized. I wanted to point that out.
No, that's an important shift that you talk about, and I suspect that we are going to see that being reflected in the budget. But Rajiv, you know, of that basket of sectors or items that you spoke of, the top 5 that you believe will get some mention in the budget.
You know, I would say electronics manufacturing for sure. That's been
manufacturing
for sure. I think semiconductors definitely. I think nuclear is another area. It'll be really good if coal to gas comes in. I think we have to find a way that we unlock our mining resources faster, because that gives a lot of focus on growth. I mean, I've not thought about what the top 5 will be, but these comes immediately.
Well, you've given us 4 already.
And some labor-intensive sectors, because I think it's very important that we focus on those as well. So, because employment generation is a key objective. And AI and data centers will something that'll always be there.
That will find a mention. Well, Rajiv Memani, Suchitra, Vinayak, and Sunil, many thanks for joining us here at the CNBC TV 18 CII Budget Headquarters. We'll have you back to not speculate, but to actually analyze the fine print and whether or not Vinayak gets what he wants and he believes the macro. He's kind of like already like giving up on it. But thanks very much for joining us. That's the mood here at the Confederation of Indian Industry.
Ask for the stars and land in the moon.
Land on the moon. Ask for the stars, land on the moon. That's the mood here in industry. But the Nifty Bank almost 200 points higher. Prashant, back to you.
Well, you know, the market mood is the mood amongst corporates in Delhi is keep expectations high here. Okay, market expectation is low. So the bar for being surprised positively, perhaps, but that's market's view, right? We've seen a big turn, Shireen. We were down in 60, we're up 60 on the Nifty, 25,384. But of course, all of this will, diffuse as we go into the budget speech at 11, kind of flattens out, and then the market will hear the speech, and depending on, of course, what comes through, the reaction starts to, sometimes when it's actually late into the speech, even after the speech, the real reaction starts to kick in. The metal index is still down 2. It's off the lows by a little bit. The Sensex is up a third. The Nifty is up about 0.25%. So those are the 3 big kind of indices we're going to talk about. We'll take a quick commercial break here. On the other side, we have Sandeep Bhatia, MD and Head of Equity India, Macquarie Capital joining in. Mahesh Nandurkar of Jefferies is going to be with us. And we also have Ashok Vadra, Group CEO, Ambit joining in. Dinesh Kanabar will be with us as well. Anant Narayan, a former SEBI official, is also going to be with us. He's, of course, written a powerful piece, which many have cited as a reason why perhaps equity and bond market taxation perhaps needs to be given a relook. So all of that coming up in just a bit. Go.
Luxury, heritage, and valor are timeless. Let them grow on you. Royal Ranthambore, India's finest yet.
This is Network 18, and you're watching CNBC TV 18.
Okay, welcome back. There's 15 minutes to go for the finance minister to start reading out the budget speech. And it's a power-packed panel we have with us here. And so this is last-minute kind of wishes, expectations, high-conviction ideas, whatever you want to call it, right? Sandeep Bhatia is MD and Head of India Equity at Macquarie Capital. Mahesh Nandurkar of Jefferies is with us. We have Anand Narayan who's with us. We have Ashok Badwa, Dinesh Kanabar. So, gentlemen, all of you, good morning. Great to have you guys on a Sunday morning, and it's an important one. Anand, before I took that break, I was saying that you wrote that piece, and I think it's been widely circulated as perhaps, and many people are basing their arguments on the back of what you've said. Well, this should be done. So, just with 15 minutes to go for the speech, just quickly in a minute, tell us 2-3 points what you think should happen. I'm not saying will happen, but what you think can happen.
So very quickly, Prashant, I think there are two areas where our taxation, particularly on long-term capital gains tax, needs to be relooked at. One is with respect to foreign investors, the other with respect to our domestic investors. Globally, the major markets follow the OECD model of applying capital gains tax at the residence of the investor, not at the source where the investment is made. India is an aberration in that we have withholding tax on long-term capital gains on a residence-based model in India. Now, while we have tax treaties and such like, it is still a problem for global investors, A, because it's an aberration, B, because many investors are actually exempt from paying capital gains tax in their home country, and for them, any withholding tax in India is a problem. Third, even if you are liable to pay capital gains tax in your residence, the withholding that we do in India sometimes does not conform with the tax credit regime that they have in their country. And finally, we compute our capital gains in rupees. At a time of rupee depreciation, when the investor might actually be having a loss in dollar or in hard currency terms, this becomes a problem. So all of this, therefore, tells you that we should probably look to moving towards a residence-based taxation model as well, and do away with the need for withholding tax for foreign investors in India. This is not exempting them and penalizing domestic investors. This is merely moving to the global model of ensuring that it's a residence-based taxation. Similarly, for the domestic investors, Prashant, I would argue that we've seen a lot of new investors coming into capital markets, which is great. But if you see the skew of investments, 10 years ago, mutual funds had twice as much assets in fixed income as they had in equities. Today, it's the reverse. You have twice as much in equity than you have in fixed income. Now, if this was entirely because of risk appetite of investors, that's fine. But I would argue that taxation has played a role in this. 5 years ago, you would recall, fixed maturity plans used to be a thing. And today, they don't exist as a product. So I would argue that taxation is actually skewing investor asset allocation choices away from their risk appetite and possibly into riskier assets. Now, if you start taxing fixed income, particularly corporate bond and hybrid investments, at the marginal tax rate of your investors, that actually becomes more like a wealth tax because you're not doing indexation. Then for after paying a marginal tax rate for fixed income returns to beat inflation becomes that much more difficult. And I would argue if you're investing in corporate bonds or in InvITs or REITs, you're taking considerable risk and aiding good quality capital formation as well. So over time, I would love to see our taxation regime move towards an asset agnostic, uniformly low long-term capital gains tax regime. Now, all of this, if this creates problems in terms of tax collections, maybe we could relook at STT. After all, STT was supposed to be in lieu of long-term capital gains tax. But these two things, A, moving to a residence-based taxation for foreign investors, making it easier for them to invest in India, and B, moving to an asset-agnostic, low uniform LTCG regime for Indian investors in India, I think would be great for capital formation and investments in India.
3 cheers to you, Anand, for that. By the way, your analysis on CNBC TV 18 has also attracted, I think, record eyeballs on this issue. Quickly, Sandeep, how do you think the market will react? I mean, the ultimate that Anand is saying of, equality of taxation for equity and debt, it ain't happening anytime soon. But even if there is one step towards it, like, continuing with reintroducing indexation, I don't know what they would do. But if there is a step towards it, markets will be happy?
Definitely. I think markets will be happy. But I am actually going to go into this budget very circumspect. I think there are issues on long-term capital gains tax. The thought process has been to raise the long-term capital gains tax level. So Anant is actually saying the right things, but whether the right things get done or whether we move towards higher taxation even on capital gains tax, because there's enough data which can prove that the capital gains tax is paid by the wealthy in India, and therefore the wealthy can be taxed more. So I don't know whether this will mean lower taxes on capital gains tax or actually just moving towards higher taxation, which is currently the bane for debt taxation.
I don't know if
so. That's one thing which I'm circumspect on. And the other thing is, I think also gold and silver ETFs could see some more restrictions because these are unproductive investments always. The whole idea behind sovereign bonds was that these should be financialized and used, but then of course the gold prices went up, and therefore then it became
so Sandeep, so import duties go up in gold, silver. I mean, that's if you look at where.
No, that would be very negative. I think it will just help smuggling. I think maybe they will take away the long-term capital gains tax benefits there. Who knows?
Yeah.
I think we should go with very circumspect because there's definitely pressure to raise revenue. We just saw the GST numbers come in, flash today at 6% for the month of January. So let's hope for the best, but let's not keep hoping too much.
No, I agree. Actually, like you, the market is also going circumspect. We haven't seen any all guns blazing entry into the budget. But let us go more threadbare as to what Anand said, because we have two tax experts over here.
Yeah.
First to you, Ashok, taking from Anand's point of view, what would be your feasible, ideal tax change?
What Anand says makes sense from a global OECD model perspective. But given our current tax position and the fact that we've only had marginal growth this year, largely because there were tax cuts last year and then GST cuts this year, I don't think we have the headroom to be able to do that. Going forward, perhaps a roadmap that can identify it as an opportunity, sure. But I think the two small steps that we can surely take is why have AIF on a different tax regime to mutual funds? I mean, if you think about it, the wealthy who you want them to come more and more to the market, because at this point of time, our market needs more support. With FPI selling out the way they are selling out, I would like to believe that domestic...
what
Sandeep said, right? He almost made it like it's ideological kind of thing. You can tax the wealthy. Products like AIFs, I mean, at the end of the day, the category of investors is different. I mean, it's a more HNI and wealthy.
It's only creating an arbitrage.
No, I'm not saying right or wrong.
I'm saying between mutual fund and AIF, you're creating an arbitrage, which is absolutely unnecessary. It's one category versus the other category.
Yeah.
All that I'm saying is that the first step could be to say, okay, we'll harmonize the two and make taxation between AIFs and AIFs were really created as a vehicle to attract more investments into the market. And we've seen the benefit. I mean, you've seen how much money AIFs have been able to collect. So I would say the first step would be to try and see whether you can rationalize the two together. And on the other side of FDIs and not taxing, let's at least include insurance companies in investing in infrastructure projects. Today, you have sovereign funds that are exempted. You have pension funds that are exempted, but insurance companies, including domestic insurance companies. I mean, there's a large pool of capital waiting to invest in long-dated assets. And infrastructure needs that capital. We are calling upon private sector to invest. And here is a large pool of capital sitting with domestic insurance companies that can go in there. So why not include at least insurance companies in investing in data centers and investing in all of the infrastructure projects? I think at least it's a step forward towards attracting a larger pool of capital. And again, a small step forward to what Anand said.
A fresh idea.
Yeah. And then, of course, if you can exempt sovereign funds and insurance companies from any investment, you bring in a new category. Say anybody who's investing for more than 5 years, investments more than 5 years shall be exempted from any capital gains tax in India. I think that would be a fantastic idea.
You're not kind of sort of flip-flopping?
No, you're keeping your current regime.
Yeah.
You're just bringing a new category to say any investment made for more than 5 years by any of these investments, doesn't matter whether it's in infrastructure or in any other category of investment, exempted from India.
Mr.
Kanabar, similar question.
Just a very quick thing. Unfortunately, while Anand makes a very nice point, which is very attractive, actually the OECD is going in a different direction. They've actually come back to accept that India's approach of taxing on a source base is more appropriate and more countries are adopting it. So while he's advocating that we need to move away from...
I looked at France, in UK, Germany, all of them have equal debt and equity taxation?
No, that's separate.
No, she's talking,
okay,
about
source versus residence.
Okay.
So OECD has actually in the last 2-3 years done a somersault to come back and say source-based taxation is actually an acceptable thing. I think the point which Anand makes, which are very important and right, is how do you tax notional income when you compute gains on the base of rupees? You can't be doing that. You have to give into account the currency of investment that is given. And I think the parity on debt and equity has merit in its own way. And I think I'm aware that it is being actively considered. Whether it will happen in this budget or not, I don't know. But lots of points to do out there. Yes.
Just one quick point. Gold and silver is Sandeep was talking about ETFs. And I mean, if you look at the way how prices were trading, markets are betting on. I mean, the spreads are locked in. So much of arb trade, etc., has happened.
So as you know, that wherever the government has found that there's a degree of...
I think there is one consensus expectation that import duty is coming. That is, I can tell you. I mean, at least long term and all, we don't know. But this gold, silver import duty, markets are betting on. Your thoughts?
Wherever there is a betting, actually the withholding taxes goes to highest rate, 30%. And it is quite possible that at least that will happen. Whether import will come or not is, as Sandeep rightly mentioned, an issue of smuggling and whatever else unofficial channels coming. But to say that wherever there is a degree of betting happening, we will tax it. So the race horses, same thing. It's 30% tax. Same thing could happen to some.
So speculative kind of activity without okay. So that's another way to look at this. Mr. K.K. Mistry is also with us. He's, of course, veteran banker, needs no introduction. Mr. Mistry, good morning, sir. Thank you very much for joining us. We don't have to wait very long, 7 minutes to the budget speech beginning. So I guess top 2 or 3 sort of high conviction ideas, bets that you would have, hopes that you would have from the finance minister today.
All right. So I think first focus should be growth in the economy, creation of jobs. We still haven't taken into account the fact that in the next 3-4 years, we'll have a lot of artificial intelligence in India, and that could result in some challenge on jobs. So job creation, further pick up in consumption in some way or the other, because we continue to remain a consumption-driven economy. Manufacturing is critical for us. We are way behind on manufacturing compared to where we need to be. So something like an investment allowance that used to be there, or an accelerated depreciation, or some changes in the PLI scheme is something which could happen. And then capital markets. I was hearing your debate. I fully agree. I think the taxation for debt and equity should really be the same. There should be no difference between equity and debt. And also, I think Ashok said that any capital gains beyond 5 years should be fully taxed.
Mr. Mistry, if you do that, won't banks have a big problem? Or are you saying that for both?
They'll be advantaged.
No, banks will.
You need to understand that when money moves from one account to another account, or if I buy a share or you sell a share, the money moves from my account to your account.
No, Mr. Mistry, for the banker, it is not equally advantageous. You have to keep a higher HQLA in fast-moving money like mutual funds. And if it's a term deposit, you have to keep almost no HQLA. So they get to spend more, get to loan more when they get term deposits. So they will complain if it is if interest income is not given a little bit of relief. But anyway, now everyone is asking. It's a big ask.
it's a very, very big one in that sense. But is that something you would wish may happen? But you're not. I mean, it's an idea, Mr. Mistry, right? That's what you're saying.
It's an idea. It's an idea. What I would like to see, which I'm sure is not going to happen, is some change in the individual tax rate. You bring down the maximum marginal tax rate in India. It's not going to happen in this budget, we know, but at some point in future, because that will spur investment, will spur more confidence in the economy, and more money will come back in long-term investments, which is what we need in the country.
Okay. Well, run out of time. Thank you very much, Mr. Mistry, Anant, Sandeep, Mahesh, and Ashok, and Mr. Dinesh Kanabar. Let me toss to Shireen. She's also waiting with some guests.
Yeah, Lata, very quickly, we've got about 3 minutes to go for the finance minister's speech, but ideas there coming from the tax experts in Mumbai. Mr. Bajaj, at least the harmonization as far as debt and equity is concerned, do you believe that they will go that far, at least in this budget, or signal the intent to do so in another budget?
I doubt.
You doubt. Even that you don't believe.
So basically on the debt side, I don't know what was being mentioned here. But on the debt side, what they have tried to do is they have tried to limit the arbitrages, because the FDs were always taxed at the marginal rate of tax for each individual. But there was this market debentures.
Right.
So they had a special tax for them. So all that has been corrected in the same tax structure. And it was done only about a year, 2 years ago. Then,
so you don't believe that they'll unsettle that, at least at this point in
and
time?
then again, this claim happens that the government is not stable in its policies.
In its policy. Fair point. But to the other point, Ashok Wadhwa made a new scheme that if you're going to be investing in India for a period of 5 years or more, no capital gains tax.
I doubt.
You doubt that also?
I doubt.
Why do you believe that may not fly?
No, what I'm saying is I don't know whether this idea ever came to the government of India department.
It didn't come for you at your table.
It never came to my table. And in any case, you shouldn't be creating so many levels of taxation. If you do this, then this is it. This is what the problem with the 1961 Income Tax Act was, that there was a section which had about 50 or 60 provisions.
Right.
You can't understand what it says.
Right.
So you should.
So Mr. Jory, Prashant is saying the market's consensus is a hike as far as gold and silver import duty is concerned, but you don't believe that that's likely to happen.
I said if it happens, it will be modest.
If it happens, it will be modest.
It'll be modest.
Okay. And part B, the one or two things that you believe we're likely to see.
Ease of doing business, more of that, I thought. And there's a lot of buzz around an amnesty scheme for customs.
Yeah.
So it may well be in the realm of consideration. So
and I've been hearing that as well, that an amnesty scheme specifically for customs, we've had it on the direct taxes side, but for customs, an amnesty scheme will be a new one if it does come through. And that's the former CBIC chief saying he believes the time may be right for that. Sir, we just had Vinay Chatterjee saying 14 lakh crores capex budget, a 27% increase. Would that be even possible?
We don't have capacity for 14 lakh crores. In fact, last 2-3 years, the capex budget was so high that some of the departments are unable to fully spend it. So expecting a 27% hike may not be practical. It will be modest in terms of 5 to 10%, because the infra pipeline, which was set up a few years ago, is almost complete, and many of the practical works have already been taken up. I don't think 14 crores can be a practical figure.
So 5 to 6% is the expectation as far as the capex budget is concerned. Don't expect 15, 20. Single digit, low single digit is the expectation that the former budget makers are going with. I think we have about 15 seconds to go for the finance minister to rise in parliament. And of course, it is likely to be, we'll see that initial burst of the opposition. Whether or not that's going to carry forward is the question, but that's the action coming in from Parliament as we wait by. But Mr. Bajaj, if they were to announce one big idea, do you think it's likely to tie in with this whole AI infrastructure, electronic manufacturing, given the Apple success story and the manufacturing export competitiveness boost?
So I would agree with that. In the last budget also, they've announced this schemes for providing money for science and technology.
The RDIF, yeah.
Yeah, RDIF. So I would say that there would definitely be some mention in the FM speech on that.
Yes, and the finance minister rising in parliament. You see the speaker there setting the house in order. Finance Minister Nirmala Sitharaman will rise to present her 9th consecutive budget, creating history. Not just for herself, but history for finance ministers in independent India. My assumption is that this is going to be a longish budget. So let's listen in.
I rise to lay on the table a copy each of the following papers, Hindi and English versions, under Article 281 of the Constitution. Report for 2026 to 2031, Volume 1, Main Report of the 16th Finance Commission. 2, Report for 2026-2031, Volume 2, Annexures of the 16th Finance Commission. Number 3, Explanatory Memorandum as to the action taken on the recommendations contained in the above report.
Item number 2, माननीय वित्त मंत्री निर्मला सीतारमण जी।
Honorable Speaker, sir, on the sacred occasion of Magh Purnima and the birth anniversary of Guru Ravidas, I present the budget for the year 2026-2027. Since we assumed office 12 years ago, India's economic trajectory has been marked by stability, fiscal discipline, sustained growth, and moderate inflation. This is the result of conscious choices we have made, even in times heightened uncertainty and disruption. Our government, led by Honorable Prime Minister Modi, has decisively and consistently chosen action over ambivalence, reform over rhetoric, and people over populism. We have pursued far-reaching structural reforms, fiscal prudence and monetary stability, whilst maintaining a strong thrust on public investment. Keeping Atmanirbharta as a lodestar, we have built domestic manufacturing capacity, energy security, and reduced critical import dependencies. Simultaneously, we have ensured that citizens benefit from every action of the government, undertaking reforms to support employment generation, agricultural productivity, household purchasing power, and universal services to people. These measures have delivered a high growth rate of around 7% and helped us make substantial strides in poverty reduction and improvement in the lives of our people. Today, we face an external environment in which trade and multilateralism are imperiled and access to resources and supply chains are disrupted. New technologies are transforming production systems while sharply increasing demands on water, energy, and critical minerals. India will continue to take confident steps towards Vikasit Bharat, balancing ambition with inclusion. As a growing economy with expanding trade and capital needs, India must also remain deeply integrated with global markets, exporting more and attracting stable long-term investment. As I begin part A, I want to express my gratitude to the people for standing firmly with us as we forge our way together towards becoming one of the largest economies of the world. Our aim is to transform aspiration into achievement and potential into performance as we ensure that the dividends of growth reach every farmer, the scheduled caste, the scheduled tribes, the nomads, the youth, the poor, and the women. In Vikasit Bharat Young Leaders Dialogue 2026, several innovative ideas were shared with our Prime Minister, which have inspired many of the proposals, making this a unique Yuva Shakti-driven budget. Our government's sankalp is to focus on our poor, underprivileged, and the disadvantaged. To deliver on this sankalp, and given that this is the first budget prepared in Kartavya Bhavan, we are inspired by three Kartavya. Our first Kartavya is to accelerate and sustain economic growth by enhancing productivity and competitiveness and building resilience to volatile global dynamics. Our second Kartavya is to fulfill aspirations of our people and build their capacity, making them strong partners in India's path to prosperity. Our third Kartavya, aligned with our vision of Sabka Saath, Sabka Vikas, is to ensure that every family, community, region, and sector has access to resources, amenities, and opportunities for meaningful participation. This threefold approach requires a supportive ecosystem. The first requirement is to sustain the momentum of structural reforms, continuous, adaptive, and forward-looking. Second, a robust and resilient financial sector is central to mobilizing savings, allocating capital efficiently, and managing risks. Third, cutting-edge technologies, including AI applications, can serve us as force multipliers for better governance. Reform Express. Our government has undertaken comprehensive reforms towards creating employment, boosting productivity, and accelerating growth. After the Prime Minister's announcement on Independence Day in 2025, over 350 reforms have been rolled out. This includes GST simplification, notification of labor codes, and rationalization of mandatory quality control orders. High-level committees have been formed, and in parallel, the central government is working with the state governments on deregulation and reducing compliance requirements. The Reform Express is well on its way and will maintain its momentum to help us fulfill our kartavya. I now move to specific proposals. Under our first kartavya, to accelerate and sustain economic growth, I propose interventions in 6 areas. 1. Scaling up manufacturing in 7 strategic and frontier sectors. 2. Rejuvenating legacy industrial sectors. 3. Creating champion MSMEs. 4. Delivering a powerful push for infrastructure. 5. Ensuring long-term security and stability. And 6. Developing city economic regions. Scaling up of manufacturing in 7 strategic and frontier sectors. Biopharma Shakti, meaning biopharma strategy for health advancement through knowledge, technology, and innovation. India's disease burden is observed to be shifting towards non-communicable diseases like diabetes, cancer, and autoimmune disorders. Biologic medicines are key to longevity and quality of life at affordable costs. To develop India as a global biopharma manufacturing hub, I propose the Biopharma Shakti with an outlay of 10,000 crores over the next 5 years. This will build the ecosystem for domestic production of biologics and biosimilars. The strategy will include a biopharma focused network with 3 new national institutes of pharmaceutical education and research, popularly known as NIPERS, and upgrading 7 existing ones. It will also create a network of 1,000 accredited India clinical trials sites. We propose to strengthen the Central Drug Standard Control Organization to meet global standards and approve timeframes through approval timeframes through a dedicated scientific review cadre and specialists. India's Semiconductor Mission 1.0 expanded India's semiconductor sector capabilities. Building on this, we will launch ISM 2.0 to produce equipment and materials, design full-stack Indian IP, and fortify supply chains. We will also focus on industry-led research and training centers to develop technology and skilled workforce. The Electronics Components Manufacturing Scheme, launched in April 2025, with an outlay of 22,919 crores, already has investment commitments at double the targets. We propose to increase the outlay to 40,000 crores to capitalize on this momentum. A scheme for rare earth permanent magnets was launched in 2025 November. We now propose to support the mineral-rich states of Odisha, Kerala, Andhra Pradesh, and Tamil Nadu to establish dedicated rare earth corridors to promote mining, processing, research, and manufacturing. To enhance domestic chemical production and reduction import dependency and reduce import dependency, we will launch a scheme to support states in establishing 3 dedicated chemical parks through challenge route on a cluster-based plug-and-play model. Strong capital goods. Strong capital goods capability is a determinant of productivity and quality across different sectors. Towards building this capacity, I propose the following. High-tech tool rooms will be established by central public sector enterprises at 2 locations as digitally enabled automated service bureaus that locally design, test, and manufacture high-precision components at scale and at lower cost. 2, a scheme for enhancement of construction and infrastructure equipments will be introduced to strengthen domestic manufacturing of high value and technologically advanced CIE. This can range from lifts in a multi-storied apartment or firefighting equipment in multiplexes, large or small, and to tunnel boring equipments for building metros and high-altitude roads. I also propose a scheme for container manufacturing to create a globally competitive container manufacturing ecosystem with a budgetary allocation of 10,000 crores over a 5-year period. For the labor-intensive textile sector, I propose an integrated program with 5 subparts. 1, the National Fiber Scheme for self-reliance in natural fibers, such as silk, wool, and jute, man-made fibers, and new age fibers. Textile expansion and employment scheme to modernize traditional clusters with capital support for machinery, technology upgradation, and common testing and certification centers. 3, the National Handloom and Handicraft Program to integrate and strengthen existing schemes and ensure targeted support for weavers and artisans. Tex Eco Initiative to promote globally competitive and sustainable textiles and apparels. Samarth 2.0 to modernize the upgrade the textile skilling ecosystem through collaboration with industry and academic institutions. Further, I propose to set up a mega textile parks in challenge mode. They can also focus on bringing value addition to technical textiles. I propose to launch the Mahatma Gandhi Gram Swaraj initiative to strengthen khadi, handloom, and handicrafts. This will help in global market linkage and branding. It will streamline and support training, skilling, quality of process, and production. This will benefit our weavers, village industries, one district, one product, ODOP initiative, and also our rural youth. India has the potential to emerge as a global hub for high quality, affordable sports goods. I propose a dedicated initiative for sports goods that will promote manufacturing, research, and innovation in equipment design, as well as material sciences. Rejuvenation of legacy industrial clusters. I propose to introduce a scheme to revive 200 legacy industrial clusters to improve their cost competitiveness and efficiency through infrastructure and technology upgradation. Creating champion SMEs and supporting micro enterprises. Recognizing MSMEs as a vital engine of growth, I propose a three-pronged approach to help them grow as champions. Equity support. I propose to introduce a dedicated 10,000 crores SME growth fund to create future champions, incentivizing enterprises based on select criteria. I also propose to top up the Self-Reliant India Fund set up in 2021 with 2,000 crores to continue support to micro enterprises and maintain their access to risk capital. Liquidity support. With TREDS, more than 7 lakh crore has been made available to MSMEs. To leverage its full potential, I propose 4 measures. 1, mandate TREDS as the transaction settlement platform for all purchases from MSMEs by CPSEs, serving as a benchmark for other corporates. 2, introduce a credit guarantee support mechanism through CGT-MSE for invoice discounting on TREDS platform. 3, link GEM with TREDS for sharing information with financiers about government purchases from MSMEs, encouraging cheaper and quicker financing. 4, introduce TREDS receivables as asset-backed securities, helping develop a secondary market, enhancing liquidity and settlement of transactions. Professional support. Government will facilitate professional institutions such as the ICAI, ICSI, ICMAI to design short-term modular courses and practical tools to develop a cadre of corporate mitras, especially in Tier 2 and Tier 3 towns. These accredited para-professionals will help MSMEs meet compliance requirements at affordable costs. Infrastructure. During this past decade, our government has undertaken several initiatives for large-scale enhancement of public infrastructure, including through new financing instruments such as Infrastructure Investment Trust (InvITs) and Real Estate Investment Trust (REITs), and institutions like NIIF and NABFID. We shall continue to focus on developing infrastructure in cities with over 5 lakh population, that is Tier 2, Tier 3 cities, which have expanded to become growth centers. Public capital expenditure has increased manifold from 2 lakh crore in 2014-15 to an allocation of 11.2 lakh crore in BE 25-26. In this coming year, that is financial year 2026-27, I propose to increase it to 12.2 lakh crores to continue the momentum. To strengthen the confidence of private developers regarding risks during infrastructure development and construction phase, I propose to set up an infrastructure risk guarantee fund to provide prudentially calibrated partial credit guarantee to lenders. Over the years, REITs have emerged as a successful instrument for asset monetization. I propose to accelerate recycling of significant real estate assets of the CPSEs through the setting up of dedicated REITs. To promote environmentally sustainable movement of cargo, I propose to 1, establish new dedicated freight corridors connecting Dankuni in the east to Surat in the west. Operationalize 20 new national waterways over the next 5 years, starting with National Waterways 5 in Orissa to connect mineral-rich areas of Talcher and Angul and industrial centers like Kalinga Nagar to the ports of Paradip and Dhamra. Training institutes will be set up as regional centers of excellence for development of required manpower for these waterways. This will benefit youth in the entire stretch of the waterways to train and acquire skills. Further, a ship repair ecosystem catering to inland waterways will also be set up at Varanasi and Patna. And C, launch a coastal cargo promotion scheme for incentivizing a modal shift from rail to road to increase the share of inland waterways and coastal shipping from 6% to 12% by 2047. To enhance last mile and remote connectivity and promote tourism, I propose to give incentives to indigenize manufacturing of seaplanes. A seaplane VGF scheme will be also introduced to provide support for operations. Carbon capture, utilization and storage. Aligning with the roadmap launched in December 2025, the carbon capture, utilization and storage technologies at scale will achieve higher readiness and in end-use application across 5 industrial sectors, including power, steel, cement, refineries, and chemicals. An outlay of 20,000 crore is proposed over the next 5 years for this purpose. City economic regions. Cities are India's engines of growth, innovation, and opportunities. We shall now focus on Tier 2, Tier 3 cities, and even temple towns, which need modern infrastructure and basic amenities. This budget aims to further amplify the potential of cities to deliver the economic power of agglomerations by mapping city economic regions based on their specific growth drivers. An allocation of 5,000 crore per CER over 5 years is proposed for implementing their plans through a challenge mode with a reform-cum-result-based financing mechanism. In order to promote environmentally sustainable passenger systems, we will develop 7 high-speed rail corridors between cities as growth connectors, namely Mumbai to Pune, Pune to Hyderabad, Hyderabad to Bengaluru, Hyderabad to Chennai, Chennai to Bengaluru, Delhi to Varanasi, Varanasi to Siliguri. Financial sector. The Indian banking sector today is characterized by strong balance sheet, historic highs in profitability, improved asset quality, and coverage exceeding 98% of villages in the country. At this juncture, we are well placed to futuristically evaluate the measures needed to continue on the path of reform-led growth of this sector. I propose setting up a high-level committee on banking for Vikasit Bharat. High-level committee on banking for Vikasit Bharat to comprehensively review the sector and align it with India's next phase of growth, while safeguarding financial stability, inclusion, and consumer protection. The vision for NBFCs for Vikasit Bharat has been outlined with clear targets for credit disbursement and technology adoption in order to achieve scale and improve efficiency in the public sector NBFCs. As a first step, it is proposed to restructure the Power Finance Corporation and Rural Electrification Corporation. I propose a comprehensive review of the foreign exchange management non-debt instruments rules to create a more contemporary, user-friendly framework for foreign investments consistent with India's evolving economic priorities. Corporate bond market. I propose to introduce a market-making framework with suitable access to funds and derivatives on corporate bond indices. I also propose to introduce total return swaps on corporate bonds. Municipal bonds. To encourage the issuance of municipal bonds of higher value by larger cities, I propose an incentive of 100 crore rupees for a single bond issuance. 100 crore rupees for a single bond issuance of more than 1,000 crore. The current scheme under Amrit which incentivizes issuances up to 200 crores only, will also continue to support smaller and medium towns. That will also continue to support the smaller and medium towns. Ease of doing business. Individual persons resident outside India, PROI, will be permitted to invest in equity instruments of listed Indian companies through the portfolio investment scheme. It is also proposed to increase the investment limit for an individual PROI under the scheme from 5% to 10%, with an overall investment limit for all individual PROIs to 24% from the current 10%. Emerging technologies including AI. 21st century is technology-driven. Adoption of technology is for the benefit of all people. Farmers in the field, women in STEM, youth keen to upskill, and Divyangjan to access newer opportunities. The government has taken several steps to support new technologies through AI Mission, National Quantum Mission, Anusandhan National Research Fund, and Research and Development and Innovation Fund. Our second kartavya is to fulfill aspirations and build capacities. Close to 25 crore individuals have come out of multi-dimensional poverty through a decade of our government's sustained and reform-oriented efforts. Our government has therefore decided to place a renewed emphasis on the service sector to provide a pathway to fulfilling aspirations of a youthful India with the following measures. I propose to set up a high-powered education to employment and enterprises standing committee to recommend measures that focus on services sector as a core driver of Vikasit Bharat. This will make us a global leader in services with a 10% global share by 2047. The committee will prioritize areas to optimize the potential for growth, employment, and exports. They will also assess the impact of emerging technologies, including AI, on jobs and skill requirements and propose measures thereof. To create a range of skilled career pathways, a new range of skilled career pathways for our youth, I propose interventions in the following sectors. Health. Existing institutions for allied health professionals will be upgraded and new AHP institutions established in private and government sectors. This will cover 10 selected disciplines, including optometry, radiology, anesthesia, OT technology, applied psychology, and behavioral health, and add 1 lakh AHPs over the next 5 years. A strong care system covering geriatric and allied care services will be built. A variety of NSQF-aligned programs will be developed to train multi-skilled caregivers, combining core care and allied skills such as wellness, yoga, and operation of medical assistive devices. In the coming year, 1.5 lakh caregivers will be trained. Hubs for medical value tourism. To promote India as a hub for medical tourism services, I propose to launch a scheme to support states in establishing 5 regional medical hubs in partnership with the private sector. These hubs will serve as integrated healthcare complexes that combine medical, educational, and research facilities. They will have Ayush centers, medical value tourism facilitation centers, and infrastructure for diagnostics, post-care, and rehabilitation. These hubs will provide diverse opportunities, job opportunities for health professionals, including doctors and AHPs. Ancient Indian yoga, already respected in several parts of the world, was given a mass global recognition when Honorable Prime Minister took it to the UN. Post-COVID, Ayurveda gained a similar global acceptance and recognition. Exporting quality Ayurveda products helps farmers who grow the herbs and youth who process the products. To meet growing global demand, a few more steps are being taken. I propose to, 1, set up 3 new All India Institutes of Ayurveda. 2, upgrade Ayush pharmacies and drug testing labs for higher standards of certification ecosystem and make available more skilled personnel. 3, upgrade the WHO Global Traditional Medicine Center in Jamnagar to bolster evidence-based research, training, and awareness for traditional medicine. Animal husbandry. Livestock contributes to close to 16% of farm income, including of poor and marginal households. To scale up availability of veterinary professionals by more than 20,000, I propose to roll out a loan-linked capital subsidy support scheme for establishment of veterinary and para-veterinary colleges, veterinary hospitals, diagnostic laboratories, and breeding facilities in private sector. Collaboration between Indian and foreign institutions will also be facilitated. Orange economy. India's animation, visual effects, gaming, and comics sector, AVGC sector, is a growing industry projected to require 2 million professionals by 2030. I propose to support the Indian Institute of Creative Technologies, Mumbai, in setting up AVGC content creator labs in 15,000 secondary schools all over the country and 500 colleges. The Indian design industry is expanding rapidly, and yet there is a shortage of Indian designers. I propose to establish, through Challenge Route, a new National Institute of Design to boost design education and development in the eastern region of India. Education. Our government will support states through Challenge Route in creating 5 university townships in the vicinity of major industrial and logistics corridors. These planned academic zones will host multiple universities, colleges, and research institutions, skill centers, and residential complexes. In higher education, STEM institutions, prolonged hours of study and laboratory work pose some challenges for girl students. Through VGF, viability gap funding and capital support, one girls' hostel will be established in every district. To promote astrophysics and astronomy via immersive experiences. 4 telescope infrastructure facilities will be set up or upgraded. The National Large Solar Telescope, the National Large Optical Infrared Telescope, the Himalayan Chandra Telescope, and the Cosmos 2 Planetarium. Tourism. The tourism sector has the potential to play a large role in the employment generation, forex earnings, and expanding the local economy. I propose to set up a National Institute of Hospitality by upgrading the existing National Council for Hotel Management and Catering Technology. It will function as a bridge between academia, industry, and government. I also propose a pilot scheme for upskilling 10,000 guides in 20 iconic tourist sites through a standardized, high-quality, 12-week training course in hybrid mode in collaboration with the Indian Institute of Management. A national destination digital knowledge grid will be established to digitally document all places of significance, cultural, spiritual, and heritage. This initiative will create a new ecosystem of jobs for local researchers, historians, content creators, and technology partners. India has the potential and opportunity to offer world-class trekking and hiking experience. We will develop ecologically sustainable mountain trails in Himachal Pradesh, Uttarakhand, and Jammu Kashmir. Also in Araku Valley in the Eastern Ghats and Podigai Malai in the Western Ghats. Turtle trails along key nesting sites in the coastal areas of Odisha, Karnataka, and Kerala. And 3 bird watching trails along the Pulikat Lake in Andhra Pradesh, Tamil Nadu. It's on the border. Under the visionary leadership of Honorable Prime Minister, we established the International Big Cat Alliance in 2024. This year, India is hosting the first ever Global Big Cat Summit, where heads of governments and ministers from 95 range countries will deliberate on collective strategies for conservation. Heritage and culture tourism. I propose to develop 15 archaeological sites, including Lothal, Dholavira, Rakhigarhi, Adichanallur, Saranath, Hastinapur, and Leh Palace into vibrant experiential cultural destinations. Excavated landscapes will be open to the public through curated walkways. Immersive storytelling skills and technologies will be introduced to help conservation labs, interpretation centers, and guides. The sports sector provides multiple means of employment, skilling, and job opportunities. Taking forward the systematic nurturing of sports talent, which is set in motion through the Khelo India program earlier, I propose to launch a Khelo India mission to transform the sports sector over the next decade. The mission will facilitate an integrated talent development pathway supported by training centers, which are foundational, intermediate, and elite levels. B, systematic development of coaches and support staff. C, integration of sports science and technology. D, competitions and leagues to promote sports culture and provide platforms. And E, development of sports infrastructure for training and competition. Our third kartavya aligns with our vision of Sabka Saath Sabka Vikas towards Vikasit Bharat. This requires targeted efforts for 1, increasing farmer incomes through productivity enhancement and entrepreneurship, with special attention to small and marginal farmers. B, empowering Divyangjan through access to livelihood opportunities, training, and high-quality assistive devices. C, empowering the vulnerable to access mental health and trauma care. D, focus on the Purvodaya states and the Northeast region to accelerate development and employment opportunities. Fisheries. We will undertake initiatives for integrated development of 500 reservoirs and Amrit Sarovars. 2, strengthen the fisheries value chain in coastal areas and enable market linkages involving startups and women-led groups together with fish farmer producer organizations. Animal husbandry. To provide quality employment opportunities in rural and peri-urban areas, we will support the animal husbandry sector in entrepreneurship development through A, credit-linked subsidy program, B, scaling up and modernization of livestock enterprises, C, enhanced creation of livestock, dairy, and poultry, enhanced creation of livestock, dairy, and poultry-focused integrated value chains, and D, encourage creation of livestock farmer producer organizations. High-value agriculture. To diversify farm outputs, increase productivity, enhance farmers' incomes, and create new employment opportunities, we will support high-value crops such as coconut, sandalwood, cocoa, cashew in the coastal areas, agar trees in Northeast, and nuts such as almonds, walnuts, and pine nuts in our hilly regions. These, all of them, will be supported. India is the world's largest producer of coconuts. About 30 million people, including nearly 10 million farmers, depend on coconuts for their livelihood. To further enhance competitiveness in coconut production, I propose a coconut promotion scheme to increase production and enhance productivity through various interventions, including replacing and non-productive trees with new saplings or plants or varieties in major coconut growing states. A dedicated program is proposed for Indian cashew and cocoa to make India self-reliant in raw cashew and coconut production and processing, enhance export competitiveness, and transform Indian cashew and Indian cocoa into premium global brands by 2030. Sandalwood. Sandalwood is closely linked to India's social and cultural heritage. Our government will partner with state governments to promote focused cultivation and post-harvest processing to restore the glory of the Indian sandalwood ecosystem, to rejuvenate old, low-yielding orchards, and expand high-density cultivation of walnuts, almonds, and pine nuts we will support a dedicated program to enhance farmer incomes and in bringing value addition by engaging youth. Bharat Vistar, that is virtually integrated system to access agricultural resources. I propose to launch Bharat Vistar, a multilingual AI tool that shall integrate the AgriStack portals and the ICAR package on agricultural practices with AI systems. This will enhance farm productivity, enable better decisions for farmers, and reduce risk by providing customized advisory support. She Marts for rural women-led enterprises. Building on the success of Lakpati Didi program, I propose to help women take the next step from credit-linked livelihoods to being owners of enterprises. Self-help entrepreneur, She Marts will be set up as community-owned retail outlets within the cluster-level federations through enhanced and innovative financing instruments. Empowering Divyangjan. Divyangjan Kaushal Yojana. Information technology, AVGC sectors, hospitality and food and beverages sectors often offer task-oriented and process-driven roles which are suitable for Divyangjan. We will ensure dignified livelihood opportunities through industry-relevant and customized training specific to each Divyangjan group. Divyang Sahara Yojana. Timely access to high-quality assistive devices for all eligible Divyangjan is a fundamental need. I propose to, 1, support the Artificial Limbs Manufacturing Corporation of India, ALIMCO, to set up and to scale up production of assistive devices, invest in R&D and AI integration, strengthen PM Divyasha Kendras, and support setting up of assistive technology marts as modern retail style centers where Divyangjan and senior citizens can see, try, and purchase assistive products. Reaffirming our commitment to mental health and trauma care. There are no national institutes for mental health care in North India. We will therefore set up a NIMHANS 2 and also upgrade national mental health institutes in Ranchi and in Tezpur as regional apex institutions. Emergencies expose families, particularly the poor and vulnerable, to unexpected expenditure. We will strengthen and increase these capacities by 50% in district hospitals by establishing emergency and trauma care centers. Focus on Purvodaya states and northeastern regions. Purvodaya. I propose the development of an integrated East Coast industrial corridor with a well-connected node at Durgapur, creation of 5 tourism destinations in 5 Purvodaya states, and the provision of 4,000 e-buses. Buddhist sites in northeastern region. The northeastern region is a civilizational confluence of Theravada and Mahayana or Vajrayana traditions. I propose to launch a scheme for development of Buddhist circuits in Arunachal Pradesh, Sikkim, Assam, Manipur, Mizoram, and Tripura. The scheme will cover preservation of temples and monasteries, pilgrimage interpretation centers, connectivity, and pilgrim amenities. 16th Finance Commission. On 17th November 2025, the 16th Finance Commission submitted its report to the President. As mandated under Article 281 of the Constitution, the government is to lay the report along with the explanatory memorandum on the action taken report on the recommendations of the Commission in Parliament, which, Sir, Honourable Speaker, you've allowed me to do at the commencement of this session. The government has accepted the recommendation of the Commission to retain the vertical share of devolution at 41%. As recommended by the Commission, I have provided 1.4 lakh crores of rupees to the states for the year 2026-2027 as Finance Commission grants. These include rural and urban local body and disaster management grants. Fiscal consolidation. Government has been delivering on our fiscal commitments consistently without compromising on social needs. To strive towards accepted standards of fiscal management in Budget 25-26, I had indicated that the central government would target reaching a debt to GDP ratio of 50 plus or minus 1% by 2030-31. In line with this, the debt to GDP ratio is estimated to be 55.6% of GDP in BE 26-27, compared to 56.1% of GDP in RE 25-26. A declining debt to GDP ratio will gradually free up resources for priority sector lending and expenditure by reducing the outgo on interest payments. One of the main operational instruments for debt targeting is the fiscal deficit. I'm happy to inform this August House that I fulfilled my commitment made in 2021-2022 to reduce fiscal deficit below 4.5% of GDP by 25-26. In RE 25-26, the fiscal deficit has been estimated at par with BE of 2025-26 at 4.4% of GDP. In line with the new fiscal prudence path of debt consolidation, the fiscal deficit in BE 26-27 is estimated to be 4.3% of the GDP. The revised estimates of the non-debt receipts are 34 lakh crore rupees, of which the centre's net tax receipts are 26.7 lakh crore. The revised estimate of the total expenditure is 49.6 lakh crore rupees, of which the capital expenditure is about 11 lakh crores. Budget estimates 2026 to 2027. Coming to 26-27, the non-debt receipts and the total expenditure are estimated as 36.5 lakh crore and 53.5 lakh crore respectively. The centre's net tax receipts are estimated at 28.7 lakh crore rupees. To finance the fiscal deficit, the net market borrowings from dated securities are estimated at 11.7 lakh crore rupees. The balance financing is expected to come from small savings and other sources. The gross market borrowings are estimated at 17.2 lakh crore rupees. I'll now move to Part B. Part B, direct taxes. Honorable Speaker, sir, I now present my proposals on direct taxes. New Income Tax Act. In July 2024, I announced a comprehensive review of the Income Tax Act 1961. This was completed in a record time, and the Income Tax Act 2025 will come into effect from 1st April 2026. The simplified income tax rules and forms will be notified shortly, giving adequate time to taxpayers to acquaint themselves with its requirements. The forms have been redesigned such that ordinary citizens can comply without difficulty. Ease of living. I propose that any interest awarded by the Motor Accident Claims Tribunal to a natural person will be exempt from income tax, and any TDS on this account will be done away with. I propose to reduce TCS rate on the sale of overseas tour program package from the current 5% and 20% to 2% without any stipulation of amount. I propose to reduce TCS rate for pursuing education and for medical purposes under the Liberalized Remittance Scheme, popularly known as LRS, from 5% to 2%. Supply of manpower services is proposed to be specifically brought within the ambit of payment to contractors for the purpose of TDS to avoid ambiguity. Thus, TDS on these services will be at the rate of either 1% or 2% only. I propose a scheme for small taxpayers, wherein a rule-based automated process will enable obtaining a lower or nil deduction certificate instead of filing an application with the assessing officer. For the ease of taxpayer holding securities in multiple companies, I propose to enable depositories to accept Form 15G or Form 15H from the investor and provide it directly to various relevant companies. I propose to extend time available for revising returns from 31st December to up to 31st March with the payment of a nominal fee. I also propose to stagger the timeline for filing of tax returns. Individuals with ITR 1 and ITR 2 returns will continue to file till 31st July, and non-audit business cases or trusts are proposed to be allowed time till 31st August. TDS on sale of immovable property by a non-resident is proposed to be deducted and deposited through resident buyers and his or her PAN-based challan instead of requiring a TAN, which is a temporary accounting number. To address practical issues of small taxpayers like students, young professionals, tech employees, relocated NRIs, and such others, I propose to introduce a one-time 6-month foreign asset disclosure scheme for these taxpayers to disclose income or assets below a certain size. This scheme would be applicable for two categories of taxpayers, namely A, who did not disclose their overseas income or assets, and B, who disclosed their overseas income and or paid due tax but could not declare the asset acquired. For category A, the limit of undisclosed income or asset is proposed to be up to 1 crore rupees. They need to pay 30% of fair market value of asset or 30% of undisclosed income as tax and 30% as additional income tax in lieu of penalty, and would thereby get immunity from prosecution. For category B, asset value is proposed to be up to 5 crore rupees. Here, immunity from both penalty and prosecution will be available with a payment of fee of 1 lakh rupees. Rationalizing penalty and prosecution. Multiplicity of proceedings are hindrance to the ease of doing business. I propose to integrate assessment and penalty proceedings by way of a common order for both. There will be no interest liability on the taxpayer on the penalty amount for the period of appeal before the first appellate authority, irrespective of the outcome of appeal process. Further, quantum of prepayment is being reduced from 20% to 10% and will continue to be calculated only on core tax demand. As an additional measure for reducing litigation, I propose to allow taxpayers to update their returns even after reassessment proceedings have been initiated, and an additional 10% tax rate over and above the rate applicable for the relevant year. The assessing officer will then use only this updated return in his proceedings. There is already a framework for immunity from penalty and prosecution in the cases of underreporting. I propose to apply this framework for immunity to misreporting too. However, in such a case, the taxpayer will need to pay 100% of the tax amount as an additional income tax over and above the tax and interest due. Penalties for certain technical defaults, such as failure to get accounts audited, non-furnishing of transfer pricing audit report, and default in furnishing statement for financial transactions, are proposed to be converted into fee. I propose to rationalize prosecution framework under Income Tax Act while maintaining a careful balance for deterrence in some serious offense. Non-production of books of account and documents and requirement of TDS payment where payment is made in kind are being decriminalized. Further, minor offenses will attract fine only. The remaining prosecutions will be graded commensurate with the quantum of offense. They will entail only simple imprisonment with maximum imprisonment reduced to 2 years and power to courts to convert even those into fines. There is no penalty. There's no penalty presently for non-disclosure of non-immovable foreign assets with aggregate value less than 20 lakh rupees. I propose to also provide them with immunity from prosecution with retrospective effect from 1/10/2024. Cooperatives. Deduction is already allowed to a primary cooperative society engaged in supplying milk, oilseeds, fruits or vegetables raised or grown by its members. I propose to extend this deduction to also include supply of cattle feed and cotton seed produced by its members. I propose to allow inter-cooperative society dividend income as deduction under the new tax regime to the extent it is further distributed to its members. I further propose to allow exemption for a period of 3 years to dividend income received by a notified national cooperative federation on their investments made in companies up to 31/1/2026. This exemption would be allowed only for dividends further distributed to its member cooperatives. Supporting IT sector as India's growth engine. India is a global leader in software development services, IT-enabled services, knowledge process outsourcing services, and contract R&D services relating to software development. These businesses and their segments are quite interconnected with each other. All these services are proposed to be clubbed under a single category of information technology services with a common safe harbor margin of 15.5% applicable to all. The threshold for availing safe harbor for IT services is being enhanced substantially from 300 crore rupees to 2,000 crore rupees. Safe harbor for IT services shall be approved by an automated rule-driven process without any need for tax officer to examine and accept the application. Once applied by an IT services company, the same safe harbor can be continued for a period of 5 years at a stretch at its choice. For IT services companies who want to conclude advanced pricing agreement, APA, I propose to fast-track unilateral APA process for IT services and endeavor to conclude it within a period of 2 years. The period of 2 years can be extended by a further period of 6 months on taxpayers' request. I propose to extend the facility of modified returns available to the entity entering APA to its associated entities also. Attracting global business and investment. Recognizing the need to enable critical infrastructure and boost investment in data centers, I propose to provide tax holiday till 2047 to any foreign company that provides cloud services to customers globally by using data center services from India. It will, however, need to provide services to Indian customers through an Indian reseller entity. I also propose to provide a safe harbor of 15% on cost in case the company providing data center services from India is a related entity. To harness the efficiency of just-in-time logistics for electronic manufacturing, I propose to provide safe harbor to non-residents for component warehousing in a bonded warehouse at a profit margin of 2% of the invoice value. The resultant tax of about 0.7% will be much lower than in competing jurisdictions. To provide fillip to toll manufacturing in India, I propose to provide exemption from income tax for 5 years to any non-resident who provides capital goods, equipment, or tooling to any toll manufacturer in a bonded zone. To encourage vast pool of global talent to work in India for a longer period of time, I propose to provide exemption to global, non-India sourced income of a non-resident expert for a stay period of 5 years under notified schemes. I propose to provide exemption from minimum alternate tax, the MAT, to all non-residents who pay tax on presumptive basis. Tax administration. I propose to constitute a joint committee of Ministry of Corporate Affairs and Central Board of Direct Taxes for incorporating the requirements of income computation and disclosure standards, the ICDS, in the Indian Accounting Standards, Ind AS itself. Separate accounting requirement based on ICDS will be done away with from the tax year 27-28. To support Prime Minister Modi's vision of homegrown accounting and advisory firms to become global leaders, I propose to rationalize the definition of accountant for the purposes of safe harbor rules. Other tax proposals. Change in taxation of buyback was brought in to address the improper use of buyback route by promoters. In the interest of minority shareholders, I propose to tax buyback for all types of shareholders as capital gains. However, to disincentivize misuse of tax arbitrage, promoters will pay an additional buyback tax. This will make effective tax 22% for corporate promoters. For non-corporate promoters, the effective tax will be 30%. TCS rate for sellers of specific goods, namely alcoholic liquor, scrap, and minerals, will be rationalized to 2%, and that on Tendu leaves will be reduced from 5% to 2%. I propose to raise the STT on futures to 0.05% from the present 0.02%. STT on options premium and exercise of options are both proposed to be raised to 0.15% from the present rate of 0.1% and 0.125% respectively. We reformed the taxation landscape for corporates in 2019 by providing them a simplified regime with lower tax rate so that they could productively focus on business rather than on claim of deductions and exemptions. To encourage companies to shift to the new regime, set off of brought forward MAT credit, minimum alternate tax credit, is proposed to be allowed to companies only in the new regime. Set off using available MAT credit is proposed to be allowed to an extent of 1/4 of the tax liability in the new regime. MAT is proposed to be made final tax, so there will be no further credit accumulation from 1st April 2026. In line with this change, the rate of final tax is being reduced to 14% from the current MAT rate of 15%. The brought forward MAT credit of taxpayers accumulated till 30th March 2026 will continue to be available to them for set off as above. Indirect taxes. I shall now take up proposals related to indirect taxes. My proposals for customs and central excise aim to further simplify the tariff structure, support domestic manufacturing, promote export competitiveness, and correct inversion in duty. To continue weeding out long continuing customs duty exemptions, I propose to remove certain exemptions on items which are being manufactured in India or where the imports are negligible. Similarly, to further simplify the process of ascertaining the rate of duty applicable on a particular item, I propose to incorporate certain effective rates in various customs notifications to the tariff schedule itself. I shall now take up sector-specific proposals. Promotion of exports of marine, leather, and textile products. I propose to increase the limit for duty-free imports of specified inputs used for processing seafoods for export from the current 1% to 3% of FOB value of the previous year's export turnover. I also propose to allow duty-free imports of specified inputs, which is currently available for exports of leather or synthetic footwear, to exports of shoe uppers as well. I propose to extend the time period for export of final product from the existing 6 months to 1 year for exporters of leather or textile garments, leather or synthetic footwear, and other leather products. Energy transition and security. I propose to extend the basic customs duty exemption given to capital goods used for manufacturing lithium-ion cells for batteries to those used for manufacturing lithium-ion cells for battery energy storage systems also. I propose to exempt basic customs duty on import of sodium antimonate for use in manufacture of solar glass. Nuclear power. I propose to extend the existing basic customs duty exemption on imports of goods required for nuclear power projects till the year 2035 and expand it for all nuclear plants irrespective of their capacity. Critical minerals. It is proposed to provide basic customs duty exemption to the import of capital goods required for the processing of critical minerals in India. Biogas blended CNG. I propose to exclude the entire value of biogas while calculating the central excise duty payable on biogas blended CNG. Civil and defense aviation. I propose to exempt basic customs duty on components and parts required for the manufacture of civilian training and other aircrafts. It is proposed to exempt basic customs duty on raw materials imported for the manufacture of parts of aircraft to be used in maintenance, repair, or overall requirements by units in the defense sector. Electronics. To deepen value addition in the consumer electronics sector, I propose to exempt basic customs duty on specified parts used in the manufacture of microwave ovens. Special economic zone. To address the concerns arising about utilization of capacity by manufacturing units in the special economic zones due to global trade disruptions, I propose as a special one-time measure to facilitate sales by eligible manufacturing units in SEZs to the domestic tariff area at concessional rates of duty. The quantity of such sales will be limited to a prescribed proportion of their exports. Necessary regulatory changes will be undertaken to operationalize the measures while ensuring level playing field for the units working in the DTA. Ease of living. To rationalize the customs duty structure for goods imported for personal use, I propose to reduce the tariff rate on all dutiable goods imported for personal use from 20% to 10%. To provide relief to patients, particularly those suffering from cancer, I propose to exempt basic customs duty on 17 drugs or medicines. I propose also to add 7 more rare diseases for the purposes of exempting import duties on personal imports of drugs, medicines, and food for special medical purposes used in their treatment. Customs process. India's role and share in the global trade is poised for a major leap in line with our ambition and journey towards Vikasit Bharat. In this regard, I propose many measures for custom processes to have minimal intervention for smoother and faster movement of goods and greater certainty to the trade. Trust-based systems. I propose to enhance duty deferral period for Tier 2 and Tier 3 authorized economic operators, known as AEOs, from 15 days to 30 days. I propose to provide eligible manufacturer importers the same duty deferral facility. This should encourage them to get themselves accredited as a full-fledged Tier 3 AEO in due course. To provide greater certainty and for better business planning, I propose to extend validity period of advance ruling binding on customs from the present 3 years to 5 years. In the spirit of the whole of government approach, government agencies will be encouraged to leverage AEO accreditation for preferential treatment in clearing their cargo. Regular importers with trusted long-standing supply chains will be recognized in the risk system so that the need for verification of their cargo every time can be minimized. Export cargo using electronic sealing. Export cargo using electronic sealing will be provided through clearance from the factory premises to the ship. For import of goods not needing any compliance, filing of bill of entry by a trusted importer and arrival of goods will automatically notify customs for completing their clearance formalities. This will enable goods to be released immediately on arrival. The customs warehouse framework will be transformed into a warehouse operator-centric system with a self-declarations, electronic tracking, and risk-based audit These reforms will move away from the current system of officer-dependent approvals and reduce transaction delays and compliance costs. Ease of doing business. Approvals required for cargo clearance from various government agencies will be seamlessly processed through a single and interconnected digital window by the end of the financial year. Processes involved in clearance of food, drugs, plant, and animal and wildlife products, accounting for about 70% of interdicted cargo, will be operationalized on this system by April 2026 itself. For goods not having any compliance requirement, clearance will be done by customs immediately after online registration is completed by the importer, subject to the payment of duty. Customs integrated system will be rolled out in 2 years as a single integrated and scalable platform for all customs processes. Utilization of non-intrusive scanning with advanced imaging and AI technology for risk assessment will be expanded in a phased manner with the objective to scan every container across all the major ports. New export opportunities to support Indian fishermen to fully harness the economic value of marine resources beyond our territorial waters. The following measures will be taken. A, fish catch by an Indian fishing vessel in exclusive economic zone or on the high seas will be made free of duty. Landing of such fish on foreign port will be treated as export of goods. Safeguards will be put in place to prevent misuse during fish catch, transit, or transshipment. To support aspirations of India's small businesses, artisans, and startups to access global markets through e-commerce, I am pleased to announce complete removal of the current value cap of 10 lakh rupees per consignment on courier exports. In addition, handling of rejected and returned consignments will be improved with effective use of technology for identifying such consignments. I propose to revise provisions governing baggage clearance during international travel to address genuine concerns of passengers. The revised rules will enhance duty-free allowances in line with the present-day travel realities and provide clarity in temporary carriage of goods brought in or taken out. There are honest taxpayers who are willing to settle disputes by paying all their dues, but they get deterred due to negative connotation associated with penalty. They will now be able to close cases by paying an additional amount in lieu of penalty. Honorable Speaker, sir, with this, I commend the budget to this august House. Jai Hind. One and a half hours.
Item number 3, माननीय वित्त मंत्री जी.
Item number 2, sir.
3.
Sir, with your permission, I rise to lay on the table of the following statements under Section 3, 1 of the Fiscal Responsibility and Budget Management Act of 2003. Medium-term fiscal policy, fiscal policy strategy statement, and macroeconomic framework statement.
Item number 4, माननीय वित्त मंत्री जी.
Sir, with your permission, I move for leave to introduce the Finance Bill 2026.
प्रश्न ये कि विधेयक को पुनर्स्थापित करने की अनुमति प्रदान की जाए. जो सदस्य इस पक्ष में हाँ गए, जो सदस्य विरोध में ना गए, मेरे विचार में निर्णय हाँ वालों के पक्ष में, हाँ वालों के पक्ष में अनुमति प्रदान की जाती है. माननीय मंत्री जी, अब विधेयक पुनर्स्थापित करें.
Sir, I introduce the bill.
माननीय सदस्य आपको सूचित किया जाता है कि माननीय मुख्यमंत्री जी के बजट भाषण की कॉपी पब्लिकेशन काउंटर पर ली जाती है। बजट भाषण और बजट से संबंधित दस्तावेज आपके मोबाइल फोन और मेंबर पोर्टल्स पर ही उपलब्ध है। सभा की कार्रवाई कल सोमवार दिनांक 2 फरवरी 2026 को प्राप्त 11 बजे तक के लिए स्थगित की जाती है।
Okay, well, markets, of course, taking it hard. You just heard the finance minister with the budget speech. There are two clear things which I think have come through. The net borrowing number for markets is largely in line with expectations, but the gross borrowing number, which has been put out, I think is spooking financial stocks a little bit. The second point, Lata, just 1 minute. On the equity taxation front, I just want to put out, there is a STT increase on options and futures, but the expectation that capital gains, perhaps there will be some kind of a relief, has not come through. Anant Narayan, before the speech, was telling us, well, raise STT in lieu of giving some relief on the capital gains. One has happened, the other has not happened. And I think the market is clearly disappointing. There is a lot of nuts and bolt announcements which have happened, especially on the taxation front. And I think we have experts joining in who will sort of, go through each of them. On the customs side, simplification, easing out of the process of filing, et cetera, et cetera. So we'll go through all of that. But I think at a headline level, there is a bit of a disappointment. Can't take away from that fact.
No, I completely take a point on STT, which is clearly, spooked the market. STT has come, but capital gains has not gone down.
I think Samir is
but
with us.
in terms of borrowing, that 17.2 need not worry people, because it's possible that 1 lakh crore will be through a switch or through a buyback. And therefore, the effective net borrowing is only 16.2, because the net borrowing has come exactly in line with the market poll that we did at 11.7 lakh crore. So I don't think we should worry. 4.3 fiscal deficit also was as per expectation. Also, sectorally, we were expecting something for chemicals, and some of the chemical stocks are higher. There is some encouragement given to them as well. Some encouragement even given to exporters, textile exporters. But the buyback
is the clear positive. Samir is with us. Samir Arora, founder Helios. Samir, thanks for joining in. First reaction?
First reaction is that the market will fall much more. I think we have to realize what the issue was. The issue is that we are underperforming like crazy in the world, and the world is not interested, and they're not, FIs are not interested. Tomorrow, I'm sure the currency will fall 1 more %. There is no story to tell if on a Sunday our market goes down 2%. Because the first thing is that you can't just do STT increase because maybe options is bad, futures is bad. But you can't go out of line with what the reality is today, that India is getting highlighted as a poor stock market, not so much the real economy or whatever. And in that sense, these other things matter after 2 weeks, 4 weeks, but it's not easy to get back investors at this with this kind of.
Okay, Madhu is with us as well. Madhu, your first reaction?
I think, Prashant, there was budget is in, I would say, more or less in line with what was expected in terms of consolidation and fiscal numbers. The STT increase, as Samir is saying, is a bit disappointing, but I would say at the same time, the buyback tax being cut is a good positive. Lots of companies, I would say, would prefer now the buyback route versus the dividend route. So I think by and large, just it's in continuation of whatever was happening. The only real big highlight from my perspective, a lot of emphasis on long-term employment generation on various schemes. That's the only longer-term positive which I could pick up. But from a market perspective, I think this event will be over in 48 hours.
Yeah. No, would you agree, Madhu? Samir saying markets will fall more. Today there are no FIIs. Rupee perhaps under pressure again. Would you agree with that?
It may fall not only because of budget or disappointing because of budget. Generally we have been little out of favor.
Okay.
And Prashant, the spate of new issuance which are even planned this year as compared with even last year, that will also suck out a lot of liquidity. So markets are in a way, not been very supportive from India perspective and that may continue.
How big is the STT increase, Madhu? If your team has been able to tell you on options, and we have those actual absolute numbers, but how large is the increase?
Prashant, it is not very big because it's not done on a cash market. It's there on the options in the future market. But for more than the number, Prashant, is a sentiment dampener, right? We are already struggling, and this is a kind of a little bit of sentiment dampener. Then it really hurting. In that sense.
Samir,
can we just get the buyback explained, Dinesh? Kanabar, buyback is going to be a big positive.
I think it's quite a bit positive. So until now, buyback was taxed in the hands of the recipient as normal income. We now have it being classified as capital gains for other than promoters. For promoters, if the promoter is a corporate, the overall capital gains tax will be 22.5%, and if it is individual, it will be 30%. So that's quite a bit welcome. Particularly small shareholders, buyback happening, being liable to capital gains tax is very, very welcome.
I think Madhu or somebody actually mentioned that it's good because otherwise it was being taxed as dividends in the hands of the taxpayers. Now, of course, it will be taxed at a concessional rate, 12.5% for minority, and then 22 or 30, depending upon
the government recognizing, well, what happened was perhaps not.
Yeah, they moved from one length where tax was in the hands of the company. Company used to pay the buyback tax to removing it and saying it's now taxable in the hands of the taxpayer as dividend income. That was extreme. So if you were an owner, what happened to the loss that you were incurring?
So what happened is that there was a tax in the hands of the company. The corporate India represented that make it taxable in the hands of the recipient with an expectation to be capital gain. Be careful what you ask for. It got taxed as normal income. Now it's gone back to capital.
It's very positive.
Let me get in. Samir, I know you've given your, in that sense, your first initial thoughts, but some of these other stuff, buyback, and there's a long, as Madhu was pointing out, long term, I mean, what is being laid out, maybe immediately what market was expecting has not happened. But do you think this kind of allays some of the that disappointment?
We're not saying that what was expected has not come. This was unexpected and negative for no reason, because it is clear that we introduce STT in lieu of capital gains tax. Now the STT are increasing more and more, and and in an environment when the environment is clear that India last year underperformed markets by 20-30% in currency terms, even more maybe, and even this year just in like 30 days the currency has depreciated relative to US by 4-5% or something. I mean, in that context, this STT could have been delayed. Other things are broadly okay, but the markets are very sensitive to a few clean things. Okay, maybe there would have been no cut in capital gains tax. Okay, that even I didn't think much. But at this time when the market is already showing weakness, to add one more thing is not required. The long term, I agree, and that's why the beginning the market itself was correctly interpreting the market rally, because the long term things, they pressed all the right buttons in terms of new sectors, new things, education, tourism, and all the semiconductors, manufacturing, etc. But there's no need to randomly hurt the market at a time when the market is proving to be important both from a currency point and from the exit of PE guys or whatever, leading to negative overall FDI or investment. At that time, it was not required at all.
On FDI, there is a positive in terms of those who invest in data centers. They're going to be tax exempt if they sell, data outside up till 2047. Some FDI should come.
No, I mean that's that's clearly a positive. I think we had all expected that data centers would be an area where government would, provide an opportunity for long-term investment, and by dating it through till 2047. They're clearly providing clarity and certainty. If data centers were to provide services to overseas users, then income is fully exempted. But they have not kind of limited it to saying only to global. When the original FTZ policies were given, you couldn't sell it to domestic. They said you can also sell it to domestic through a local subsidiary. So I think that's positive.
Yeah, Prashant Khemka is also with us. Prashant, Samir not holding back. Your thoughts, what's your sense? What he said is interesting, and the way he put it, which is that it is not that what was expected did not come, but I mean what has come was not expected, and that is the reason why markets are down sharply. 400 points now, 450. Prashant.
Sure, Prashant. So I think from a stock market perspective, the STT per se is not that and as Sameer also pointed out, it might be more sentimental. The STT on FNO may not be as much of a negative from a cash market perspective. But capital gains tax, there was some hope, even though I don't think that people put a very high probability on it. But if there was ever a time, then people were expecting, investors were expecting, it might be the time that capital gains tax, where India, in a way stands out amongst other emerging markets or other markets in general, there could be some hope for chances of bringing it in line with the global market. So that could be partly negative. Otherwise, I think from a stock market, from an investor perspective, there isn't a major negative or a major positive. It is continuation of what was going on in the past. Maybe there were expectations that given what's happening geopolitically, the tariffs,
it'll be tough to do very much. Absolutely. Madhu, let me come back to you. I know you have a team which is looking at this closely. Anything else which really stands out, which you want to highlight, Madhu?
I'll have to explain. Can't write it.
Prashant, I'll just take Sameer's point.
Yeah.
One has to look at it from an overall balancing perspective. There is a lot which the government has done off budget. Let us say that the 4 months back, the GST cut which was off budget, it came today along with the STT. It would have been treated as a big bang budget, and it would have been considered as a very big positive. So I think a lot has happened even beyond budget. It is slightly disappointing, and to that extent may have been avoided given the overall sentiment today. But I don't think this is like a make or break point from Indian market.
No, I don't think that is what Sameer is saying.
And the second thing, if you once will...
Yeah. Go on.
Yeah. That's exactly what I'm also saying. That, it's a knee-jerk reaction because there is some amount of also expectation which was being built up from a long-term capital gains perspective in the market. So that is also kind of discounting today as a reaction. But when we look into details, I think there's a lot which is being done in this budget, I would say, for various sectors, which is really beneficial from a medium long-term perspective. So in my understanding, from market perspective, we are back to basics. Look at individual ideas, do your bottom-up work, and that's the India story.
Okay. Let me look at one more positive, perhaps. Mr. Kanabar, NRIs have been permitted to invest in PMSs, and also the tax has been lowered.
So 2-3 things. First is NRIs have been permitted to invest through PMS and also make direct investment. They were always permitted. That the limit has gone up from 5% to 10% per NRI, and the overall aggregate limit has gone up from 10 to 24.
Okay.
Practically, I can tell you that we have faced this limitation when we are advising clients, and therefore this will open up an avenue. Okay. So it's quite a positive. And maybe one other thing while we are on this, from a tax perspective, there are just too many things, but just one issue is on MAT. So what we are seeing here on minimum alternate taxes, government wants people to move from the old tax regime to the new tax regime. So what they have said is, if you had an accumulated MAT, which was prompting people not to go to the new tax regime, you'll be permitted to transfer, set off in a calibrated manner, and going forward, there is no MAT credit. So people will move to the new tax regime. But lots of other changes on tax side.
Okay. At one that is the way we have to interpret no MAT credit.
Going forward.
Going forward.
Oh.
But that's only for companies who are in the old regime.
Okay.
Most of the companies have already migrated to the new regime, and the thing which was prohibiting them, which was accumulated credit, is now permitted, but to be absorbed at a quarter each year.
Got it. So not to worry so much about that. Shireen, you want to come in on any thoughts?
No, Lata, just to sum it up, I think, and if you had been listening to my panel of experts here, and these, as I pointed out, are the budget makers. They've been responsible for putting budgets together in the last few years. And they were very clear that don't expect any reversal reduction as far as capital gains was concerned. Don't expect anything on STT. Nobody went as far as to expect a hike as far as STT is concerned, which is what happened. But they were very measured in that expectation of any kind of a reversal, rollback, relief on long-term capital gains tax, short-term capital gains tax, and so on and so forth. But the overarching theme, Lata, as we've been pointing out, and I'm going to get my experts to comment on that, this is a budget that is reacting not just to the here and now. It's a budget that's now laying out the priorities, the focus areas for the next 5 to 10 years. Nuclear power, I told you that we're going to see a mention of that, and that's exactly what the government has done on the electronic manufacturing sector, on AI, on data centers, and so on and so forth. So there is plenty there that is likely to play out in time. But the market, of course, reacting to what the market will react to, which is the here and now. But let me get our panel of experts to get right into it. Mr. Bajaj, you were absolutely clear. Don't expect any relief on LTCG. But were you expecting an STT hike, which is what has come in for futures and options?
So I think that has come basically because there is an attempt, there's a lot of news of people actually losing a lot of money there. So something was done in the intervening period. So I think that is a measure perhaps to control that, and not so much as a measure of raising revenues.
Raising revenues, my hunch was they would revive disinvestment, at least the disinvestment target, 80,000 crores versus 33,000 crores. What do you make of that?
So I would say that there are some things which are in the offing. For example, the IDBI disinvestment should happen and the money should come in the financial year 26-27. And also maybe LIC's follow-on issue might happen. So I think 80,000 crores is something which is very reasonable, seeing these two things in context. So I think the government has been very, very conservative on that aspect.
Conservative still, but a higher, much higher target that we've seen in the last few years. Mr. Chakrabarti, you know, from a overarching standpoint, what stood out for you as far as this budget is concerned?
Couple of things. At least my expectation was to retain stability. So if you see across the budget, there has not been a change to radically move from one end to the other. That reflects a government which is very matured now, has been there in power for long. They're continuing with the agenda of infrastructure. If you see, NIIF, Credit Guarantee Scheme for Infrastructure. So those are stability measures. They are provided for all the major steps that has been taken, especially towards technology, data center, and so on and so forth. So there, special impetus has been given. Again, on the infrastructure side for high-speed rails between major cities which are growth center. And those growth center, if you see in the scheme of things, have been recognized.
Yes.
And I also see a major thing, I hope it turns out to really push the economy, is also this high-level committee on banking for inclusion and for consumer protection. I guess that is the
She also used the words of improve and efficiency and scale for Vikasit Bharat. What is the India banking sector requirement? In that context, do you believe this talk around consolidation, etc., or perhaps even hiking the FDI limit for PSBs? I mean, some of those measures may be part of now what this high-level committee looks at?
This committee, one has to see ultimately its terms of reference. Beyond FDI is already at 75%. Making it 100% will perhaps increase a little bit. It's more important that the consumer confidence is retained. Of late, those digital arrests and all those things had dented it a little bit. And not that the banking itself, however, an overall thing, and FM had referred to it. So I guess referring to consumer as such has been, I see it as a very, very positive step. And also the credit guarantee for infrastructure. And she has also talked about, this is my favorite, the bond market.
Yes, she has talked about the bond market. But Ms. Armani, let me ask you, sir, on the defense side, you know, it's I think gone up to about 5.69 lakh crore rupees. We were hoping that she would talk about it in the budget, but she hasn't. So on balance, your take on defense?
I just got confirmation that overall budget has grown by around 21%.
21%.
And the capex also has grown by 24%. This is huge. As expected, the defense allocations have gone up substantially, and most of it will go into...
And the 21% is BE to BE.
Yeah.
Okay. So just to clarify, the defense allocation is up 21% BE versus BE. So if you do BE versus RE, it will be a different number, but BE versus BE up 21%, which is exactly what you had said.
this will certainly boost the preparedness of our military services. And I hope the defense industry will also get a great fillip through this. Apart from the allocations directly, there are other important announcements made today. One is the defense corridors, which will get boost from the 7 sunrise sectors, especially semiconductor sector. They will help the defense production to be seamless. And also supply chain problems will be sorted out because of that.
Okay, so that's the defense corridors is the other announcement. Some disappointment there. You were expecting customs duty rationalization. That doesn't seem to have been announced, but there's a lot of exemptions that have come in for specific sectors, for specific components, and so on and so forth.
Yeah, Shireen, so yes, the big ticket customs rate rationalization has not come through. But part of the reason could be that the government is banking more now on FTAs, which are also providing a huge opportunity to initiatives like China Plus One and others, which other trading partners are looking at. But there are some changes on expected lines also. For example, the change for SEZ units supplying into the RTA, I think that's a good move.
But many caveats attached to that, and what is that time period for that one-time window is something that we require clarity on as well.
We'll need to see the fine print to decipher that. But that's a welcome move in any case, and I think it will help utilize the unutilized infrastructure in SEZs. The other thing which we were expecting, which has come through, is a lot of measures on trade facilitation.
Right.
So the AU scheme has been liberalized, advanced ruling, the duration has been extended. And thirdly, which is also an important move, is that the single window remit has been extended to other border agencies. So I think these are also important.
Important. Right. And as we speak, gentlemen, the markets are coming off their intraday lows. Before I, get Prashant to give us a quick rundown of what's happening in the markets, let me bring in a quick first comment from Anisha, the CEO of the Mahindra Group. Anisha, plenty there for different sectors. Your first take on Budget 2026.
Shireen, good afternoon. It's an excellent budget. It focuses on sustaining economic growth and manufacturing in particular. For India to grow at a rapid pace, manufacturing has to take center stage. Vikasit Bharat talks about manufacturing being 25% of the economy, which means it has to grow 16 times in the next 22 years. And the budget puts in a lot of detail that will help manufacturing, including infrastructure, and that's a huge boost. Atmanirbharta is another key factor in the budget, something that we need given the volatility in the world around us. And specifically, the rare earth corridor is a great step in that direction. And most importantly, I would say, is inclusion. With the focus on SMEs, they have to be an integral part of driving economic growth. The focus on small and marginal farmers, on youth, on capacity building, on women. So overall, Shireen, headlines from our standpoint is just an outstanding budget.
An outstanding budget as per Anish Shah. But Anish, what does this now mean as far as business is concerned, specifically for the Mahindra Group? You've got companies across those diverse sectors. What does it do? Does it move the needle for you across your businesses?
It helps keep us on the path we are on, because we are on a very rapid growth path. And as we look at India becoming more competitive from a manufacturing standpoint, it allows us to make in India for the world and attracts other companies to come into India as well, which is excellent for the Indian economy. So that is a huge boost. As we talk about taking leadership in hospitality, that augurs very well for a hospitality business. Our logistics business is very well placed. And overall, we see multiple sectors benefiting from this budget.
Okay, Anish, I'll come back to you in just a second. Prashant, what's happening with the markets coming off their lows?
Off the lows by 100, but we were off the lows by 200, and we've given back that 100. So it's a pretty, and budget days are, the range is anything between 1 to 5% if you look at the last 7 budgets. And I don't think this is turning out to be that big on the extreme end, but this is big enough. That what's, of course, taken a bite out of things is that STT hike, and we put out the actual percentage increase. On futures, the STT hike is 150%, and options, STT hike is 50%. And of course, there is no relief on the capital gains front. It's not as if there was realistically an expectation that capital gains tax will be lowered, but the STT hike was not expected. And I think that is why, we got this kind of reaction. I think if you just look at names like Angel, BSE, the entire capital market space is down sharply. They all up about 5-6% from the lows, but even then, 8, 9, 10%, depending on what you look at. The capital market index will give you that story at this point in time. So 330 points lower on the Nifty is what you have at this point in time. I think Prashant Khemka is with us still. I'm not sure if Samir and Madhu are there, but Prashant, if you want to just quickly come in with anything else you're picking up, anything else worth highlighting from an investor point of view.
Well, just quickly, I would say, to my mind, the STT hike on FNO is not much of a negative for investors, certainly not for us from an overall market perspective. Yes, if you're investors in capital market, but intermediaries, like you mentioned, brokers and all, that segment may get affected. But it's a better way to, regulate participation of retail investors, get some revenues for the exchequer, rather than coming up with other non-revenue generating measures barring such activity. So that, to my mind, is not something that is bothering the market. Yes, the capital gains tax, to some extent, there was expectation. That is bothering. And second is absence of anything, that is, that in light of what's going on the tariff front, there were certain expectations that this budget could have a step function kind of, announcements on a variety of aspects that would boost growth, economic growth, whereas this is more of a continuity budget. What has been policies that have been working for last 10, 11 years, which have given us robust growth of 6-odd%. It is continuing. It's a stock-taking budget. Okay, we've accomplished this, and these are all policies that have worked well. Let's continue with that.
Yeah, let me bring Sajid into the conversation. And as we do that, let me also give you some more numbers. The railway sector allocation. So if you take a look at the railway budget, up 10% B to B, that is the allocation as far as railways are concerned. RBI dividend at over 3 lakh crore rupees. That is the number there as far as the RBI dividend is concerned. Sajid Chinoy, one other number that we haven't put a lot of attention on is the 16th Finance Commission. As we reported here on CNBC TV 18, the devolution staying at 41%. But what about the borrowing number, Sajid? Any concerns there that the market is picking up on?
So I think the market was expecting a smaller borrowing number, but there are two known unknowns here, Shireen. One is whether there'll be a switch by the RBI, which is also what the market was building in, and there is no clarity, and that should bring the number down. Secondly, if you at first glance, if you look at the borrowing breakdown, what you see is quite a lot of conservatism when it comes to small savings schemes. So if small savings tend to be higher than what has been budgeted, that creates the possibility that in the second half of the year there could be lower borrowing. But yes, at first blush, the gross borrowing number is higher, and I think markets are hoping that there'd be some switch from the RBI. I'll just make one more quick point on the broader math, Shireen. So no real surprises there. Some had expected a deficit of 4.2. We're close to that. We're at 4.3. I think the key is going to be nominal GDP, because this year we're clocking 8. Next year the assumption is 10. If we do achieve a 10% nominal next year, then the gross tax assumptions at 10.4 are not very ambitious. If nominal GDP is lower, then that will take some doing. One final point I'll make is on capex. If the RE numbers are achieved, capex growth will be just 4%. Because the base last year was higher, and so if you take the budgeted number on the base, it was 4. Next year's number is much higher at 11.5. But a compound annual growth rate over 2 years is closer to 7 to 8%. And I think the bigger message is, that the center has done what it has to on public capex, and now it's important that private capex pick up to fill in some of that gap.
Yeah, and I think that has been made very clear by the government that it perhaps has reached its peak in terms of being able to enhance that capex number, the point that you're making, Sajid. Let me also bring in Debashish Panda, former chairman of the IRDA and also a budget maker. Now Kartavya Bhavan, you can't call it North Block anymore. Mr. Panda, your big headline from Budget 2026.
I think it's an outstanding, excellent budget, particularly when we are navigating through very, very difficult circumstances, uncertainties, challenges. What interests me is that the finance minister mentioned about the structural reforms, which will continue and which are very necessary. The other big thing that she talked about is a stable and a very robust and resilient financial sector. And in that context, she even spoke about, setting up a high-level committee to look at the banking sector in the country and how to take it forward in terms of aligning it with the vision of Vikasit Bharat 2047. So I think that that itself is a big message and a signal that maybe there'll be a lot of new things we will see in the banking system, bigger banks, more consolidation maybe, or even allow the corporates enhance the FDI. All of that could be possible. And actually, we need a strong banking sector for to achieve the larger goal of Vikasit Bharat by 2047. And then, the capital expenditure spending on infrastructure, as we all expected and we discussed the other day, has been given the priority. And what she has done is that she has taken care of each and every sector which will benefit. The MSMEs in particular are being given a lot of attention with a variety of interventions. Then, of course, the rare earth corridor, the rail corridor, all of that, again, I think will give a big fillip to also position India as a leader in the global value chain as well.
Yes, many measures there, 10,000 crore rupee fund for SMEs, and of course, many linkages to the TREADS platform and so on and so forth in continuation of the earlier measures. But I want to get all of you gentlemen to comment on what the government has attempted to do to try and draw in flows. And Mr. Panda, I'll start by asking you the changes to the investment limit made for PROIs to be able to invest in Indian equities, and some of the other measures, for instance, capital gains relief for people who want to do data centers and so on and so forth, cloud services till 2047. The long-term strategy of this budget to try and draw in flows and investors. What would you say were the big highlights there? Mr. Panda?
Yeah. So I thought the question was for Mr. Chenoy, so I lost. Could you please recap the question?
No, I was just saying the measures to try and draw in foreign investors and foreign flows. Does the budget deliver on that?
I think much more needs to be done in terms of, I think the previous speaker spoke about the markets, the stock markets, how capital gain reduction could have actually been a big benefit to the stock markets in terms of attracting more, money into that segment. But having said that, the FDI has recently been opened up in the insurance sector. I think the structural reforms would also look at opening up in other sectors wherever necessary, of course, keeping those safeguards. But clearly a signal towards, attracting more capital, whether it is in the form of FDI or FPI or in the form of equity. So all of that is necessary for us to, for the country to grow at the rate at which the projections have been made.
You, sir. My apologies, I'm interrupting you because we have the first government reaction now coming in after the finance minister has delivered the budget. The CEO of the Niti Aayog, B.V.R. Subramaniam, joins us. Mr. Subramaniam, many thanks for joining us. Several sectors being addressed, several measures being taken. Of course, the thread of continuity running through the course of the budget. Your highlights and what you believe the maximum impact is likely to be on account of Budget 26.
So this is a budget of a middle-income country. That's the first thing. And this is a budget for Vikasit Bharat. And you can see very large elements, and the finance minister laid that out very, very early on. She talked about three kartavyas. The three kartavyas are for economic growth, aspiration, and inclusivity across regions, individuals, communities. And within that, I think if you should see the three budgets of the last year and the year before as a package deal. The budget 2 years ago was all about jobs and employment as the key focus with supportive things. The previous budget was a lot of manufacturing. If there is one big area of focus in this budget, it is services. So if I was to give a name to this budget, it is a services budget and continuing the good work of the previous two budgets, which is manufacturing and jobs and employment.
Let me double down on that. Why do you believe that this is a services budget, sir? Because there was a lot in the budget to also try and push the manufacturing sector more. What specifically makes you believe that this is a services budget?
Okay, just wait for the key highlights of the budget come out. The largest number, the maximum number of pages are devoted to services, number one. Number two, I'll just let me explain what all are there. First of all, the Prime Minister has announced a high-level standing committee, which is not a one-time committee, a standing committee on services. That is expected to drive a whole host of services reforms. So unlike a manufacturing mission, services actually requires a large number of issues to be tackled over 30, 40 ministries. So she said that she'll be creating a standing committee. Two, look at all the sectors that she's been covering. I mean, in services, she has talked about the entire health sector, 5 medical hubs, medical tourism. In education, she's talked about 5 university cities. What are these university cities? They're education hubs where you have universities, you've got research parks, you've got manufacturing, all in those places. She's given a lot of attention to tourism. She's given a lot of attention to Ayush, 3 All India Institutes of Ayush. She's talked about sports and talked about a Khelo India mission. She's talked about the orange economy and the Indian Institute of Creative Technology and creating and setting up these creativity centers in 50,000 schools and 500 colleges. All this, I think, put together makes this a very, very, very strong budget pushing the services sector. And it's not that manufacturing doesn't get important. We are building on the work of the previous budget as far as manufacturing is concerned. The National Manufacturing Mission was announced in the previous budget. It is in the final stages and should get operationalized any moment from as we speak. And there you have biopharma, which is an add-on. You have the electronic component scheme, which is a build-up on an earlier scheme, which was announced last year. It was hugely successful. She's expanded it from 25,000 crores to 40,000 crores. There is a mention of a container program, huge emphasis on labor-intensive textiles, sports goods, and you can see the manufacturing builds on what was announced last time, and the new emphasis and focus is on services. We are not talking about health, education, etc. for servicing our population alone now. We are talking about making India a global services hub with, and she gave a very clear target, 10% of global services output to come from India. That's the goal she's laid out.
Yes, and that is why, in your words, this is a services budget. The finance minister laying out that aspiration of 10% of global services to come from India. But on manufacturing specifically, sir, I want you to put on your former Commerce Secretary hat as well. The expectation was that we would see a significant further import duty rationalization. That has not been the case. There are, of course, specific exemptions to specific sectors, for instance, nuclear power, cloud service providers, and so on and so forth. Do you believe that that hasn't been done on account of the fact that various FTAs are being inked and are at various stages of being implemented?
Look, we already now have FTAs with almost, 1/3 or more of the world economy. We've got FTA with EU, we have FTAs anyway with Japan, etc. We have FTA with UK. There is a deal in the pipeline with the United States. The FTAs are anyway going around cutting tariffs. The residual tariffs are now left with countries with whom we do not want to or may not want to get into FTAs. Having said that, look at the amount of time she has spent on the indirect taxes part. There's been a lot of tinkering. They're all removing pain points. Take electronic component. For warehouses, she's cut down the tax structure to 2%. She's allowed greater import for a large number of export-intensive sectors like leather, textiles. She's allowed, I think, 5% of their export value to be imported for a lot of other inputs which are there. So I think there's a lot of tinkering that has gone on to help manufacturing as far as inputs are concerned. And on the direct taxes side also, you'll see that a lot of direct taxes are targeting foreign direct investment. People are, the word may or may not appear too often, but you look at the safe harbor rules, the expansion of the safe harbor to companies up to 2,000 crore turnover and fixing the safe harbor at a lower rate of 15% actually is targeting the global capability centers. 1,600 GCCs are going to benefit from that safe harbor provision. They've also decriminalized a lot of income tax provisions in an act which is yet to come into place from 1st of April. So that's actually a very, very forward-looking step she's taken. And then she's also reduced the safe harbor for people who are going to take up presumptive taxation. So I think, and even for SEZ, she's given a one-off relaxation in being able to sell in domestic tariff areas. So rather than, the big things have already been done. What needs to be done is these minor pain points, and she's going around removing it. And the other thing is, she has talked about setting up a committee to look at the forex debt borrowing rules and regulations. So we have so far been focusing only on FPI, which is equity. She's focusing on debt as well. So as that committee comes out with its results, you will see an improvement in the foreign investment flows into the country also.
No, very important points. And I think that point on safe harbor is very well made, Mr. Subramaniam. This has been a point of friction. And I think the finance minister has alluded to some of those concerns and tried to allay them in this budget. But Mr. Subramaniam, there was another mention by the finance minister, and I'm wondering if you have any more clarity on what this restructuring of PFC and RFC could potentially mean, because those were the two companies that she listed out that are going to be up for restructuring. Any idea, sir, on what the plan is?
You see, I think that we will need a bit more clarity as we go along. But the way I look at it is, one of the challenges of Vikasit Bharat is also going to be sustainability. So there is going to be a lot of retooling of our energy sector. And the retooling of the energy sector requires a lot of green and climate finance. So this green finance, if it has to come through, it has to come through existing financial institutions rather than setting up new institutions. So when she talks about this, the way I would read it is enabling these companies to become the funnels for getting a lot of green finance, climate finance into India, into the energy sector, the transport sector, because climate change in India is going to be resolved largely through electrification of entire energy system. And who are the big financing agencies as far as electrification is concerned? REC and PFC. I think that's the way I would see that. I'd like to draw your attention to one more point, which people may or not. She talked about city economic regions. This is actually the work of NITI. NITI has prepared city economic region plans for Mumbai, Varanasi, for Visakhapatnam, for Surat, and we are going to release one on Bhubaneswar. 7, 8 more are in the pipeline. And she said, I will give 5,000 crores for city economic region in a challenge mode. This will then enable these cities to actually compete and become global cities like New York, London. So we can have Bombay becoming a New York, we can have Surat becoming, say, Amsterdam, you can have Visakhapatnam becoming a Singapore. I think that is the intent behind the city economic region announcement. The 7 areas of focus she announced in the beginning had city economic regions as one of them. So if this budget has to be remembered, A, services, removing a lot of pain points in taxation, both for foreign investment flows and promote manufacturing, particularly for exports. And the third is focusing on critical infrastructure in various parts, that is cities as economic regions. She's talked about 7 high-speed rail corridors, which means the bullet trains are going to stay. We're also going to produce bullet trains in the long run in the country. And the third is for Purvodaya, for the eastern region, a large number of announcements, and the most important one, a new dedicated freight corridor. Dankuni, please read it as Calcutta. Dankuni is the point at one end up to Surat. That's east-west. We have Delhi, Mumbai, we have Delhi, Calcutta. She's completing the triangle, Delhi, Calcutta, with a lot of other projects going with that. This is going to give a big boost to industrial and other services growth in Eastern India.
No, absolutely. You very comprehensively summed up many of the other important announcements that came in from the finance minister, of course, including things like a 10,000 crore rupee allocation for container building. That is another sector that has been identified. Also for ship repair, another sector that's been identified. Mr. Subramaniam, we will come back to you, sir. As we see that manufacturing competitiveness report finally being made public. But thank you very much for your first reaction here on CNBC TV 18 on the big day, the budget day, for comprehensively summing up Finance Minister Nirmala Sitharaman's 9th budget. Thanks very much. Lata, I know you've been waiting by for a quick clarification as far as the borrowing number is concerned.
Yeah, actually, the bank stocks are down and they're all worried that 17.2 lakh crore was not something the market was prepared for. It was outer limit 17, but our own poll was 16.2 lakh crore. It's several people expecting even lower. So that has rattled the market. Now, in the past, when we've had higher small savings, a part of that money has been used, even when it is not announced in the budget, for buybacks later in the year. So if, some 80,000 crores, 1 lakh crore is done by way of buybacks, this 17.2 may not be borrowed, and it may be closer to our poll figure of 16.2. The market will rest assured. But at the moment, there's no such guarantee. So when you meet the Revenue Secretary later on, perhaps this kind of a clarification will help. The 17.2 is disturbing the market. But all other numbers are extremely healthy. Only 10% of nominal GDP growth assumed. The market was prepared for 10.5 as well. The GDP will be recast. We may get a larger GDP number. So all those upsides are still left, and the bond market need not worry. But at the moment, these points are 17.2 is a bit of a worry, and that's casting a bit of a dampener on bank stocks, NBFC stocks. But there are positives for the rupee, not now, but in the longer term FDI flows for data centers and other advantages given. Mr. Kanabar, if you can quickly summarize that.
So, three things. First is the safe harbor, 15.5%. And while it is restricted to those with an income of up to 2,000 crores, it's a very good precedent.
For GCCs.
For GCCs, IT-enabled services, everybody, a good thing. Data center right up to 2047, foreign income totally exempt. If you are rendering services locally, use of Indian subsidiary, let the subsidiary pay tax on their profits, but overall foreign company not liable to tax. And finally, on toll manufacture, tax holiday for 5 years. All three are very, very welcome.
Which explains why ACMS is higher, because it's a tool manufacturing company. We now have Nilesh Shah of Kotak AMC and Navneet Munot, the CEO of HDFC AMC, joining us. Gentlemen, thank you very much for your time. Nilesh, the STT has killed the market's joy for now, but your first thoughts?
So undoubtedly, the STT increases beyond expectations of the market. But in some sense, it is the syntax of the market. 9 out of 10 retail investors were losing money. The benefits was mostly going to the HFTs. Undoubtedly, government had to take some step. We can only pay that STT and capital gain. STT was introduced in lieu of capital gain. With increased STT, the Honorable Finance Minister may look to reconsider capital gains taxation. But one important thing of this budget, the proposed capital expenditure at 12,10,000 crore is more than the net market borrowing program of 11,70,000 crore. I think this is first time in my life I am seeing that capital expenditure is more than the net market borrowing. I hope one day we'll be able to see a scenario where capital expenditure is more than net market borrowing as well as small savings.
I just had a question.
Well, even last year, the difference was not very much. I think it was about 10,000 crore. I mean, net market borrowing also was about 11 lakh crore last year. And we had expenditure, capex expenditure above 11 lakh crore. But yeah, go ahead.
No, I just want Mr. Kanabar, there's a question which is coming in. STT hike is only on equities, not commodities, right?
It's only equities.
Only equities.
Only equities.
Yeah, she said futures and options.
Yeah,
no, but on futures
and commodities have options as well.
Yes. No, it's only on
not on commodities. It is only on
so we they've just clarified that any interest that you pay to earn dividend income or mutual fund income will now not be allowed as a deduction.
So they had a 20% expenditure allowed by way of interest.
That's
on the dividend income. That's gone.
So that's the reason capital markets may be getting a little spooked.
Okay.
Because
actually,
no
I
deduction.
think the correction came from Delhi, and we have flashed it. It's not for commodities.
Okay. Sorry, could you just repeat that once again?
So today, if you have dividend income, if you borrow money and invest in a stock and you get dividend income, or you borrow money and invest in a mutual fund, and you get income from the mutual fund, the interest that you pay was allowed as a deduction up to a point.
Up to 20% of the dividend.
Now it's been removed.
Is that a big change?
Well, for those who are interested in passive income and who borrow to earn passive income, for them it's now no longer a option available.
Okay.
Well, to get back to markets, Navneet is waiting by. Thank you, Navneet. Any salve on a slightly wounded stock market sentiment?
Listed and unlisted.
Don't go by the immediate reaction. Markets are spooked because of the STT, but I think overall, what she mentioned in the first paragraph, reform over rhetoric, action over ambivalence, and people over populism, I think I would have summarized in a similar manner, but she herself said before presenting the budget. So I'm in a glide path towards lower debt to GDP, continued focus on infrastructure, which includes digital, physical, social, continue to, the ease of doing business, improving the quality of life to make the most of the demographic dividend. I think all of them are structurally positive, and particularly on the buyback, because all of us, Lata, we have been discussing that the cash is getting piled up in the corporate balance sheet. So either they do the capex, which I think some of the tax incentives on data center and few other things should disperse that, or you have maybe a way for corporates to use that cash and it comes back into the circulation, which can help the economy. So I'm pretty positive. Of course, I think there were more expectations on capital gains and to support the capital market, but we have to take that in stride.
Yeah, no, I agree with you. Actually, it's quite possible that, the positives are going to flow later. Investment in data centers. This is not going to come overnight, but the negative STT hits now. So, to that extent, the market is a little worried about the short-term negative, and it's quite possible the safe harbor that Mr. Kanabar mentioned on GCCs, all this could mean more services investments flowing into GCCs soon. I'm extremely gratified by the fact that aggressive assumptions have not been made on nominal GDP growth or on taxes. Therefore, perhaps extra borrowing will not happen. The borrowing, if anything, will be lower. Shireen, anything more to add from your guests?
I'm going to get my guests for a quick comment, but I wanted to get Nilesh, since we do have him. Nilesh, in the morning when you were with us, you said you were hoping for a Digi Yatra, a frictionless entry for both domestic and foreign investors. Has the finance delivered a Digi Yatra?
I think it is Digi Yatra in initial phase where there will be some glitches and some hiccups. As Navneet mentioned, a lot of proposals have been talked about for investment, but we finally need to get it executed. So let me say this is the first phase of Digi Yatra. There will be some hiccups, but you'll have to persist with it.
No, absolutely. We do have to persist with it. Let me get my wrap-up comments from our budget editors who've been patiently with us through the course of this month. Mr. Bajaj, let me start by asking you, on balance, if you look at the budget math, you look at the budget numbers, this government has delivered on its budget math. So how does it fare on that front? And on the intent and direction of reforms, what would you have to say?
So I would say on the budget numbers, the government has been very careful of giving the right numbers, which was a blame that the media would put on the government a few years back, which is not the case now. And if you see the growth in the total expenditure, the revenues, and even if you look at the fiscal deficit and the ambition that they've shown on debt to GDP is very, very limited. And I think on all these things, the government needs a pat on its back that it has not played around and tried to show in the budget something very nice picture. And at the end of the year, it doesn't come out to be true. I think what it has said, it can only improve from what it has said and not go lesser than that.
And on reforms and the direction, the path forward?
So reforms, I think, is now a continuous process, as the government and the PM has been saying that. So we've had the labor reforms, we've had the nuclear bill going through. I think it is a process which has been mentioned in this budget. For example, these two aspects I like to call out. One is the, which your Bombay guest said, on data centers and GCCs.
Yes.
These were two major demands. They are leading to a lot of employment, a lot of investment into the country. And these things were the real pain points for them. And I think it's a great step on the tax authorities to do that.
Absolutely, a good step there to allay those concerns. Mr. Jory, on balance, your big highlight of what this budget could mean for the economy.
I think on the indirect tax front, I would again call out manufacturing resilience. They've picked up on sectors that were affected by tariff tantrums, particularly labor-intensive ones. You have leather, you have textiles for which relief has been given. Also, futuristic and new age kind of industries where relief has been given. Some element of relief for climate change, nuclear energy, for example, has been given. Those projects have been given. So overall, I mean, the trust is fine. They've not upset the apple cart.
They haven't upset the apple cart. The final word to you, Mr. Chakrabarti. How do you walk away from our budget headquarters today?
Well, as one sees, it's very realistic budget. It carries on the assumption on the tax front worries me a little bit because it's 7.8% B&B. If the numbers that I see are correct. I guess perhaps that assumes some lower aggregate demand.
Okay.
And as you are saying, industry instead of heavy lifting is just doing lifting. I wish it does the lifting at least. And the demand on LTCG and STT goes away because that leads to, and buyback is also a very good step, because that money should actually go by way of dividend if they don't have money to spend, or actually put it in projects. Otherwise, a lot of shareholder money then is taken up by promoters and leads to inequality in the entire setup, which is a major concern, has been addressed. So it's a structural impact that makes on the overall inequality in the system. So in a sense, a very positive and right step. And if you ask me, as I had mentioned before, this high-level committee on banking, on the manufacturing side, on the infrastructure side, capex has been retained up to the level that could possibly be retained. And on debt side, yes, it's been kept within the limit. I always expected a glide path to be sharper. But however, there are real exigencies and expediencies.
But thank you so much, Mr. Chakrabarti, Mr. Jory, and Tarun Bajaj for joining us here on CNBC TV 18 through the course of the budget month and for being our budget editors. Appreciate your time. Let's go back to the markets now. Prashant.
Shireen, 170 lower, which means that, yes, there is slowly a bid emerging at lower levels. It has been there. And we've cut our losses in half. We're down 400 plus actually at the day's low, and we're down a lot lesser. Capital market stocks, etc. After the initial shock, after the initial impact, they're also all coming back. But remember, this is only domestic investors today, right? I mean, there is no FII in the market, no FPI in the market. So will that make a difference? In what way? I think there is one viewpoint, Samir Arora earlier telling us that. And of course, there is the other viewpoint that this is going to be a 48-hour thing, like many budgets have been in the past, and then we kind of sort of start to move away. You know, just to Mr. Kanabar, if I can ask you to just summarize, to your mind, right? I mean, directionally, what does this budget tell you, and what will stay with us beyond the 48 hours?
From a pure tax perspective, if I may tell you, Prashant, the new bill has just coming into law from 1st April, and we already have 90 amendments to that. Fortunately, all of them are very, very positive. A lot of simplification. So the TCS rate going down from 5 and 20% to just 2%, very, very welcome. Lower TDS rate to be automatic. You don't need to go to a tax officer and apply. One very interesting thing, which was on voluntary disclosure for foreign assets. So most of the software companies have people who go overseas, work there, get ESOPs, come back, and maybe they have not declared those ESOPs inadvertently, whatever. You now have to pay just 30% tax and move on with life. So again, very, very simplification, very welcome.
I mean, this would apply to, say, if you're working in India, say, for example, for a foreign bank, and you get ESOPs of the foreign bank.
No, other way around. Yeah, it could apply to any foreign asset.
But that would be typically declared, right? No, from if you're a working professional. Okay.
That people who go overseas for 2-3 years and have left something behind. We have seen examples where people have come back and have not declared whatever options they've got overseas. So those are the ones.
Sorry, Prashant, just to
CDMO, I feel that is important because many of the companies are APIs, you said, are in CDMOs. Ashok, you want to clarify which companies could benefit?
Yeah. So, you know, the legislation that seems to have got announced is that toll manufacturing will now get a 5-year tax exemption. So we have lots of companies in chemical, specialty chemical and pharma sectors that actually are now what we call CDMO producers, where they manufacture or develop products really for global companies, whether it is APIs or other products. Currently, they're doing it as a part of their existing entity. I mean, ACOMS is just one example of that. But there could be other companies like PI Industries.
Many of them.
Many of them, particularly in the chemical sector, specialty chemical sector. Now, ideally, what they would do is set up a separate subsidiary to do their export toll manufacturing. And if they do that, subject to seeing what the fine print says, then that income will be tax exempt for 5 years. Today, they're paying full tax on that. They're paying 25%.
It becomes competitive in that.
It becomes a competitive investment. In some sense, it may be coming out of the tariff imposition and saying, you know, what do we need to do to make our local companies competitive? But it's a very smart suggestion.
Actually, I wanted to toss that to Nilesh. Nilesh, you know, we are seeing some of the pharma companies and the CDMO companies doing well. Is this a hidden positive which the market's not noticing and it'll be positive for them?
Undoubtedly, you can always trust Ashok Bhai to bring out hidden gems. And I'm sure this is something market will notice for the pharma and CDMO space. Anyway, they have a positive momentum, and this will increase the post-tax profit in the hands of shareholders.
Okay. Navneet, any gem you noticed on these lines? I mean, pharma is doing well. Some of the CDMO companies could, if they, differentiate their exports and their domestic sales. You see any positives for any companies? I mean, buyback also is been made a little more attractive.
I think it's one balanced, beautiful budget. The big and I mean, global environment doesn't give us the flexibility to be really big and bold. I think we have to navigate the environment cautiously. But at the same time, I think it's been quite bold in terms of continuing the path of reforms. There's a lot of minutes spent on tourism in various ways, whether it's health tourism, medical tourism, whether the cultural and the spiritual tourism. I think we underestimate the potential of that, even from a job creation perspective. And also, I think the data center, it can really be very big. Data centers require power, land.
Navneet, I just have a question there. I mean, this data center, I was just thinking, right? If you were, say, for example, a Meta or a Google, right? Would you, and everybody's careful about data privacy, etc. Would they store their data in India for global customers?
Of course, I think we need that sovereignty and we need that, over a period of time to get these people and compel them for data localization, whether it's the sovereign or even the private sector. Over a period of time, we need sovereignty on this and must ensure that they put up their data centers here and both the public and private sector keep that data inside.
There's another thing, Nilesh, the announcement that there is going to be a high-level committee for banking reforms. We should read a lot into that, isn't it? Ownership and control, maybe the 26% voting rights, all that could be taken off. I mean, it's a high-level committee. They're laying a great store on building on what is now a very healthy banking system. Your thoughts?
Undoubtedly, to grow, you require investment. To make investments, you require a banking system which can channelize savings to investment. We are also seeing transition where savers are becoming investors. And if our banking system is not ready for future, Vikasit Bharat can never happen. I hope and pray this high-level committee on banking, which is a standing committee and not a one-time committee, discusses all these aspects with regulators, with participants, and with market. And we truly lay a foundation for Vikasit Bharat, which is enabled by its own banking system, its own savers.
Listening in, and when the data center thing was, you want to add something?
No, I think if you were to ask me before the budget, what were the two big opportunities, I would say GCCs and data centers. I've repeatedly said that. And in many ways, the budget has addressed both those quite adequately. The toll manufacturing is actually an add-on because we were all focusing on services. But I think there is recognition that in view of tariff and everything else, India needs to be more competitive.
This 40,000 crore allocation for electronic components, semiconductors, etc., right? That has been announced.
Yes.
Which is components as well, EMS, PCB assembly, box build, etc. I think meaningful increase in allocation?
Yeah, certainly meaningful increase in allocation, particularly because nobody was expecting this to happen.
But how does it come to the listed companies? We have to wait and see.
We'll have to wait and see.
Okay.
What the conditions are. We need to just see the preconditions that they need to satisfy. But I would argue if I look at the stock market and if some people have read it, then some people like Amber and Keynes seem to have been in the product range where this applies. Dixon had moved up when the initial announcement came and then seems to have corrected downwards. So perhaps their focus on iPhones is not getting the traction.
Mr. Kama, we interrupted you. The last word, quickly, if you want.
Just one other small thing. There has been this whole issue on tax litigation, where if an officer makes an addition, you got to pay 20% tax or before you appeal. That's now gone to 10%. Very, very welcome.
Okay. Well, thank you very much, gentlemen, for throwing light so quickly on so many things. I just want to add that the math of the budget is perfect. Our poll said 10.1% nominal growth. The budget has come with 10%. Our poll said 4.3% fiscal deficit. It's 4.3. Our poll said net borrowing will be 11.76. It has come at 11.7. So budget is not trying to be aggressive in any of the numbers. Back to you, Shri.
All right, thanks very much. The first reaction now from the CII, CNBC TV18 budget headquarters. Rajiv Memani, what did you like from what the finance minister delivered?
I would say that it's very much in continuation of the earlier budget. So you can see a very clear thrust on manufacturing and identifying the 7 sectors go after. A lot of MSMEs, on tourism, and also a lot of labor-intensive sectors. So I think you saw a focus on manufacturing and others, but we also saw a lot of focus on the labor-intensive sectors like tourism, textiles, and areas like that. And what I liked, Shireen, was that in earlier budgets, you always saw a number. This time, I think a lot of it was ecosystem, a lot of it was skilling. So, they're building those big blocks, and then the benefits that they've given to electronics manufacturing, the tax simplification on IT services and data centers, I think those are all very positive.
Positive. Vinayak Chatterjee, you've got a notebook out now. So in terms of numbers, the big takeaway for you on the capex side, high-speed rail, the big announcement coming in there as well, and of course, freight corridors.
So I'm not disappointed on the capex side because, I was looking at a high number, as you well know, and others well know, 14 lakh. And instead of that, we've got 12.2, which is an 11% increase in last year. But I'm not disappointed because as I was walking in, I was briefed that you shouldn't just take 12.2 at face value, add the grant in aid to states, which is that 50-year free money for infrastructure, and add many of the announcements on social infra, like, those 5 university townships and all of that. And you'll possibly come to a figure which might actually exceed my expectation of 3.5%. So let me do the maths and get back to you in the next few days. But what I liked about the budget was 2 very clear dominant themes in infrastructure. The first was a complete focus on rejuvenation of tier 2 and tier 3 cities of India, which are crumbling, and a lot of measures there. I won't take your time outlining them. And the second thing was a very major transformational agenda for Indian Railways, which is now forcing them to actually look and implement 7 high-speed rail corridors across the country. Now, remember, high-speed rail is just a shade lower than the bullet train. So 7 new high-speed rail corridors will be a transformational agenda for the Indian railway traveling public. And very quickly, there are few other 4 other sub-themes. Social infrastructure, many issues there. Coastal and inland waterways, once again resurrected. Financial restructuring, PFC, REC, and finally, specific tax benefits for nuclear, biogas and CNG.
Also the municipal bond measure.
Big, 100 crore incentive to a city that does 1,000 crore bond issue is a 10% incentive. I mean, it makes the whole bond issue very viable for the financiers. And it says that the scheme for smaller cities continues to exist under the Amrit scheme. So big fillip to municipal financing.
Okay, CB, the big takeaway for you?
So you heard some of that, but to me, I think India has stayed on the course of fiscal and economic prudence. I think the fiscal deficit, the debt to GDP ratio, these are very, very important global signals in today's world. I think I look at it, the macro picture, a good health of the economy and good prudence. That's one. Second, I think, when we talked about boost to the manufacturing and the SME, that was pretty much there, and that was pretty much required. But to look at who will finance it, the banks, and to look at and when we need bank consolidation, etc., etc.
So you believe that is why this committee has been set up, is to essentially look at the whole area of bank consolidation, public sector bank consolidation.
I would imagine so. That was the second big point that I saw. Vinayak spoke about infrastructure, but I see through that infrastructure, the cost of doing business, the logistics cost, and therefore our competitiveness to the world getting very well connected. The fourth part is I see sectors called out for which are job creating, and the way the focus on skills and connecting that to tourism, etc. I found that to be good, innovative, and last, I would think it is not forgotten about. While it talks about health, again, you see the connectivity to the future of health.
Yeah, the medical hubs,
tech, the AI,
and medical
all
tourism.
of that. I find that to be very, very, quite standing out features.
Okay, Mr. Mukundan, what stood out for you for Budget 26?
So, firstly, I think it keeps in what I've been highlighting, that this budget must be build forward budget, not a big bang budget. And it's been a big build forward budget, and especially focusing on external challenges on the external front. I think what they've done is to integrate even more tightly with the international market. And for that, what they've done, firstly, give a boost to exports, at the same time, get investments from overseas. When it comes to boost to exports, it is not just signing the FTAs, but also backing that up with custom elements. In addition to also the procedures, they focused a lot on procedures to make sure it is done. At the same time, I think this budget highlights two other areas which are focused, which is greening. If you look at the slew of measures which have been announced, each one of them is towards the biogas. When you talk about nuclear power, when you talk about the sodium anti-money for the solar panel, it is so focused on green products that it's very, very sharply towards greening. And lastly, I think Chandrajit already highlighted about skilling. There's a whole
in different sectors.
Not just different sectors. She's actually linking education, employment, and entrepreneurship for the first time, and bringing a holistic approach to how do we make this work.
Right. No, absolutely. Ratibimani, let me, before I know you're tied up, all of you need to be elsewhere, but very quickly on tax, buyback as well as the safe harbor changes that they've made for cloud services. How significant will that be to draw in fresh investment?
No, it's very good. So I think, let me go on the buyback side, it's not so
fresh investment, yeah, but it's to remove the pain,
remove the pain. That was a big demand. It was being taxed as dividend. Capital gains tax to a certain section, capital gains tax to promote. I think they kept somewhere between dividends and capital gains tax. Then you come to IT services. The big thing, and they've widened the definition of IT services. It obviously includes capability centers, software development, everything. They never knew what the transfer pricing would be.
Right.
And the earlier safe harbor turnover of 300 crores. They've raised that to 2,000 crores. 15.5% is a very fair number. I think they've put that. So I think anyone who sets up a global capability center or anything else, he knows that this is the transfer pricing regime that they're looking at. On data centers, actually, it's not so much safe. I think the entire I don't believe that it will be a 22-year exemption. I find it hard to believe. There must be 15 years within.
Sure. We'll have to look at the fine print.
That's big.
Yeah, that is big. Well, gentlemen, unfortunately, we are out of time for now, but we'll keep coming back to you for more on the fine print. But let's go across to the big man, Amitabh Kant, with us as well. Mr. Kant, your first read of Budget 2026.
Well, I think it's fiscally a very prudent budget, because these are very complex times. We are in the midst of a huge global disruption. There's a lot of geopolitical fragmentation. And for the finance minister to have kept the fiscal deficit at 4.3%, to have kept brought down the debt to GDP ratio and yet push the capex spend to 12.2 lakh crore, I think to my mind, it's a very, very sensible, rational, and a very progressive budget to my mind. But the important thing is really that she's given a push to both manufacturing, which was critical, and given a huge push to infrastructure in our budget. And, this focus on providing cities with 5,000 crore per city for economic region, and the 7 high-speed rail corridor which will link up the growth connectors, as they call it, should eventually give a huge focus to urbanization in many ways. And if you look at what she had announced last year, which should get implemented this year, is the 1 lakh crore schemes for urban rejuvenation through the challenge. All that put together should add a big thrust to urbanization as well. So manufacturing, infrastructure, urbanization are really the big focus. But one thing, I think the standout of this entire budget is if you look at investments across the world, 70 to 75% of the investment is getting into artificial intelligence and data centers. So I think the really smart move in this entire budget is the 100% tax exemption to data centers till 2047. It's quite an incredible move to my mind. And this should really push not merely data centers, but AI, the use of Indian data, computing power, all that to India.
In fact, Rajiv Memani here just commented that he couldn't believe that it is a tax-free period of 22 years, and perhaps there will be something there in the fine print that we'll have to see. But Mr. Kant, you know, the number flashing on our screens is 80,000 crores in disinvestment, and the government is so, you know, the last few years been very measured on its disinvestment target. The question is, are they factoring in IDBI Bank? Fairfax is one of the front runners. What do you think?
No, they should push for, I'm a great believer that the government should push for disinvestment in a very big way, including IDBI. They should also push for 2 other banks and an insurance company, which was announced a couple of years back. They should push for asset monetization in a very big way. I'm a great believer in free enterprise. India can't grow at rates of 8 to 9% for 3 decades without the private sector accelerating the pace of growth. And the government needs to get out of some of these areas of growth. So pushing this target of 80,000 crores is good. I think it should be, we should push for many more government companies to be privatized and much more of asset monetization to take place.
Well, yes, that is certainly the hope. But, you know, if I were to ask you whether this budget does enough in the near term, Mr. Kant, to try and draw back both portfolio investors as well as strategic investors, FDI, in the medium to long term, yes, many measures that you spoke of, but does it change sentiment in the near term?
Well, the budget talks about, you know, you need predictability and consistency of policies. That's critical from an investor's viewpoint. So when she talks about, when the FM talks about reform of FEMA, the non-debt instrument rules, she talks about customs reforms and making it trust-based. She talks about rationalization of duties there. And she talks about a high-level committee for financial sector reforms. And she talks about the new income tax act being implemented from the 1st April. So if you put all these together, then you're pushing for an easier, you're making for easy, far greater level of easiness and simplicity in the tax regime. I wish she had also announced that the custom slab rates will be brought down to 3 rather than 8 right now. And I wish there was more focus on the cost of competitiveness, because the cost of competitiveness is critical for India in the long run. All these are critical, but she's pushed quite a bit in terms of
we'll chat about some of those. We'll chat about some of those issues left on the agenda, but Ramdev Agarwal waiting by. Prashant, over to you.
Well, okay, I'll take it over from here. Shireen, Ramdev Agarwal, thank you very much for joining us. First thoughts, Ramdev, the market sulking over STT, but after it gets over, are there positives?
Yeah, I think total highlight is the data center tax benefit for next 22 years. That's the key highlight, because data center is the biggest infra build all over the world. Biggest, like running into trillions of dollars. And we were not participating at that force. And now with this, it looks that doors are open for the AI, the impact of AI coming into India. And we want to make India as an AI factory of the world. And hence, this is the first initiative. And I think it's a very laudable one. I remember the software boom happened in India in 90s because of the STP benefit which they gave, where 10 years it was tax-free. So I think it's a very powerful tool to attract the investments. India has the lowest cost of power, lowest cost of infrastructure, and very large AI population. So I think it's a very significant one, and it has a lot of correlations in terms of which are going to be the beneficiary. Because you need a lot of air conditioning, you need a lot of cables, you need a lot of construction, real estate construction. So let's see, I mean, how it happens and what kind of, at what size the data centers start coming up all over the country, wherever there is excess power. So it can fire up massive capex because it's very capital intensive. So it can fire up very large capital spending projects if it is handled well.
Mr. Agar, Ramdevji, good afternoon. The only thing is, I was talking to somebody who works in the field who was saying that this is, and the tax experts told us, it's a data center providing cloud services for foreign companies. for local income is taxed. It is foreign companies. So this this consultant who was talking to was saying, how will they, data sovereignty is such a big thing that, like, for example, India wants its own data within its borders. So how is this going to, maybe the policy detail will have something, but Meta is not going to set up a data center to service its American customers, right? Because they want American data in America. So how will this really work or benefit? That's the only question which was raised to me by somebody.
Yeah, so I think I also don't have any more detail than what I've heard here. But America is not the only country in the world to use AI. I mean, any people.
Any company, any country, any
300 million people.
Yeah.
Any country. So we could be supplying to non-American or non-European destinations. For Nepal, Bangladesh, Pakistan, your entire Middle East. I think this is a place where you should have the data center and the services manufactured here. So there are enough geographies where who cannot set up their own data centers would be finding it here to be set up the possibility. But those are different issues, Prashant. Right now, the issue is that this is a very big initiative, and whatever changes are to be made in terms of taxation change, I think that will come through.
Yeah.
I mean, I don't see any reason why you tax a data center serving to the foreigners and not to the domestic users.
Yeah, I take your point on that. That is one advantage.
Just one thing, Gokul Das, if you can pull up Gokul Das, I'm not sure there's something, as the day goes by, as always happens, more and more details come through. Gokul Das is up 10%. I mean, it surged to the day's high, above 600 rupees. Just wanted to highlight that. Go on, Lata.
No, I agree with you, because she has been speaking about textiles and the advantages they get. So we have to go with a fine-tooth comb to see how Gokul Das may be advantaged. Ramdevji, that's exactly what I wanted to ask you. The companies which do CDMO, kind of completely knocked down and then re-exporting, especially from SEZs, they are getting not a 5-year but a 10-year tax holiday. There are some nuggets like this, and there are companies like Keynes which are doing very well. Likewise, the API companies are doing very well, probably because of this. Can you notice sector-wise any advantages from the budget speech?
No, actually, I got spooked with the capital market proposals, about the STT and the impact of that in the market. So that was one part of it, and the buyback relief for the retail investors.
Yes,
that was one part of it. Third was this. I mean, what I saw about this data center exemption. This is very big, and I think it dwarfs every other proposal of the budget. Okay. This itself is a 1,000-pound gorilla.
Okay. What about NRIs allowed to come into PMSs in India? Would that look very big?
Which one?
NRIs used to buy shares directly. Now they can put money in PMSs in India. What they call PROIs. The NRI word is permanent resident outside India. There seems to be a lot of concessions for them to come through PMS companies. Has that been noticed by your team?
Yeah, we saw that, but they're all at the margin. If markets do well, if the earnings come through, I think these things are going to help, but they're marginal in the sense that I don't think that's going to have that much of an impact in the short run.
Okay.
By the way, this Radhaji, from your broking business, broking business head and team, etc. Any feedback on this STT?
Yeah. So good. One thing is that today is Sunday. All the institutions are closed, local as well as global, and FIs are definitely out of the market today. So real impact of this will be seen tomorrow in terms of how are they thinking about this particular thing, because a lot of marginal trades will become unviable. So the high frequency traders, for them it will be unviable. A lot of it will be unviable. Second, there are a lot of products, arbitrage products, where a lot of money is there. Those will become unviable, and hence there will be a lot of redemption in those products whenever this new regime comes in.
Okay.
So the market will get less leveraged and less liquid. So the impact on the market will be a little more bearish because of this particular provision, because the sheer viability of a lot of trades will not be there. So we'll see the full impact of it tomorrow. Good thing is, I think these things are applicable only from 1st April. So we have some time for the market to adjust.
Ramdevji, FIIs, when they come back tomorrow, will they press the buy button or the sell button?
That is for you to decide.
No.
I don't think this is a buy.
Yeah.
This measure is not a buy measure. So obviously, one has to figure out how much they sell, how furious they are. Basically, it all depends on. In any case, they were on an exit mode. So will it trigger further exits? Because right now the global market has so many stress points. This is not opportune time to actually give one more headache to them. You know,
Okay.
This is a time to keep them at least peaceful at home, and not trouble them, because they are already suffering from.
And you were saying that this at the margin, and you're Ramdevji, and you're saying at the margin this will trouble them. You're saying how furious they are. We'll have to see. Yeah.
That we'll have to see tomorrow only. I mean, right now, my information is not that much more. I can just speak to some of my traders here, because those guys are actually on holiday. Today is Sunday.
No, I get it. Ramdevji, there's one more.
No, only tomorrow. I hope the impact is minimal, because we have still got 2 months' time for it to get implemented. So tomorrow itself, they don't have to do anything. But incrementally, I don't think it's a very positive measure for their activities in India.
Okay, just a final question to you, Ramdevji. Excise duty, union excise duty, according to the budget papers, budget at a glance, is rising by 6%. Now, union excise duty is applied only on oil marketing, right? Oil products. So do you think this is going to look like OMC negative? Usually, the excise duty in a typical year rises by maybe 3%. This is 6%, the total kitty.
Okay, so they might be expecting 5-6% volume growth during the year. At current prices, they might be expecting 5-6% volume growth. Or maybe some mix change or something like that. So 5-6% doesn't look that alarming.
Okay. Well, we've got some more guests joining us. Rajiv Anand, the Managing Director and CEO at IndusInd Bank. Nirmal Jain, founder of IIFL Group. Gentlemen, thank you very much for your time. Rajiv, two things for banks. One, the borrowing number, 17.2 lakh crore. First, your thoughts on that.
I think it's a little higher than expected, but one would imagine that RBI will manage as they have every year through a mix of OMOs and switches. So I don't think, yes, the gross borrowing program is a bit of a concern, but I think if you look at it at a net number, the numbers don't look alarming. I think more importantly, the fiscal math at 10% nominal looks very, very credible. And I think there is a little bit of leeway in terms of non-tax receipts as well. Yes, I think in the very short term, a little negative, but yeah, and you will probably see yields going up a little bit on Monday. But I think that should adjust itself over a period of time.
No, I agree with you completely. The fiscal math is excellent. No aggressive assumptions. And then there is this banking committee they have appointed to suggest reforms ahead. Is that looking like a very big positive? I mean, ownership, voting rights, everything could be up for changes?
I think those are the two big ones, isn't it? I mean, I think there's been a lot of debate around ownership of banks, here in India, and this disconnect between ownership and voting rights. I think that will form the crux of how the banking industry in India will get built over the next 25 years. We've begun to see, the first cut of that. We've seen a couple of transactions where there's been a fundamental shift in the way that the regulator has thought about the SMBC Yes Bank transaction and the Emirates RBL transaction. Is in a sense showing you the way that the regulator is thinking about these issues.
Ramdevji, if I can come to you, there's one specific thing, which is dividends from mutual fund cannot be set off against dividend income cannot be set off against interest paid on borrowings. Is that I was just checking with the tax expert. Is that a big thing? Will that have a big impact
within mutual funds?
No, dividend from mutual funds. You could have set off up to 20% against interest paid on borrowings. That has gone away. That is what our tax experts, Dinesh Kanabar and Ashok Wadhwa. So I'm just thinking, will this apply to like leverage trades and all? People borrowing to, and this will be largely for investment companies and HNIs, etc. But could it have a big impact?
I think it's very individualistic in the sense that who is doing leverage trade and those kind of guys, they will not get the break against the dividend, what interest they're paying. So you have to pay tax on that. So I think it will be very marginal. For most of the guys, overall aggregate, I don't think it's big.
Okay. Nirmal Jain is with us as well. Nirmal, if you can come in on this particular aspect, interest cannot be offset against dividends you get on mutual funds. Any thoughts here?
I mean, it's a little negative because 20% what was allowed earlier, so it might increase tax liability a little. But I mean, the overall scheme of things, this is not a significant mover or shaker in the market.
Okay. You know, what I'll do is, I have more questions for both Nirmal and Rajiv. Ramdevji, thank you very much for joining us right now. So, and you have a busy day ahead, so we'll see you later. We'll just take a very quick break here. Come right back with Rajiv Anand and Nirmal Jain.
भाई भाई, do you know any cool bank जो digital first हो?
SBI coolest है.
What?
Digital loans 30 मिनट. AI models 140 plus. Yono users 9 करोड़. Daily UPI transactions 33 करोड़.
Cool तो है.
चलो. SBI, the banker to every Indian. Truly.
This is Network 18, and you're watching CNBC TV 18.
In the heart of the jungle roams the finest creature, and through the chaos of the sparkling city lights, I am reminded of the timeless valor of the majestic tiger. In life's wild journey, we have one shot to thrill. And when done flawlessly, we unwind and allow our spirits to rejuvenate. Royal Ranthambore, India's finest, yet.
This is Network 18, and you're watching CNBC TV 18.
Luxury, heritage, and valor are timeless. Let them grow on you. Royal Ranthambore, India's finest, yet.
This is Network 18, and you're watching CNBC TV 18.
Luxury, heritage, and valor are timeless. Let them grow on you. Royal Ranthambore, India's finest, yet.
महिला वित्त मंत्री के रूप में निर्मला जी ने लगातार 9वीं बार देश का बजट प्रस्तुत करके नया रिकॉर्ड बनाया है। ये बजट अपार अवसरों का राजमार्ग है। ये बजट वर्तमान के सपनों को साकार करता है और भारत के उज्जवल भविष्य की नींव को सशक्त करता है। ये बजट 2047 के विकसित भारत की हमारी ऊंची उड़ान का मजबूत आधार है। साथियों, आज भारत जिस रिफॉर्म एक्सप्रेस पर सवार है, इस बजट से उसे नई ऊर्जा, नई गति मिलेगी। जो पाथ ब्रेकिंग रिफॉर्म्स किए गए हैं, वो एस्पिरेशन से भरे हुए भारत के साहसिक, टैलेंटेड युवाओं को उड़ने के लिए खुला आसमान देते हैं। ये बजट ट्रस्ट बेस्ड गवर्नेंस और ह्यूमन सेंट्रिक अर्थरचना के विजन को साकार करता है। एक ऐसा यूनिक बजट है जिसमें फिस्कल डेफिसिट कम करने, इन्फ्लेशन कंट्रोल करने पर फोकस है और इसके साथ ही बजट में हाई कैपेक्स और हाई ग्रोथ का भी समन्वय है। साथियों, ये बजट भारत की वैश्विक भूमिका को नए सिरे से सशक्त करता है। भारत के 140 करोड़ नागरिक फास्टेस्ट ग्रोइंग इकोनॉमी बनकर ही संतुष्ट नहीं है। हम जल्द से जल्द दुनिया की तीसरी सबसे बड़ी अर्थव्यवस्था बनना चाहते हैं। ये करोड़ों देशवासियों का संकल्प है। दुनिया के एक ट्रस्टेड डेमोक्रेटिक पार्टनर और ट्रस्टेड क्वालिटी सप्लायर के रूप में भारत की भूमिका लगातार बढ़ रही है। हाल में जो बड़ी बड़ी ट्रेड डील्स भारत ने की है, मदर ऑफ ऑल डील्स, उसका मैक्सिमम बेनिफिट भारत के युवाओं को मिले, भारत के लघु और मध्यम उद्योग वालों को मिले, इस दिशा में बजट में बड़े बड़े कदम उठाए गए हैं। साथियों, इस बजट में मेक इन इंडिया और आत्मनिर्भर भारत अभियान को नई रफ्तार के लिए महत्वाकांक्षी रोड मैप प्रस्तुत किया गया है। इस बजट में नई उभरती इंडस्ट्रीज यानी सनराइज सेक्टर्स को जिस मजबूती के साथ समर्थन दिया गया है वह अभूतपूर्व है। बायो फार्मा शक्ति मिशन, सेमीकंडक्टर मिशन 2.0, इलेक्ट्रॉनिक कंपोनेंट मैन्युफैक्चरिंग स्कीम, रेयर अर्थ कॉरिडोर का निर्माण, क्रिटिकल मिनरल्स पर बल, टेक्सटाइल सेक्टर में नई स्कीम, हाईटेक टूल मैन्युफैक्चरिंग को बढ़ावा, चैंपियन एमएसएमई तैयार करना, ये फ्यूचरिस्टिक है, देश की वर्तमान और भविष्य की आवश्यकताओं का ध्यान रखती है। एमएसएमई को, हमारे लघु और कुटीर उद्योगों को जो समर्थन इस बजट में मिला है वह उन्हें लोकल से ग्लोबल बनने की नई ताकत देगा। साथियों, बजट में इंफ्रास्ट्रक्चर को मजबूत करने के लिए कई बड़े कदम उठाए गए हैं। डेडिकेटेड फ्रेट कॉरिडोर, देश भर में वाटरवेज का विस्तार, हाई स्पीड रेल कॉरिडोर, टियर 2 और टियर 3 शहरों के विकास पर विशेष ध्यान और शहरों को मजबूत आर्थिक आधार देने के लिए म्युनिसिपल बॉन्ड्स को बढ़ावा, ये सारे कदम विकसित भारत की यात्रा की गति को और तेज करेंगे। साथियों, किसी भी देश की सबसे बड़ी पूंजी उसके नागरिक होते हैं। बीते वर्षों में हमारी सरकार ने देश के नागरिकों के सामर्थ्य को बढ़ाने पर अभूतपूर्व निवेश किया है। हमारा प्रयास स्किल, स्केल और सस्टेनेबिलिटी को निरंतर बल देने का रहा है। जैसा कि आज पार्लियामेंट में निर्मला जी ने कहा है, यह युवा शक्ति बजट है। उसमें युवा की सोच भी है, युवा के सपने भी हैं, युवा का संकल्प भी है और साथ साथ युवा की गति भी है। बजट में जो प्रावधान किए गए हैं उससे अलग अलग सेक्टर्स में लीडर्स, इनोवेटर्स और क्रिएटर्स तैयार होंगे। मेडिकल हब्स के निर्माण से, एलाइड हेल्थ प्रोफेशनल्स के माध्यम से, ऑरेंज इकोनॉमी यानी ऑडियो विजुअल गेमिंग को बढ़ावा देकर, पर्यटन को प्रोत्साहन देकर और खेलो इंडिया मिशन के माध्यम से युवाओं के लिए नए अवसरों के द्वार खुलेंगे। भारत को दुनिया का डेटा सेंटर हब बनाने के लिए टैक्स में बड़ी छूट की घोषणा भी की गई है। मैं भारत के युवाओं को विशेष तौर पर इस बजट की बहुत बहुत बधाई देता हूं, क्योंकि इससे एम्प्लॉयमेंट जनरेशन को बड़ा बूस्ट मिलेगा। मुझे बहुत खुशी है कि इस बजट में टूरिज्म और विशेषकर नॉर्थ ईस्ट में टूरिज्म को बढ़ावा देने के लिए भी ठोस कदम उठाए गए हैं। भारत के अलग अलग राज्यों को ताकतवर बनाकर संतुलित विकास की नींव भी इस बजट में मजबूत की गई है। साथियों, हमारे देश में 10 करोड़ से ज्यादा महिलाएं सेल्फ हेल्प ग्रुप से जुड़ी हैं और बड़ा सफल अभियान रहा है। महिलाओं द्वारा निर्मित, महिलाओं द्वारा संचालित सेल्फ हेल्प ग्रुप्स का आधुनिक इकोसिस्टम बने, बजट में इसे प्राथमिकता दी गई है। कोशिश यही है कि हर घर लक्ष्मी जी पधारे। हर जिले में छात्राओं के लिए नए हॉस्टल बनाने का अभियान भी शिक्षा को सुलभ बनाएगा। साथियों, भारत की कृषि, डेयरी सेक्टर, फिशरीज, इन्हें हमारी सरकार ने हमेशा सर्वोच्च प्राथमिकता दी है। इस बजट में भी नारियल, काजू, कोको और चंदन की पैदावार से जुड़े किसानों के लिए अनेक अहम कदम उठाए गए हैं। भारत विस्तार एआई, इस टूल से किसानों को उनकी भाषा में जानकारी मिलने से उन्हें बहुत मदद मिलेगी। फिशरीज और पशुपालन में उद्यमिता, उसको बढ़ावा देने से गांव में ही रोजगार और स्वरोजगार के और ज्यादा अवसर बनेंगे। साथियों, ये बजट एम्बिशियस भी है और ये बजट देश की एस्पिरेशन को भी एड्रेस करता है। मैं एक बार फिर निर्मला जी और उनकी पूरी टीम को इस फ्यूचरिस्टिक बजट के लिए, संवेदनशील बजट के लिए, गांव, गरीब, किसान का कल्याण करने वाले बजट के लिए बहुत बहुत बधाई देता हूं। बहुत बहुत धन्यवाद।
Well, that is the Prime Minister in this, address right after the budget. Every budget, of course, he comes through highlighting what the Finance Minister has announced, and of course, congratulating Finance Minister Nirmala Sitharaman for presenting her 9th budget. It's a record in terms of, as finance ministers go. Rajiv Anand is, of course, been waiting by. Rajiv, good afternoon, Prashant here, and thank you for waiting patiently. Anything else comes to mind? Latha, of course, asked you a few things, but what do you think the net effect of all of what has been announced is going to be on sort of pushing through high rates of credit into the system. That'll depend on demand for credit. What do you think this does?
Two things, Prashant. One is, apart from everything that's been said about increased capex and data centers, etc., that we've been hearing all afternoon, I think two things. One is the big focus on MSMEs. The fact that the government will now start to provide capital for MSMEs as well. I mean, typically what happens to MSMEs is capital is raised from internal, friends and family. Now there will be a pool that will be available from the government as well, which is certainly positive. A bigger focus on trades, I think, is a huge positive. One of the things that MSMEs suffer from somewhat is delayed payments from government entities, and therefore choking working capital. And this will, certainly help that as well. So I think, for banks like us who are looking to build out a large MSME franchise, I think all this is very positive, because I think the underlying pool of available borrowers will only increase going forward. And the second is, I think one of the big issues that the markets have been facing is the higher and higher levels of borrowing from state governments. I think the fact that now 41% of devolution based on the Finance Commission is now going to the states, I think to that extent will certainly assuage some of these concerns. So I think those are the two that I've not heard much about, so which is why I wanted to highlight those.
Rajiv, hi. Do you want to comment on the overall gross borrowing number of more than 17 lakh crore? It may lead to yields remaining high, treasury income gets hit. Do you see this as an issue for a bank?
I think, like I mentioned to Lata as well, that I think the gross borrowing program is slightly higher than market expectations. But I think year on year, every year for the last 3-4 years, the RBI has done a fantastic job in managing, that demand supply situation and yields. So I do expect them to come in with OMOs and switches to be able to manage the volatility as far as yields are concerned as a result of this. Remember that the net borrowing program continues to be well contained as per market expectations.
Rajiv, thank you very much for staying with us on this important day. And I'm sure as budgets go, more details, etc., will come through. But I think the bigger thrust you've given us, directionally speaking. Thank you very much for joining us. Pankaj Tibrewal is with us, founder and CIO at Ikagai Asset Managers. Pankaj, I think there are lots of positives, no doubt. As Rajiv is pointing out, others have pointed out as well. But this STT bid is just, I think more than anything else, it's the timing of the thing, right? Which has taken a bite out of the sentiment at this point. Just your first thoughts, first impressions, and then we'll get down to specifics.
So, Prashant, I think market has overreacted on this because of maybe the prevailing sentiment right now. If you look at the ballpark number, it will get about 20-25,000 crores. So one way you can argue that for that 20-25,000 crore, it was not necessary at this point of time because the sentiments were quite fragile, both domestically and globally. And India has been one of the worst performing markets. But you'd slightly take a medium-term view and look at the past. I think in the near term, there's some volume reaction which may happen at the exchanges and by speculators. But over a 3, 4, 6 months period, history suggests that things starts to get normalized. So I'm not very concerned.
Who's there?
I think market has been, expecting a little bit of tweaking out on long-term capital gains and short-term capital gains. That has not happened. But overall, if you ask me, it's quite a pragmatic budget. You remember, Prashant, always in the past, the first half an hour, 45 minutes, we used to talk about rural, farm, and that used to take a lot of time. If you notice this time, it was all about manufacturing. And the rural part was just a very small mention in the entire speech. So I think the focus clearly reflects that is moving from farm to what means for the actual economy. And a lot of mention about AI, data centers, new age technology, and manufacturing. So I think it's quite a pragmatic budget, if you ask me. It could have been worse on taxation, but nothing, no bad news is good news in my view. So I would take it saying that markets will digest it over the next couple of days and think that it is not as bad as it is made out to be on the screen today.
Okay, Pankaj, stay with us. In the morning, we promised that we will get you both the two big exchanges, right? NSE we beamed out of in the morning. We rang the bell from the NSE, and now Mangalam is at the BSC covering the full ground. Vikas Khemani is with him. And there are a few other guests as well, including N.J. Kumar. Mangalam, take it away.
That's correct. So we do have with us the three wise men of the market. We have Rahul, we have Vikas, we have Jakes as well. We come to you from the Bombay Stock Exchange after beaming live from the National Stock Exchange this morning. Gentlemen, the overarching reaction so far has been that it is a balanced budget. The only fly in the ointment was the increase that was there in the STT in futures and options. Now that, there has been some analysis done on some of the fine print of the budget as well, the net borrowing, the gross borrowings, etc. What are the actionable ideas and what are your initial thoughts? Vikas?
I think so. This budget has to be seen in the light of the last year's budget when there was a huge income tax rate cut and GST cut happened during the year. So the maneuverability of the finance minister is kind of limited in that sense from a tax collection perspective. And within that, I think she has done a good job. What I like about this budget is, of course, there's a huge focus on the manufacturing side in the EMS, textiles, semiconductors. So I think entire manufacturing space has been addressed with a reasonably good boost, and it comes also in the context of current FTAs with different countries. So I think it's a very, very good initiative they have taken from a manufacturing side. Secondly, if you see our capital expenditure has gone up. Defense expenditure has been, budgeted more than about 18-19%. Railways is up about 10%. Roads. So I think public capex is also a good increase, which is I think positive. Also, first time I think Minister has talked about a big focus on the services industry. Where she has put a vision that how do I attract medical tourism, how do I attract tourists, and overall target 10% of the world services market. That's the kind of vision. So they've kind of given a roadmap in terms of how she wants to achieve that. And few things which have been missed or probably not well appreciated, that they've given tax incentives for data center till zero corporate tax for 2040, still 2047 on data centers. Gift city tax holiday has increased from 10 to 20. So a lot of measurements have been done to do improve the ease of the business. Yes, of course, disappointing factor is, in my opinion, STT increase, which was not required. There's a widespread demand of the industry that long-term capital gain tax and STT both should not coexist because they were alternative to each other. But today, in reality, we have both of them, and without getting any credit of STT, which is a very, very big dampener. Something was definitely expected on the lines of liquidity improvement in the system, which probably can come outside budget also. But today we are sitting on a poor sentiment from a FI perspective. Some amount of measurement or initiative or discussion could have been kind of welcome on that. But net, I would say it's a good budget, and it's continuation more of same of their past policies, and with a little bit of things I talked about have been taken care.
Jakes, given the current sentiment, do you think more of the same is good for now, or there could have been a lot more? Do you think it's a missed opportunity?
So I think you could look at it both ways. One is to say that here's a batsman who's got a century there. Can you go for a double hundred by the singles and an occasional boundary, or do you need to be, because you've achieved 100, you've achieved everything? I think the message being given is that there's a long way to go. So all your targets are 2047, 2031, 2035 kind of dates for things to be achieved. I agree with Vikas in that a lot of, should I say, pylons have been put into the ground, to be able to build something on top of it over a period of time. I'm really bullish about this entire digital highway, digital infrastructure that's being sought to be created, which now includes data centers, which includes telecom infrastructure, and the kind of incentives that have been now laid out for people to make investments over a 2-decade period. I think that's the big thing. Two, FIs have been an integral part of the market. So to the extent that their, if you will, grievances have not been addressed, is an ongoing saga. But to my mind, there has to be one or two areas that you need to, to get up from the table and say has not been addressed, because it might be something for the future. Domestic liquidity improvements, RBI continues to do. The fiscal push is coming from the government in that sense. So I'm reasonably okay with it. A couple of flies in the ointment, if you will, which is things like the STT. Because if the idea was that it should be a deterrent rather than a revenue generating tool, which I'm beginning to understand will be the kind of logic that they will give you, then really there needs to be net worth and other criteria to keep people away. You can't make it accessible to one and all and yet say that
you're going to have a continuing increase in STD charge. That doesn't make sense.
I think the sale of loose cigarettes and then taxing them as
Exactly.
earlier pointed out.
So I think the narrative there needs to be more clear. It is a deterrent. We don't want people to come in except through mutual funds, and therefore either contract size, etc., can go up. Other than that, I feel the biopharma initiative, for instance, and if you look at overall, some sectors are hugely benefited from a weakening rupee, etc., which is outside the budget, and they continue to get thrust, like the biopharma, as I said, is one, or infrastructure, the data centers, etc., and the attraction of services. So all in all, some repetition to what he said, but this is really the take.
Rahul, tomorrow when the market opens full steam, what would be the 2 or 3 things that you would do given the current budget? What sectors would you deploy in, and what sectors would you take the money out of?
So, from a client perspective, correct, like what Vikas also said, like Jex also said, that manufacturing and infra has got a good push. So, those are the sectors which someone should look out for. Pharma and hospitals, because there has been medical tourism which has been announced. And also real estate sectors which support data centers from power, etc. I think these are interesting sectors to which I would look out for. And something which you should get away from, I would say defense versus expectation, which has not been up to the mark, is one thing which you can look out for.
All right, take that point. Thanks a lot, gentlemen, for joining in. Those are the 3 wise men at the BSE. I'll toss it back to you guys in the studio, Nigel, for the markets, with a promise that we'll shortly get the leadership at BSE to join and comment on the increase in STT as well. But for now, it's back to you guys in the studio. Nigel.
Well, thanks a lot for that, Mangalam. We'll wait for that chat with the BSE chairman. But for the time being, let's do a quick market check. Well, I think, the motto of today, or the takeaway today, is keep your expectations low. Because the defense stocks, the expectations are very, very high. To be fair, the street actually got what it wanted. But just take a look at the defense index. That's down close to around 4.2%. And whether you're looking at BEL, Bharat Dynamics, HAL, all of them should come up for you on the screen. Well, they are under some pressure in today's trading session. However, the jeweler stocks actually are spiking up because there was a buzz that there could be some duty that will be imposed on gold. So you have Titan that's seeing a bit of a relief rally. Kalyan Jewellers as well, that should come up for you. Expectations were that, maybe we'll see a bit of a hike. That's not come about. So that's why those stocks are seeing a relief rally. The stocks that are getting absolutely hammered is on the back of sentiment getting hit. STT's hike, that's come out of nowhere. You were hoping for some kind of leeway with regard to capital gains tax. That's not happened. In longer term, you'll say, well, it prevents any kind of futures and options trading, but and it'll help in terms of larger amount of money going to mutual funds, but that for another day. For the time being, whether you look at Angel One, BSC, CDSL, all those marketplaces, they're under pressure. The gross market borrowing number, that came in at more than 17 lakh crore. And that seems to have spooked some of those PSU banking names because you have PNB, SBI, both of them are under some pressure. Remember, the yields could move up. And that's why, in fact, you are seeing some kind of selling pressure on those names as well. Moving to the data center plays, they're really the toast of the day. Whether you look at NetWeb, Orion Pro, that stock is up. You have E2E networks as well. All of them, they're in a world of their own, getting anything between 5 to around 7% in today's trading session. Big move is what we're seeing out there. And the EMS companies, they have seen a sharp correction from the top. But the allocation to the component PLI out there, that's been doubled, nearly 2 times to around 40,000 crores odd, if I remember that number correctly. So you have a few of these stocks. Dixon is under pressure, but Amber you pull up, that stock's doing quite well in today's trading session, and a few of the other names as well. The sector that's, the IT stocks as well. There's a bit of tweaking that's taken place, and you have the rules for buyback as well. That's, more or less eased out. So because of that, you have a few of those names that are doing quite well. Wipro is doing pretty well in today's trading session, but let's wind it up with a sector that's losing big today, which has actually rallied big time in this month so far. The metal index and those metal plays, whether you're looking at Hindustan Zinc, Muthoot Finance, or MCX, remember, that has CTT, not STT, but all those stocks under some pressure. So plenty of movers, guys, from the broader markets. Some of them gaining, most of them losing. That's sort of a day.
And it's a Sunday. So it's red all across. Nigel, thanks very much for that. Very comprehensive. We'll take a quick commercial break here. We'll come back, but the finance minister is also going to be starting to address the press in a bit from now, and some flashes coming in. I think this is clarification because the budgeted number for excise collections was much higher in FY27. There was some fear that this is going to be, this is going to happen through an excise hike on petrol and diesel. And for now, what we understand is there is no change in excise duties on petrol and diesel at this point. As I said, take a break. We have Tarun Garg, MD and CEO of Hyundai Motor India, join us on the other side. Stay tuned.
GS.
Nice here.
Hey Mahi, suggest a cool bank जो environmentally conscious हो.
SBI कूलेस्ट है.
Really?
SBI ने लाखों पेड़ लगाए, वेस्ट मैनेजमेंट प्रोजेक्ट्स को फंड किया, EV लोन्स पे कंसेशंस दी और रेन्यूएबल एनर्जी को मैक्स सपोर्ट किया.
How? That's cool.
SBI, the banker to every Indian. Truly.
In the heart of the jungle roams the finest creature, and through the chaos of the sparkling city lights, I am reminded of the timeless valor of the majestic tiger. In life's wild journey, we have one shot to thrill. And when done flawlessly, we unwind and allow our spirits to rejuvenate. Royal Ranthambore, India's finest, yet.
This is Network 18, and you're watching CNBC TV 18.
In the heart of the jungle roams the finest creature, and through the chaos of the sparkling city lights, I am reminded of the timeless valor of the majestic tiger. In life's wild journey, we have one shot to thrill. And when done flawlessly, we unwind and allow our spirits to rejuvenate. Royal Ranthambore, India's finest, yet.
Welcome back. Markets still down, but you've recovered considerably from the lows of the day. And the stocks that have recovered actually are some of those OMCs, where you're looking at, HPCL, BPCL, as well as IOC. Post that flash that we're putting up for you on the screen, there's no change in the excise duty. We'll have to check out and see how exactly are they coming up with the math to garner such high excise duty, because we know part of it will come from cigarettes, but otherwise, the street was fearing that the rest of it would come from an excise duty hike. For the time being, they say no. We'll try to understand that in greater detail, but all those stocks have recovered from the day's low. Well, let's welcome on the show, we have Tarun Garg, MD and CEO at Hyundai Motor India, who joins us on the show. Hi, Mr. Garg. Thanks a lot for joining in. Well, the finance minister has said what she has to. The longer-term trajectory is what is laid out with regard to the fiscal deficit numbers, as well as the debt to GDP numbers. That's good in the longer term. But how would you rate this budget? And, if you had to put a rating on 10, what would it be?
Oh, budget is definitely a 9 for me, and it's clearly a reform-intensive investment-led budget. It provides stability, it provides structural reforms, of course, fiscal discipline as well. And we have to understand that we have to look at this budget along with the GST 2.0 reforms which had come in. Today, you saw the automobile numbers coming in. All of us are showing record growth. And I think this budget will really, really position India as a global manufacturing hub and ensure a 7% GDP growth in the long term.
Well, Mr. Gagar, some were hoping that there'll be a bigger push. We know the uncertainty in the globe, and there was a hope that maybe, in fact, some kind of slip on the deficit number would be okay, but a greater push to growth. Do you think something more could have been done on that front? Because that push, I think, is lacking a little bit.
Absolutely not. If you see manufacturing, we have all said that manufacturing has to have 25% of the GDP, and I think there a clear direction has been set. You can see the electronic manufacturing, semiconductor manufacturing, 40,000 crore outlay has been increased. So this is very good. Tourism, I think we all know that India probably there is a long way to go before we can actually utilize and leverage India's such great tourist spots. I think that has really given a lot of hope to tourism, but to mobility as well, focus on logistics sector. So I think, yes, it provides continuity, it provides stability. Of course, everybody is always expecting more, but I'm sure one thing which is very important is also the fiscal discipline. 4.3% fiscal deficit really gave me a lot of hope that, yes, not only will we grow, but we will also grow responsibly.
Sir, specific to your company, to Hyundai India, can you tell us, is there anything in the budget which is very positive for you? Big picture you spoke about. If India grows, Hyundai does well, etc. But just specific, any nuances that you can share in the budget which is beneficial or something you were hoping for didn't come through?
Look, one thing which is very important is supply chain stability. We all know that what happens when rare earth material shortage to the auto industry. I think that has been really given a lot of focus here. Electronics, we all know that next 5 years probably electronics is going to be a key component, and manufacturing focus on electronics is very important. And then ease of doing business, ease of living. Please understand, as car makers, we want citizens to be happy, and you can see that a lot of efforts has been done for that ease of living, ease of taxation. I think all in all, generally people are going to be very happy. Plus, like I said, it's only 4 months since the major reform of GST 2.0 happened. So for us, we are, frankly speaking, very happy. And we believe that this year we could see the car industry coming back to the mid 7-8% growth levels, which we had been clocking. But before the GST 2.0, we had kind of slipped off the radar.
Tarun, we'll leave it there. Thank you very much for joining us. Good speaking with you, and really appreciate your time here on CNBC TV 18. Well, I think 274 points lower is what we have, and there is some pressure. If you can line up, I think we have the BSE MD and CEO, Mr. Ramamurthy, who's going to be speaking with Mangalam. And we'd like to play that out for you. BSE is, of course, down sharply on the back of the STT hike of about 7.25% or so. Market breadth is 1,200 up and about 1,800, 1,900 lower. So it is a wide difference in terms of number of stocks up and down. I mean, in the midst of all of this, what has happened, of course, is what we started with, which is the big correction on underlying commodities. So there is that factor also at play. Which was there before 11 o'clock, before the speech began. And then, of course, I mean, the entire commodity pack was selling off before the budget, and after the budget, I think, you've got capital market plays, et cetera, which are selling off as well. And of course, at the margin, the STT hike, I think, has soured the mood a little bit. We'll take a quick commercial break here. We'll come back, as I said, the BSE MD CEO perhaps with us, hopefully, and the finance minister is going to be addressing a post-budget press conference, so we'll go across to that as well.
माही भाई, कोई कूल बैंक बताओ ना जो कस्टमर के साथ हर कंडीशन में हो।
फिर तो SBI कूलेस्ट है। 50 डिग्री में, -40 डिग्री में, घने जंगलों में, भूकंप वाले टापू में भी हर कंडीशन में कस्टमर के साथ है।
Really cool.
SBI, the banker to every Indian.
truly.
Luxury, heritage, and valor are timeless. Let them grow on you. Royal Ranthambore, India's finest yet.
This is Network 18, and you're watching CNBC TV 18.
In the heart of the jungle roams the finest creature, and through the chaos of the sparkling city lights, I am reminded of the timeless valor of the majestic tiger. In life's wild journey, we have one shot to thrill. And when done flawlessly, we unwind and allow our spirits to rejuvenate. Royal Ranthambore, India's finest yet.
Okay, welcome back. 270 points lower on the Nifty. Wix is jumping, right? Wix is up about 7% or so. Small cap index, mid cap index, Bank Nifty down. So there is, I mean, lots of clarification. Sovereign gold bonds, for example, right? I mean, okay. I'm being told that Mangalam has the BSE MD and CEO, Mr. Ramamurthy, with him. Mangalam, over to you.
Well, thanks a lot for that. Yes, we do have the first reaction coming in from the MD CEO of the Bombay Stock Exchange, Mr. Ramamurthy. Thank you so much for joining in. You know, the street is a little worried about the imposition or increase of STT on futures and options. Now, you get a significant chunk of your revenue from that product. So what kind of impact do you think will happen on your business and on the capital market stage at large?
Thank you for having me. And before I start replying to your question, let me congratulate the Honorable Minister for Finance and Corporate Affairs for another successful budget proposal to the House of Parliament today. The budget clearly is one another step towards Vikasit Bharat by concentrating on capital formation and fiscal discipline, right, and main sectors of the economy like manufacturing, services, semiconductors, SMEs, right, all have been covered. On the specific question on STT that you have asked, the increase on STT on derivatives, I look at it as a move from the government to oriental and align people towards trading and investing long-term in equities. Got it. Today, the equity STT will be lower than F&O STT, which encourages them to get into the equities market. That is totally in alignment with the capital formation requirement of Vikasit Bharat. The STT increase, this is not the first time it has happened. Every time when it happens, the reaction is exactly like what you said. The market feels worried and concerned whether it will impact volumes, will impact revenues, etc. India is a growing economy and fast growing in a big way. And in that process, what we have always seen is the market growth is so much and the depth of the market grows so much. The initial concerns go away soon. The market starts developing.
What you're saying is that the medium to long term, this is a step in the right direction towards deploying money into long-term equity investing as against near-term trading. But for businesses like yours, and there are investors that are watching as well, the stock's lower, what could the near-term impact be if you could quantify that?
I don't think it will be possible to quantify. I'll tell you the reason. We are presuming a static thing of a change will have an impact on a dynamic thing. When the market is dynamic and growing, and as you also said, in the mid and long term, it looks like being a good thing to happen. So it will not be possible for us to say that, first of all, there'll be a dip, and if there is a dip, it will be so much.
But you do have the benefit of experience, right? You said it's not the first time something like this has happened. Last time this happened, what was the initial impact?
I don't think there has been any dip. The market has taken it and in its stride, and it has grown. So I feel that the same thing will happen. Please understand, India is a growing economy, and in a big way growing economy. And this type of stuff will immediately have some dip to start with as a thought process. And in the coming days, it will go, and people will understand the impact of investing in equities market, and therefore there will be larger scale capital formation.
What do you think the government could have done in this union budget to, attract the FIIs back into the market?
I think there has been already a move in respect of PROIs. And there has been a lot of efforts put on addressing the tariffs, tariffs affected areas, for example, textile, chips, etc. I think that these are all positive things to be looked into.
All right. And, we're also speaking at a time when there has been an approval for the NSE's IPO. And typically when a leader lists in the market, we do see a rub-off on all the others as well. So what are your initial reactions on that?
Initial reaction is congratulations, NSE. And this has been a great thing. And SEBI, as promised, has delivered within the stipulated time, this NOC. I have shared this even before in CNBC. We are extremely glad and happy. And we are very happy, and we wish all the best to NSE.
All right, and we wish all the best to you, your volumes, and your market share going forward as well. Thank you so much for joining us on this occasion. With that, it's back to you guys in the studio.
Well, thanks very much, Mangalam. For that, 7% lower on BSE, though, for now, there is that impact which is coming through. Mr. Ramurthy was confident that markets will look through this in terms of increases. This increase itself is significant, right? 50% on options and 150% on futures. Yash is here with some numbers in terms of what this translates into. Yash, run us through that math.
Well, Prashant, if you remember, just yesterday, there was this slight bit of conversation from market participants about, STT on derivatives going up. Of course, yesterday it was only chatter, but today it certainly came through as far as that budget document is concerned. STT on equity options to be hiked to 0.15% from the current 0.1%. That's a 50% hike. And STT on equity futures hiked to 0.15% from 0.05%. That's about 150% hike on equity futures. Just one important clarification, because this was a bit of confusion amongst market participants, that this STT hike, or the securities transaction tax hike, only applies on equity transactions and not on commodity transactions. There has been no change as far as commodity transactions are concerned. But as far as numbers are concerned, and the numbers are today reflecting as far as stock prices of the market, capital market companies are concerned, Angel One, as per FY25 revenue, it contributed 44%. This is the contribution of equity derivatives transaction to the revenue. Angel One, it was 44%. BSE, it was 55%. And the National Stock Exchange, or NSE, it was 70%. Just yesterday, there was also a tweet from Nitin Kamath on the same issue, saying that the projected STT collection for FY25-26 was about 78,000 crore rupees for the government. The government till January had collected about 45,000 crore rupees. An estimated another 12,000 crore rupees by March would take the government to about 57,000 crore rupees. Still, giving a shortfall of about 25% to that projected number of 78,000 crore rupees. It wasn't unlikely to be met in the current financial year, and hence that shortfall somehow trying to be to be made up for as far as the coming financial year with that increase in STT is concerned.
All right, Yash, thank you very much for that. You know, Ramdev Agarwal earlier telling us that, I mean, where this makes a difference is basically HFTs, high-frequency traders, etc., who are trading in and out, I mean, 1 million times a day. Then that starts to incrementally hurt. You know, the dampening effect on volumes, etc., and things like market depth. I mean, you know, we'll have to see if all that comes through, but these are big increases with the government, of course, with an eye on the revenue. Data centers, we've heard unambiguously from everyone we've spoken to so far as the absolute big one. Vinny is here with, and of course, with feedback from companies that she's spoken with in terms of what this would mean and how large this could be. Vinny, take it away.
Hi, so yes, an important announcement that's coming for data centers. Obviously, Nirmala Sitharaman announced that major tax holiday till 2047 for foreign companies, cloud service companies that are providing and using India data centers to serve globally, but they'll also have to provide their Indian entity or any tie-up that they have would have to provide to Indian customers as well. Now, why does this become important? It's because do not forget, in 2025, we've seen many big players actually come into data centers, whether you look at Reliance, AWS, Adani, Google. We have all these making a total investments, including some other companies, of $63 billion. So obviously these tie-ups become important. They push the data center infrastructure in the country as well. And obviously today we saw all those stocks buzzing in trade. Whether you look at an Anantraj, now that is a company that is into data center for a mainly increasing their capacity. They're into the real estate side. So infrastructure boxes that are made, that is from Anantraj. Then there's E2E Networks, that's a cloud infra company, Network Technologies, Orient Pro, all of these are into AI and data center technologies. Now, obviously, the whole value chain will start benefiting, and we've spoken about this before as well, that value chains, like whether you look at something like these capital good companies or even cable wire companies, all of them come into use. The whole value chain will start seeing benefits coming in. ABB, Siemens, Hitachi Energy, some of the other names, as well as Voltas, are some of the names that would start seeing a benefit, and that's why these stocks become important in the trading session as well.
Okay, all right, Vinny, thank you very much for that. You can see visuals coming through from New Delhi, the finance minister. As always, the post-budget conference, usually typically the post-budget conference happens after market hours and kicks off, I think, used to be at about 4 o'clock or so. And of course, she's flanked by her secretaries on both sides, Revenue Secretary, Finance Secretary, and I think the other top secretaries of the Government of India very much part on the dais. So there will be, of course, you know, the finance minister who will sort of, you know, lay out what the highlights of what was laid out in the budget, kind of sort of give an overview. Perhaps a secretary or two also chips in, and then there'll be a Q&A session. That's how typically the post-budget press conference will proceed. Our colleague Sapna Das is with us, and we have other colleagues there as well. So that is the post-budget press conference coming through right now. Let's cut across.
The secretaries. You've heard the entire budget being presented in the Parliament. So as opening remarks, I'll just highlight some of the points which we want to draw your attention to. But subsequently, of course, we'll answer all your questions. All the secretaries are here with me. So this budget being the first one, as the Honorable Prime Minister said 2 days ago, this being the first one for the second quarter of this century, also leading towards Vikasit Bharat 2047. We are laying the path and giving a push to the economy to maintain the growth momentum. And for that growth momentum or sustained economic growth, which we want to ensure, primarily we are looking at building the ecosystem with structural reforms which will go on. Reforms have been carried out. We are continuing to do the reform activities. It will continue with an aim to make sure that we create enough environment for improving productivity and making sure employment is generated by technology. So we will ensure that technology is brought in to benefit the common man, to make sure common man benefits in the sense of ease of doing living, or for his business to prosper, or for farmers for greater productivity or better logistics, whatever. So technology for benefiting every common man. And above all, with all this, inclusive development. Sabka Saath, Sabka Vikas, and that is why you heard me bringing in schemes which have good allocations for bringing better health facilities, creating a cadre of people, not cadre in that sense, but a bulk of people who can come in as health workers, paramedics, and so on. And also making sure we are able to provide dignified opportunities for Divyangjan. Mental health has also received a lot of attention. So these are the side for Vikasit Bharat and making sure Sabka Vikas hoega. But the idea is the advantage and the momentum that we gained since after COVID by increasing public capital expenditure will continue. We've announced that 12.2 lakh crores are coming through public expenditure this time. It is 4.4% of the GDP. I'd like you all to please notice that, which is the highest, at least in the last 10 years. It could even be highest if you were to take data earlier. No increment in capital expenditure, sustained fashion has happened ever before. This one marking 4.4% of the GDP. Then what are the kind of things which will happen through it? You will have dedicated freight corridors. I've named Dankuni in the east, Surat in the west. Then I've also highlighted that 20 new national waterways, not national highways, national waterways are being planned. And again, there, those are going to pass through some of the critical mineral areas. Orissa, where the mineral-rich state, you have the waterways taking it to the port, and the two ports have been identified, Paradip and Dhamra. Similarly, we are also making sure that the coastal cargo movements will be enabled through a cargo route, so that through the coastal area, we are able to cut down on cost of movement of goods. City economic regions, developing them is a very big new measure that we're coming up with. And for that, an allocation of 5,000 crore per city economic region. Imagine the amount, 5,000 crores in 5 years, 1,000 crore per year per city is being given. And the emphasis is going to be largely on tier 2, tier 3 cities. And then talking of infrastructure further, with the capital expenditure coming with the big number, you're having also the high-speed rail corridors. 7 of them announced. The destinations are clear, so that they become the bridge for all these economical robust centers. So those are for making sure that the infrastructure and the capital expenditure are getting tied up, and the country benefits from the ripple effects that these can bring in. The 7 strategic and frontier sectors in which we've highlighted that will increase productivity and also have new investments come in and give emphasis for India's own brand on those things is on the biopharma sector. I think that's going to be a big change in the way in which we are looking at giving capacity for those who are able to research, who are able to undertake research and development. So 10,000 crore initiative, again, over 5 years for domestic biologics and biosimilar production. This is a clear message and backed with enough substance that India's lead in the pharmaceutical sector should be kept intact, but at the same time, bring in newer ways of helping the pharma sector. And also because it has an impact on human health. Semiconductor mission had 2 major announcements that will improve the India stack and also the IP related matters. Electronic components manufacturing scheme for 40,000 crores is a major encouragement for electronics to become self-sufficient. We've also announced establishing rare earth corridors so that India can face and be able to meet its own requirements with its materials. So once we identify and are able to explore these minerals and process them, make them available for us, our dependency on external sources for bringing in the rare earths will be lesser. And we've identified the states where we want to establish this rare earth corridors. They are going to be in Orissa, Kerala, Andhra Pradesh, and Tamil Nadu. So these are very important developments, and they are going to have multiple decadal impact on the Indian economy. Our dependence on magnets and rare earths will be brought down. 3 dedicated chemical parks, again, for reducing our import dependence. High-tech tool rooms for research. That will be set up in 2 locations. Very important thing is about the construction equipment being imported. That could be for building tunnels or metros or high energy and also heavy duty equipments, which we are relying on imports. We want to manufacture them in India. And that is why I said, how does it affect a common man? It affects because firefighters today have novel, new, big ticket and small, very small firefighting tools and weapons or equipments. We don't have them in this country. That's why if there is a fire accident in some very congested area, our equipments are not able to reach those points. Whereas there are equipments which today are produced abroad, which can navigate those small corridors and go save people's lives. Whether they or huge ones, all of which we want to make sure that we will have production in this country itself, whether they are tunnel boring or anything else, from small to big, we want to bring in those very impactful infrastructure into India. So we'll support domestic manufacturing. Then container manufacturing is another, which we'll support. I think I've gone in detail talking about the textile support in various forms. One very important announcement was made, Mahatma Gandhi Gram Swaraj initiative, which will make sure khadi, handloom, handicrafts will all be brought in, and one district, one product will all be brought in this initiative, and we'll be able to support rural artisans, rural workers, and handloom weavers in those areas. Legacy industrial corridors have got saturated. Manufacturing happening there is now very constricted because they're not able to bring in newer robotics and others. So we want to upgrade these legacy industrial clusters so that they become cost competitive and efficiency comes into these places. Even more important is the champion MSMEs, small and medium industries, entrepreneurs, MSMEs, who are going to be given all the support, and 3-pronged approach is being taken up there. We are giving equity support. We are giving also liquidity support, above all professional support for them, so that MSMEs, the equity support is supported by a 10,000 crore SME fund, growth fund. Above all, we are also topping up the Self-Reliant India Fund with 2,000 crores. So MSMEs should not feel any dearth of resources for equity. Similarly, they shouldn't feel any difficulty for liquidity in their hands, because the TREDS platform will now be treated almost as a backed up, security backed up instrument with which they'll be able to discount and get their monies. For professional support, we're working with the chartered accountant and cost accountant institutes so that they can create corporate mitras who can help these MSMEs in filing their returns, doing their accounts, and so on. Above all, for youth and training, there's so much. You've heard the speech, so I won't want to take your time on it. High-powered education to employment enterprise, standing committees being formed so that they can recommend measures for service sector as a core driver of Vikasit Bharat. Part B concentrated a lot on tax and related concessions that are being offered. More importantly is the process simplification which has been announced. So elaborate measures have been taken. You will be able to also seek clarification if you want. new export opportunities for fishermen who can go into the economic India's zones, high seas, and also assess and access the global markets. The one very touching, and I really was moved by this proposal, is where we have identified 17 drugs or medicines which are going to be basic custom duty exempt, which are important for cancer patients. Similarly, 7 more rare diseases are added to the import exemption list of the import duties. Baggage clearance and personal items which you bring in when you travel are all being given enhanced duty-free allowance. Besides that, there are quite a few direct tax and indirect tax proposals. Decriminalizing the penalty proceedings and support to the IT sector are some of the high points. As an opening remark, I'll conclude here. I'm sure you'll be able to ask questions and seek clarification. Thank you for coming.
Thank you, ma'am. I'll start this question, taking the questions. First question is 17.
Good afternoon, ma'am. Shishir here from Hindu Business Line. Ma'am, my question is that under the miscellaneous capital receipt, the provision is 80,000 crore rupees. And last year, the provision was 47,000 crore, which has been reduced to 37,000 crore rupees now. Does this mean that there will be more equity monetization this year, or there will be more focus on the asset monetization of CPSEs?
So you've got it rightly. The intent is that we will have a very strong asset monetization plan in place. Last year, ma'am had announced in the budget that there will be a pipeline prepared, which is being done. So we hope to reap the dividends from that.
238.
Ma'am, Timsi Jaipuria, this side from CNBC TV 18. I just wanted to know the rationale behind the hike in STT in futures and options.
So, first of all, I believe some confusion. In fact, the question that you have asked rightly reflects the announcement itself, that the only change made in STT is in the future and options. All the other STT rates remain the same. The primary objective of raising the tax rates on STT has been that it is felt that when you look at the volume of transactions in futures and options, whether you compare it to the size of GDP or size of the underlying securities market, it is largely in the realm of heavy speculation, which results in losses to small, retail, unsophisticated investors. And the government's intention is to discourage speculative tendencies, and the increase in rate is essentially in that direction. So it is meant to essentially handle the systemic risk in derivative markets. Even after this increase, however, the rates of STT will remain modest compared to the volume of the transactions that is happening there. This is the reason.
54.
मैम तरुण शर्मा फ्रॉम जी बिजनेस. मैम आपने पूरा बजट जो है वो न्यू एमर्जिंग सेक्टर पे बड़ा फोकस रखा है. मैम मेरा सवाल आपसे दो हैं, यदि आप अलाउ करें. एक, मैम आपने जो एक्साइज ड्यूटी का कैलकुलेशन किया है वो पिछले बजट एस्टिमेट से इस बजट एस्टिमेट में तकरीबन 22% की ग्रोथ देखने को मिली है. दूसरा, मैम जो आपने MSME के लिए कहा कि जो ट्रांजैक्शंस होंगे उसके लिए आप एक्सचेंज प्लेटफॉर्म का यूज करना होगा, तो क्या मैम ये CPSEs के लिए कंपलसरी होगा जो डिस्काउंट ट्रेडिंग की जो बात है? थैंक यू.
I'll take the second question, ma'am. So, हाँ, ये CPSEs के लिए मैंडेटरी होगा कि डिस्काउंटिंग एज वेल एज नॉन डिस्काउंटेड बिल्स दोनों को ही ट्रेड्स पे करना होगा, ताकि वो 45 दिन में भुगतान MSME को कर पाए. और ये हर तरह से चेक कर लिया गया है कि ये हो सकता है. So we want to make CPSEs as pioneers. We hope, like ma'am has said in her speech also, that other corporates will also follow.
on excise.
Increased by 22%, sir, from last year B to this year.
Because there is from 1st of February, all the tobacco products have come back into excise, and all those revenues will account for the increase of the next year.
209.
Ma'am, Prakash Predashi from ET Now. The budget has announced restructuring of PFC and REC. What will this restructuring look like? And does this also mean that these NBFC will be merged going forward?
What is the later part of your question? That these NBFCs are not
will
going
be merged going forward?
Yeah, I've said we are rationalizing it. You'll get to know as we go forward. We want to streamline it, and therefore we'll be taking some steps. We'll let you know the moment we decide how to go about it.
234.
Hello, ma'am. Harsh Kumar from Business Standard. Ma'am, two questions. One is, you said that a high-level committee will be formed on the banking reforms in order to 2047. Are we going further for any kind of merger or something, since government is continuously saying that we need at least 2 of the big banks, in at least of the top 20 banks. So are we going towards that?
No, first of all, when I say that it's going to be a high-level committee which is going to look into it, the terms of reference will be prepared, and we are looking at committee to go into the entire expanse of the banking sector so that they come up with recommendations which help us to plan for banking for 2047. We need, by the time we become a Vikasit Bharat, 2047 is our goal. We need to understand what are the other steps that we need to take in the banking area, and based on the recommendations, we'll go forward. But we have the Secretary, Department of Financial Services. We'll ask him to also give us, please.
Ma'am, I think you have rightly responded. There are a large number of aspects relating to the banking requirement. For example, the credit to the GDP, commercial credit to the GDP ratio low, and the expansion of the banking network, and what kind of procedures currently we have that is impeding both the deposits as well as credit. All those aspects will be looked at by an expert panel, a committee, and well, we'll definitely have TOR, and then also consult the all the stakeholders, and the government will take a view on how to lay strong foundation for 2047 Vikasit Bharat.
Ma'am, one more question. 229.
Okay, well, that is the finance minister and the secretaries with her in terms of the press conference which is underway. We'll go back to it and get you more. 400 lower on the Nifty now. Amit Jeswani is with us to run us through what he made of things. Amit, there are, good afternoon, there are positives and allocations, data center, and there is buyback taxation, and there is stuff there, right? But this STT thing has kind of thrown cold water. And it's only local investors today. Foreigners will come back tomorrow. I spoke to Ramdev Agarwal. He said, well, we'll have to, and I'm quoting him, he said, we'll have to see how furious FIRs are when they come. Now, I don't know. What's your sense, Amit?
Hi, Prashant. Good afternoon. Thank you so much for having me on your show. Prashant, it's a tough budget, to be honest, and it's a tough day on the street as well. Let's be honest, this hike in STT was not expected. And we are seeing our portfolios being down 2%, and that's the case with Nifty as well. So broadly, it's a tough budget. There was no green shoots in this budget, nothing to write back home. See, the small 2-3% here and there moves is good for newspapers, but it doesn't move the markets, right? We are stock market people. And the thing is that there are no trends. That's the problem right now, because gold and silver volatility has increased a lot. And now you have a budget STT hike. So we need to find newer trends. That's the whole game, that once your risk management phase ends this time, we will have to see can we allocate the incremental capital, and which are the trends. See, it's earnings season, we will get good opportunities. For us, it's all about where do we see incremental growth, and that's where we'll keep adding our weights.
Okay, all right. Hi, Amit. Good to see you in. Well, market's a shade of red itself. The last time around, you were talking about MEGA, Make India Great Again. The markets have underperformed actually in the last 1 year. Do you think there's no reason for us to actually outperform from here on? Earnings growth could come about. We're not cheap. And this budget, at least for the equity markets, has been a bit of a dampener. Go ahead.
So Nigel, even before the budget, the stocks that were doing well were basically commodities and somewhat gold-related counters, and some PSU banks because of value being the theme. If commodities have already fallen 20-30% from stocks have fallen 20-30% from last time I came here, that was like a week ago. Of course, even gold-related stocks have fallen 10-12%. So that trade is right now is going to consolidate. That's what you need. If you're going to sell these things now, you need somewhere to put in your capital. And the markets are going to stay flat till we don't have a new leader. See, every bull market needs a leader. 78% of global returns in the last 1 year have come in AI or semicon related stocks in the world. So market needs a bull market leader. There's no leader. Where do we go? That's a problem that most portfolio managers will face.
Amit, I'm trying to clutch on for some kind of positives for the equity market. Do you think the kind of meltdown that we saw in precious metals, gold, silver, that actually could be some kind of a blessing for equity investors? Because otherwise there was some money that was moving towards those asset classes. Now there's a shakeout over there after a while. Everyone's woken up again. You'd rather allocate a higher proportion equities. Do you think that's the way to go? Could that be a bit of a blessing that precious metals actually have seen some kind of a jitter or some kind of a shakeout?
Actually, the guys who are putting money in precious metals were stock market investors only.
Yeah, that's what I'm saying. So now they come back, right?
They will come back. They've lost money. Actually, they've lost confidence. And see, losing capital is okay. Losing confidence is not okay at all. In bear markets, bull markets, do not lose capital. Even if you've lost some money in gold, silver, I think gold will make a comeback once it stabilizes. Silver, God knows, but don't worry. Gold will, till Trump is there, you have a hedge. Gold is a great hedge. Not that I have positions, but gold is a great hedge. And in this dip, maybe a good buying opportunity. It's a Trump put, right? You always had Fed puts, but gold will act as a Trump put all the time. And at lower levels, at $4,500 or lower, I would say gold becomes super interesting because it will act like an uncorrelated asset to equities, and it will hedge your, you don't have to look at Truth Social every morning.
Yeah. The market, the old joke, right? Not an old joke, new. Market falls 2%, the truth will change. That is also true. But anyway, we should put this out. What the DEA secretary, the pain point for market is STT. The DEA secretary has said STT increased because of high speculation in the F&O market. High speculation in F&O market resulting in losses for retail investors. And despite increase in F&O STT rates, volume, the hike is modest, and this is modest as compared to volumes which are traded. We should actually put this out at the bottom of the screen in terms of those flashes. We were talking about commodities, right? Now, Amit, STT on equity has been increased, but CTT on commodities has not been increased. Now, that is another googly.
So it's only God and Nirmala ji can tell you. I don't know what logics work out there. So I don't know what to say.
No, actually, it is a signal that आप equity में देखे commodity, So all these high frequency chaps will move to commodity now. I don't know. There are options in commodities.
See, commodity, actually, there's no open interest. Even if you look at silver open interest, yesterday I was looking at silver open interest. Silver open interest was 8,000 lots. That was worth 2,000 crores. So actually in MCX, there's no large open interest that happens. It's just a lot of speculation that happens, and a lot of guys who want to hedge between this and COMEX, and dwellers who are there, they keep hedging. That's the only kind of there is no open.
But Amit, total open interest in options in MCX is quite large, isn't it?
No, I was speaking about futures, not options.
No, I'm talking about options.
Futures was 8,000 lots.
I see. No, I'm talking, okay. Okay. Okay.
That's not a lot. That's 2,000 crores. So that's not a large number that people got disrupted, etc. Just look at open interest of F&O. That is that's how I look at it.
Okay. Okay. Now
so it's not like sorry.
You own MCX, Amit, I know. So you still own it?
See, I would be buying or selling MCX today, so I can't speak about MCX today. I can't say what I'm doing.
Okay, all right, no problem. I won't press you. Anything else you've done today? You've been net reduction, net addition to put.
There's no addition to the portfolio today. Mostly, it's just managing risk. See, we have to manage risk. We're risk managers.
Yeah.
So we have to manage some risk on the portfolio, but no large addition today. We need to rethink. It's been a long day, to be honest, and our portfolios are down 2% today. So we need to rethink what the next strategy will be. But rethink will happen once 3:30 happens. I'm waiting for 3:30 on a Sunday.
All right, just one final question then. Any new trends? You said that you're waiting for the new trend to emerge, what the next leader of the market could be. Do you want to give us some ideas here?
No, so we don't know new trends yet. There has to be earnings growth. See, auto numbers today were really good. All auto numbers are good in general. M&M was 25%, TVS was 29%. I'm just giving you random names. Some we may have vested interest. Me, my clients, my family have vested interest in whatever I speak. But auto numbers look okay. GST collection looks okay. See, there are no new trends right now. Right now, the whole game is how to protect my portfolio. That's the only thing which is going on in my mind.
Okay, Amit, a couple of sectors though are in the green. The EMS space, those stocks have got hit. There's been an allocation increase out there, so those stocks in the green. Data centers as well, that's another theme that's playing out today. Anything you like from there?
So there is no stock to buy in the data center space. What they did is very good till 2047, no taxes. But in India, there are no listed plays. A real estate company saying it's a data center company doesn't make it a data center company, right? And the other companies are just too expensive. So there are only 2 plays or 3 plays here. And none of them are like, see, you get Microsoft or, those kind of names at 30p. And here we're paying a lot higher for not great growth. So I wouldn't, there are no places to play. I love the theme. I wish I could, but there is no place to play there. There's no place to play in the data center.
Data center and EMS? EMS?
EMS, no, we don't have any exposure towards EMS right now. We cut all our positions in EMS before this, not before, I would say during the meltdown that happened. Right now, growth expectations for all EMS, while a few numbers were good, but growth expectations and valuations have corrected across, and it will take some time for EMS companies to go back to new heights. Okay. I don't think, see, they were the leaders of the previous bull market. Let the consolidation happen and then they'll lead the next bull market. I'm not bearish right now on these levels because they've already fallen like 40%. But I'm not hyper bullish. I don't think they will lead the bull market. A bull market needs a surprise, something that people are not expecting, and starts growing at 50%, 40%, 60%. Actually, numbers were very good for the second largest exchange. They were looking super good. The month of Jan has been super good for option volumes, etc. But this is going to be a sentiment change. I don't think the long-term trend changes for options. So we still have to think again. Like, it's just 2 hours to this news, and we will have to rethink how we look about our portfolio.
Okay, Amit, we request you to join again. For the time being, you're waiting for 3:30, but sounding a little bit cautious, and that pleasant surprise really eluded us today. If at all, someone was hoping that Finance Minister will deliver that for the equity markets in particular. Thanks a lot, Amit, for joining in. Enjoy the rest of the day. Let's welcome Gurmeet Chadda back on the show. Gurmeet, good afternoon. We spoke this morning. You were gunning for some kind of positive news. Doesn't seem to be the case. Finance Minister has gone ahead and increased STT, which may not be a very, very big factor, but for sentiment, it's definitely dented sentiment. Forget about any kind of leeway on STCG or LTCG. What have you all done today?
So haven't done much, Nigel. We've added a little bit in BFSI because the credit growth continues to be strong. Some of the names have really become cheap, like some of the HFCs like Bajaj Housing. The bank credit growth has been pretty solid at almost 14.5%. So added some names there. We are now, just dissecting more on this data center tax holiday. We are also looking at the ISM 2.0. And one of the big beneficiaries of data center is also the ancillaries and the ecosystem around it, which is, let's say, specialized battery makers, the energy players and the energy ancillary players. Also, defense capital outlay has gone up. So while the defense budget overall may look optically, a certain modest increase, but within the budget, the capital outlay part is the highest. And anyways, government has been doing emergency purchase there as well. So any weakness there, we'll probably see if we can do some funding. But overall, I think the sentiment needed a bit of an uplift, and it's just worked the other way. I think somewhere we are missing the point on interlinkage between capital markets, currency, sentiment, and investments. So I think that interlinkage is missing. We are taking ad hoc decisions, and somewhere, every year some change in taxation, STT or buyback or something or the other is hurting it. And I think we need more stability, we need more predictability, we need more simplicity. Too many changes almost every year.
And even in the buyback, there are different rates for a minority shareholder who will be now taxed at the LTCG, for promoters, for corporates, etc. So there is a tiered system now which comes into play for buyback. But it's been a tough day, no doubt, Gurmeet. This is the biggest budget day fall that we've seen in the last 6 years. Specifically about data centers, since you said that you are analyzing it, while you like the ancillary play here, but what about the stocks which are reacting now? E2E, Orion Pro, and Anantraj. Does it really move the needle for these stocks?
A little early to say, Rima, but as I said, something like, let's say, an HBL, which is into specialized batteries for data center, also into Railway Kavach, which is the security program. We are looking at that. It had a bit of a knock because one of the order got cancelled, and then another one came yesterday. Something related to energy, because the overall big beneficiary of this entire data center AI play is energy. It needs tons of energy. So that's something we are looking at, both in terms of power equipments, PCB makers, other power equipments as well. And something I think which I found interesting was, these chemical parks and textile stuff. I think these two spaces have been very badly beaten down, especially chemicals. And we need to probably analyze and see. A lot of them are available at 8, 9, 10 times earnings. Some of them are actually available at 6, 7 times free cash flow. So lot of price damage there. And not today. I mean, I'm talking about last 2-3 years. So we are dissecting that. So it's very focused, this budget, semiconductors, EMS, chemical parks, textiles. So you got to then, analyze more details and blueprint. But overall, I think, as I said, if you are discouraging short-term speculation, you need to encourage long-term investing also. That is how the balancing act is done. I think that the budget has missed the trick.
Gurmeet, that we were just wondering why STT on equity derivatives are higher and not on commodity derivatives. Any thoughts? Any reason?
Don't know, Prashant. Maybe it will come next. Once the volume pick up, so if you see, there is a pattern here. They went after Dream 11, online.
मैं viewers को बता दूं, हम लोग हंस रहे हैं, but अभी जो क्या बोलते हैं?
Government is sending a clear signal.
नहीं, there is a, what is that song? जो मुस्कुरा रहे हो, क्या गम है जो छुपा रहे हो? हाँ, Gurmeet?
हाँ. So I was telling somebody कि भगवान का दिया सब कुछ है, बस equity taxation नहीं है. So.
No, the government wants everyone to focus on productive things. Cigarettes, the duty has gone up 40%. Dream 11, all those, real-time games, that's stopped. No FNO trading. Reformation.
Look at the market, guys, by the way.
Yeah, days low.
Wow, it's a plunge which has happened, and there's no other way to put it. 550 points down. So there is a swift kind of fall which is taking place. By the way, the day's low is 24,571, and we are at 750. Basically, we are about, the fall was so sharp in the morning. How much would we fall, guys, in the morning? 700 points?
Yes, 750 points.
Wow, 750 points at the day's low, which means that's the only reason why we are still about 200 points off the day's lowest level at this stage. But this is a very sharp cut, which is materializing once again.
And without the full participation of the foreign investors.
Nigel, my sense is at some level, people could be, preempting, shorting, thinking tomorrow FIs are going to come. As Amnish said, how furious will they be?
Yeah.
Right? How angry will they be? Will they be sellers? So, I mean, it's possible people are going to trying to preempt that move. The positioning data, etc., will tell us that a little later. Nifty Bank maybe as well.
It's down 1,300 points.
Wow.
Smash.
So 2% lower, and I think the Nifty mid cap and small cap indices is also selling off hard. 4. I mean, the low was so, the intraday sell-off was so large that on all these indices, they're still 1.5% away from the day's low. But these are large enough cuts in any case. Almost 600 gone now on the Nifty. So it's a poor Sunday for equity market.
Not such a special super Sunday, right?
Who
That
said
we
in the
were-
morning? Somebody said the color. Or so there was a guest who said that. At the NSE, you were at the NSE, and someone said that I hope it's not going to be.
And today's low actually is coinciding with the September 30th low. We went down on September 30th to 24,587. And from there, we did see a bit of a bounce. The problem is now there's no real trigger, to get very, very excited about the markets. Hopefully earnings pick up, but otherwise that, that important trigger is missing, that reason to go ahead and buy. And just one more point, Prashant, you're making with regard to positioning. The factor that we track in terms of technicals is also the PCR. That's come down to 0.61. So normally we've seen it base out here, but we'll have to see. Tomorrow's going to be a rough morning, and then maybe some kind of stability is what we're looking forward to. But the PCR is moving towards that oversold level at around 0.61 as we speak.
Yeah. Mitesh is with us. Mitesh, sorry, you've been hearing and I didn't come to you earlier, but anything you'd recommend viewers do? Anything out there? Trades?
Couple of things, Prashant. One, I think, 24,950, 25,000 zone is taken out. But what is remaining is the Bank Nifty 58,200, 58,100 zone. If that goes, I would expect the Bank Nifty to head further lower, possibly till about 57,600 to begin with, and then 57,000, which means that in turn could put further pressure on the Nifty. So I think for the time being, the directional bias remains on the downside. We have maintained that we have had some put option spreads on the Nifty. I think we're holding on to them. And that apart, on the stock side, I have a sell on KFintech with a stop at about 910 for targets of 940. That's one trading call. And the other one is also a sell call, which is on MCX. It's come off the base low, but the structure is extremely weak. So if you want to sell now, keep a stop at about 2270. Look for targets of around 2120.
6 Nifty stocks which are managing to close up in the green: Max Healthcare, TCS, Wipro, Kotak Mahindra Bank, and Sun Pharma. That's the only space where you can see green on the screen. Mitesh, any trades here? There seems to be a flight to safety when it comes to IT this morning, this trade.
So IT, I still don't want to, look into it, but I was listening to the conversation which you had earlier, and a couple of these data center names, are showing some signs of reversal. I was looking at the charts of equity that's looking very good in the short term. I think, the stock declined from 3,800 all the way down to about sub 2,000 and is now giving you first signs of reversals. I think it could possibly, if you can keep a stop just below 2,200, maybe about 10, 15 points further lower, I think the first target could be around 2,600, and in a good case scenario, even 2,800 on the upside could happen.
Yeah, absolutely. Gurmeet, anything else you want to add? It's a poor day, what can one say? But 600 points now.
So we'll wait for tomorrow now, Prashant, because the full FI participation would probably come in tomorrow. Let's see. I think there will be very sharp moves, and I think till such time, I think it's good to preserve some cash. Fortunately, we have some. But let's see. We were hoping to deploy today, but the market has taken all of us by surprise. But as I said, few things will stand out eventually once things settle, because there's not much incremental damage as far as things at the economy or market level is concerned. So maybe BFSI, auto, wherever the trends are positive, economic momentum is good, might present some opportunities, but good to wait for some time. Also, this metal meltdown, margin calls getting triggered will have some impact. So that may actually work to your favor in some time. May not be immediately, but maybe with a lag.
Market breadth is completely swung. 2:1 on the other side. So 1,000 stocks are higher. Some 2,100 stocks on the NSE are lower right now. And it's, Hindustan Copper, just the big volume-led losers, right? I mean, I think I can count at least, it's a long list of 10% losers today. Hindustan Copper, MCX, BSC, Hindustan Zinc, Nalco, Garden Reach, Mazgaon, BDL, that big rally in defense, all sold into. And this is something we were talking about earlier as well. Angel One, the e-gold ETFs, Muthoot Finance, Silver Bees, Bank of India, Nuvama, Paras Defense, Indian Bank, IIFL down 10. And that's just, I guess, half the list, because it's a really long list of just severe amount of selling pressure which came through and showed up in terms of trade today, guys.
Well, that's right. A lot of selling is what we've seen across the board actually in today's trading session. Rima, you want to highlight a few more names?
Well, on the way down, it's mostly related to the commodity names. Hindustan Copper, MCX, many of the ETFs, Nippon India Silver ETF. Defense stocks corrected sharply. There was anticipation of a bigger increase, but there was disappointment visible on Bharat Dynamics, BEL, PSU banks under pressure, Bank of India. In the frontline pack, we had Hindalco, ONGC, SBI. These are stocks with cuts in excess of more than 5%. On the way up, I think IT goes home as the only sectoral index which managed to close in the green.
Well, on that note, though, we'll wrap up on our special coverage. More news and updates continue right here on CNBC TV 18. Stay with us.
Working with the
luxury, heritage, and valor are timeless. Let them grow on you. Royal Ranthambore, India's finest yet.
This is Network 18, and you're watching CNBC TV 18.
In the heart of the jungle roams the finest creature, and through the chaos of the sparkling city lights, I am reminded of the timeless valor of the majestic tiger. In life's wild journey, we have one shot to thrill. And when done flawlessly, we unwind and allow our spirits to rejuvenate. Royal Ranthambore, India's finest yet.
This is Network 18, and you're watching CNBC TV 18.
Hello and welcome to this budget special. I am Rima. With me is Nigel, and markets crashed on budget day. The key indices were down 2%. The Nifty at that 24,800 mark. The Sensex selling off nearly 1,500 points. And of course, the biggest culprit was the sentiment dampener was the increase in STT on the derivatives market.
Well, that's right, Rima. Let's do a quick wrap, though, of what took place in today's trading session. Yes, as you said, the Nifty was down, and you did have the Nifty Bank as well that was under pressure in today's trading session. A very, very difficult day of trade. As you can see, all the indices, the Nifty ending down close to around 500 points. At one point of time, we were down close to around 700 points. The biggest hit really today came in terms of sentiment. No one was factoring in, or at least the buzz was not very, very loud, that an STT hike could come about. That's precisely what the finance minister did announce. And because of that, you had all these market players, whether you're looking at Angel One, BSE, CDSL, all of them took a sharp knock in today's trading session. There was an expectation that the defense-related names, they'll see a higher allocation. To be fair, actually, the allocation is quite high. However, those stocks had already run up in anticipation, and that's why those stocks had come in for profit-taking. BEL, Bharat Dynamics, as well as HAL, all of them sharply lower in today's trading session. Bharat Dynamics, in fact, had put on a good amount of weight getting into this event, and all that got sold into. So those stocks were under pressure. The other problem was the gross market borrowing. That number came higher than expected at around 17 lakh crore, or the street was bracing for a number of around 16 to around 16.5 lakh crore. And because of that, the PSU banking names, after seeing a good run up in the last few trading sessions, they did come in for profit taking. Even Big Boy, SBI did see some selling. PNB as well did end lower in today's trade. The other couple of names, though, did pretty well. So let's highlight a couple of winners. Data center plays. There was a bit of a booster shot that came in for them. So Anantraj, E2E Networks. Remember, these are stocks that have already seen a sharp correction. You have NetWeb Technologies as well. That was higher. Let's get some of those stocks running for you on the screen. And Orient Pro, some kind of play with regard to data center. We'll have to see how it actually plays out. For the time being, though, these stocks did pretty well. Precious metal stocks, though, they did correct over the weekend. And today, some of those stocks that are direct play in terms of precious metals, they came in for profit taking. MCX was down close to around 10% in trade. You had Muthoot Finance as well. That was lower because, that in the entire up move that we saw on gold, Muthoot Finance as well did play out. And Hindustan Zinc, Vedanta just sold a % stake in the company at much higher levels. And today, post that correction that we saw in silver, well, those stocks, in fact, were lower. The AMS companies, though, there was a hike in terms of the PLI component. And because of that, those stocks did well. So Amber, Keynes, both of them, they outperformed in today's trading session. Moving to some of those IT sector names, there was some kind of relief that came because of the harbor turnover threshold for IT services. That was increased. Some kind of booster shot coming in with simplification of buyback rules as well. That's what pushed these stocks up. So you had Wipro that was higher in today's trading session. Finally, there was a fear that there's going to be a hike in gold import duty. Didn't come about. So you had the jewelers that actually did pretty well. Titan came off the highs, so that stock was trading in the green. And in today's market, a stock trading in the green actually was a bit of a rarity. And Kalyan Jewelers as well, after the kind of selling that we're seeing, that stock as well moved up. The other space that actually did see some kind of a bounce from the lows was the OMCs, because the excise duty hike on oil hasn't really been announced. We'll have to see how the arithmetic works. But HPCL, after CNBC TV 18, got some clarification on that front. That stock as well ended higher. But Rima, what a day of trade, right? No one would have thought. Came in with some optimism that maybe there'll be something that'll be done to spur sentiment, to get the FIs back. That didn't come about. The STT hike, that's something that's prolonged the pain, actually, from an equity market perspective.
Completely spooked the market. And this is the biggest single-day fall that we've seen on a budget day in the last 6 years. In fact, let's go across to Yash to talk about what is the biggest overhang on the market, this increase in the STT on derivatives. Yash.
Well, Rima, just yesterday, there were certain counters from where there was a very faint noise around STT increase, which was being heard. Of course, yesterday, it was only a chatter. And today, it played out exactly as per the script. The government, through its budget, hiking the securities transaction tax, or STT, on equity options to 0.15% from 0.1%. That's a hike of about 50% in STT on equity options, and on equity futures, STT being hiked from 0.15% to 0.15% from 0.05%. That's a 150% hike in STT on equity futures. Now, an important clarification, where the market was into some bit of confusion in the early announcement time, and that was that this STT is only on equity options and futures and not on commodity transactions. So that is an important clarification which came about from experts as the day went, but indeed a very steep hike when it comes to the securities transaction tax, which is expected to hit very hard as far as those high frequency trade, those multiple transactions are concerned as far as futures and options is concerned. From the listed player point of view, of course, there are certain players on the market which are severely impacted, and that showed in the stock price as well. For Angel One, FNO transactions contribute about 44% of their revenue. BSE, it contributes about 55% of their revenue. NSE, it contributes about 70% of their revenue. These numbers are as on FY25, and the change in taxation is expected to impact this side of the revenue directly. There was a very interesting tweet which came from Nitin Kamath just yesterday, and that was projected STT collection for FY25-26 was 78,000 crores. The government was falling short by about 25%. This coming about will take care of that deficit, hopefully, in the coming financial year.
Okay, all right. Thanks a lot for that. Yash, well, let's focus on the other sector, defense. That was on the offense of the last few trading sessions. Today, they actually got what they wanted, but the stocks did sell off. Ria joins in to break down the numbers for us. Ria, take it away.
Well, yes, the government this time around has announced a total defense budget of 7.85 lakh crores. Now, compare this to last year's budget of 6.81 lakh crores. It's an increase of roughly 15%. So, the expectations on this front range from 10 to 15%. So, this is at the top end of the expectations. The defense expenditure has been announced at 5.95 lakh crore rupees for the year, up 21% compared to last year's budget. Defense capital allocation has also been announced at 2.31 lakh crores versus 1.92 lakh crores in FY26, and this is also an increase of roughly 20% compared to last year, also in line with the expectations that the street was working with. There has also been a 24% increase in the budget for defense modernization, which is a bit positive. Apart from this, they have also allocated roughly rupees 63,734 crores for aircraft and aero engines for defense, which is a 31% increase compared to last year's outlay. Now, in terms of the market reaction, the Nifty Defense Index ended roughly 5.4% lower today, recovering from its lows of 7 to 8%. And in fact, at one point of the trading session earlier before the budget was announced, it was up by roughly 2% earlier in the session. Now, the street seems to be disappointed by the fact that there were no separate announcements or schemes that were announced for certain segments like drones, UAVs, electronic warfare, defense electronics, missiles, even for arms and ammunition or for indigenization as a whole. So that is where the street seems to be disappointed. But overall, this was a very healthy increase in the capital allocation as well as for the overall defense budget.
Thank you very much for that. It's over to Ekta now for more on what came out on the biopharma.
Well, yes, I'll start with, Biopharma Shakti, which was announced. So it's around a 10,000 crore biopharma scheme, which was launched, which is aimed to make India a biopharma hub, build domestic biologics manufacturing. So there are 3 new NIPER institutes which are planned, 7 existing NIPER institutes which will be upgraded, and 1,000+ accredited clinical trial sites which are proposed as well. It is a sentiment positive for the sector. Biocon, Dr. Reddy, Sun Pharma, Lupin, Glenmark, just to name a few. In terms of hospitals and diagnostics, medical tourism push, so 5 regional medical hubs are planned. It will be a public-private partnership model. Integrated healthcare complexes are proposed as well. Listed beneficiaries include the likes of Apollo, Fortis, Max Healthcare, Dr. Lal's, Metropolis, all of these stocks in focus. But remember, while this is a positive, the execution will be something that the street will be watching for in terms of all of these announcements and the material impact eventually on the earnings as well.
Okay, got it. Thanks, Ekta, for that. Hopping across to Upasana, she brings us some good news with regard to a few of those companies from the EMS space that actually did well. Upasana, tell us.
Well, under the ECMS scheme, the investment outlay has been increased from 22,919 crore to 40,000 crore. Mind you that the ECMS scheme was first notified in April 2025 with a budget outlay of 22,919 crore for a period of 6 years, with the aim to build $500 billion electronic manufacturing ecosystem by 2030-31. Now, we are assessing a positive impact on EMS players given the high allocation, which means more approvals for the companies. Now, if you look at the latest development in October 2025, MEIT has approved the first batch of 7 projects under ECMS involving manufacturing of copper-clad PCBs and even camera modules. Now, the approved players so far include Keynes Tech, which has received approvals in all the categories that they have applied. Sirma SGS and Amber have also got approvals for multi-layer board. And now lastly, coming to Dixon, the approvals for display application and even optical transceiver is awaited in the upcoming tranches of ECMS approvals. So all in all, certainly a positive news for EMS space.
Thank you very much for that. And on that note, we'll slip into a short break. On the other side, Feroz Aziz of Anand Rathi Wealth and Rajashri Sabnavis of Grant Thornton Advisory will be joining in.
Vakil.
Hello and welcome. You're still tuned into this special budget programming on CNBC TV 18. A lot of announcements and taxation, of course, that is one important aspect to discuss. What it means for you as an investor, how does it impact your profits, how does it impact you on a daily basis? Let's get to that and understand more on the impact. Joining us today are Feroz Aziz of Anand Rathi Wealth, and we also have Rajashri Sabnavis joining us. She's from Grant Thornton Bharat. Feroz and Rajashri, thank you so much for joining in. Well, you know, of course, we've been talking about that hike in securities transaction tax, the change in buyback taxes. Before we discuss those in greater detail, what stood out for you in the budget when it comes to personal finance and personal taxes? Rashi, let me begin with you, and then I'll come across to you, Feroz.
Sure. Thanks, Thanks for having me on this panel. I think if one were to look at from a market standpoint, I would segregate into small investors, small and retail investors, and large corporates and the traders. Every effort has been made in this budget to essentially protect the small shareholders, and you've seen some of the announcements. In fact, they go to the fundamental. The second is when we talk about investors, I think the serious investors would clearly look at the actual fundamental growth and the growth trajectory that we as a country are at. And some of the announcements that has been made, keeping in mind the global uncertainty and the headwind, tailwind, whatever you may refer to, I think that's something which we should be considering. And from a tax standpoint, the promise was made in terms of not too many changes, simplifying and ensuring that the smaller taxpayers face less compliance burden. I think every effort has been made in this budget to walk the talk.
Okay, take that
so
point.
If you want examples, I can quickly touch upon it, but I guess it's up to you.
No, of course. I'll come back to you on that example quickly. Rashri, let me go across to Feroz. Feroz, what stood out for you in the budget from a personal tax perspective? We did see securities transaction tax on F&O getting hiked. Do you think that would impact arbitrage funds and ultimately the returns for an investor there?
Yes, Sonal. First, let me touch upon the direct tax. I think one thing, if you're a viewer and if you're watching, if you're in the old tax regime, it is apparent to naked eye that you should not swim against the tide. There are about 74%, 73% of them have now moved to the new tax regime. If you are a part of the 26%, I think this budget is the last nail in the coffin for the old tax regime. And you should try and move to the new one at ASAP and not get into these small deductions because there was no tampering there. And the new tax regime is so lucrative that you shouldn't miss it out. That's point one. Point two, when it comes to STT, I think there are large implications, different kinds of implication of the STT. One is there's a key message. That's not just an STT change. If you read the para in the proposed bill, you will see it as we are trying to discourage the futures and options trading platform and the higher volumes which are there. It's not just about tax collection. How much tax do we collect in STD? 48,000 crores, if I'm not wrong. That will not materially change because of this tax change. It is a message that we don't want trading mindset capital market like the US. We want a more investor-friendly market than a trader-friendly market. That's why you see the traders are spoofed and they want to quit today and bring down Nifty by about 600 points. So it is investor-friendly, trader-unfriendly. That's one message. The second thing, if you see the nuance or the fine print, says that interest expense will not be allowed to set off against the dividend if you have borrowed to invest in the market. Again, leveraged market positions are also discouraged. So that's where I would like to stop. But there are larger implications to the futures and options on the derivative side. Since I manage a derivative treasury for a couple of decades, I probably touch upon a little greater detail at that point.
Okay, I'll come to you on that in just a bit. Rashri, you wanted to give an example on how smaller changes have been made that could have a bigger impact. If you can touch upon that in a greater detail and the buyback tax that has been changed. Can you explain that to us? How does it change for retail investors? Because for corporate promoters and non-corporate promoters, we have different rates. What does it mean for a retail investor?
Sure. I guess, okay, until last year, what they had said is when buyback tax was introduced, of course, and when the change was brought in, they had said it would be taxed as dividend income, okay, in the hands of the investor. They have, in fact, cleared that and they made it uniform and said everything will now be subject to tax as capital gains. The only differentiation that they made is because the promoters are in a position to influence these decisions, there is an attempt, and there is clearly, that's what the announcement is, that said that the promoters will not only, there is an additional tax that is applicable to promoters as well. Now, of course, the rate of tax would differ depending on whether the promoter is an individual or corporate, and accordingly, there is an additional tax that has been imposed. That's one. Second, if you see, for the first time, if you see again the small shareholders. So here again, my smaller shareholders, very clear, it's capital gains. Second attempt has been made in terms of filing of these Form 15F and 15G. This is against small shareholders, mind you. Earlier, you would have to run to every bank, every company and submit these forms. Now what they're saying is, all these smaller shareholders have to do is submit it to the depository, and the depository will then in turn submit it to the company. So here, cost of compliance and the headache of going across to so many companies is kind of cut down to a large extent. So that is a second move. Third, again, there is an attempt to, from a tax standpoint, if you are a small shareholder, again, there are certain filings which you can make. They have kind of made changes to the timelines within which you can actually go and revise a return. If you want to declare certain foreign assets, again, there is a revision that's been made. So all in all, it is more bringing in stability and also looking at the small retail shareholders and trying to protect, in a way, from the market vagaries, which if a few months ago, the entire STT, I'm not surprised, with the rate increase, because there was data that was available in the public domain, which showed how much of money the retail investors had lost on account of trading in futures and options.
9 out of 10 investors or traders, I would say the word, had lost money in F&O trading. Take that point, and that is something that the ministry had also alluded to, the particular study. Feroz, you wanted to touch upon the derivatives bit, also wanted to understand some of the exemptions or the TCS rate cuts which have come by on LRS payments that are made. I just wanted to understand, how are some of these factors going to affect your personal finances? You did mention it's time to move to new tax regime. Anything else that you think was a big takeaway from the budget this time?
Yes, so let's see. First, let me touch upon that 15H and 15G submission to depositories. Is of course something which is very good, but I was surprised when I read the fine print that it's applicable from financial year 27-28 and not the one which is coming by. So that's one thing which you should keep a note of. The relief to small shareholders and senior citizens with that form submitting to depositories is not applicable for the subsequent financial year, but 1 year later. That was surprising. That's one thing I thought fine print should be highlighted. Coming to the question of, from a personal tax standpoint, what stands out is certainly the fact that the buyback tax, I personally think it is beyond the point which I'm going to make is a nuanced point and not visible to naked eye. It is not about tax coming down for a retail shareholder alone. If the tax comes down from dividend tax, which was a flat rate, to 12.5% in the hands of the tax owner, there are two things which happen. One is the frequency with which buybacks were happening had become near zero. Now, when buybacks happen in the market, there's a kind of a market buoyancy which happens. Now, for example, if I'm a listed company, if I'm making profits like if my company's profits projected are 375 crores for this year, and if with God's grace, if I'm able to meet that guidance, the first question which the board will ask is how much to be paid back and by what form. If it is dividend, it does not impact market prices, but if it is buyback, it creates a buoyancy to the price. That company is extinguishing their shares by buying it back, increasing the promoter stake if it does not participate. So it is a great positive, buoyant sentiment for the NSE small cap 250 companies, especially because today the balance sheets are reasonably large. The reserves are too many. And that's what I think is the most important impact. Not the tax, but the frequency of buybacks, creating market liquidity for an FII, for a retail guy, tax efficiently.
Got it. Take that point. I have a lot more questions. We are completely out of time. So we'll take this forward some other day, I would say tomorrow, because we have a working day, a Monday tomorrow. But thank you so much for your initial thoughts, Feroz and Rajshri. It was a pleasure speaking with you. And with that, we'll take your leave on this edition of Budget Programming. But of course, more will continue on the other side.
Go. And common.
माननीय वित्त मंत्री श्रीमती निर्मला सीतारमन जी।
We are inspired by three kartavya. Our first kartavya is to accelerate and sustain economic growth. Our second kartavya is to fulfill aspirations of our people and build their capacity, making them strong partners in India's path to prosperity. Our third kartavya, aligned with our vision of Sabka Saath, Sabka Vikas.
Good evening and thank you for joining this CNBC TV 18 special broadcast on Budget Day. I'm Ritu Singh and here are the headlines. Finance Minister Nirmala Sitharaman's ninth budget keeps an eye on the fiscal deficit glide path, even as it focuses on driving growth by increasing exports and attracting stable long-term investments. Promises to sustain the momentum of structural reforms, strengthen the financial sector and support building cutting-edge technologies at home. In a surprise move, the finance minister proposes hiking securities transaction taxes on equity futures and options contracts. STT on futures is to be hiked by 150% and by 50% on options. The move rattles the stock markets. The Sensex and Nifty reverse early gains to post the biggest budget day decline in 6 years. Finance Minister projects nominal GDP to grow at 10% in the next fiscal, hikes capital expenditure outlay by 9% to 12.2 lakh crore rupees. Documents show the government missed last year's target by 3%. Finance Minister looks to spend more to shore up India's defense capabilities. The budget proposes hiking defense capex outlay by 21% to 5.9 lakh crore rupees. The budget for defense modernization is up 24%. The government sticks to the path of fiscal consolidation. Fiscal deficit target for the fiscal is projected at 4.4%. The FY27 target stands at 4.3%. The debt to GDP ratio is projected to decline from 56.1% to 55.6%. A sharp hike in government borrowing. The budget projects gross borrowing of 17.2 lakh crore rupees. This is 18% higher than the current fiscal year's estimate of 14.6 lakh crore rupees. The government projects net tax collections at 28.6 lakh crore rupees. This is slightly lower than budget estimates last year. Collections in FY26 missed the budget estimate by 1.6 lakh crore rupees. The government accepts the recommendations of the 16th Finance Commission. States will continue to get a 41% share of overall tax revenues. As expected, there are no changes to personal income tax, but the budget proposes measures to ease compliance and cut down on litigation, like more time to revise tax returns without penalties. Also proposes lowering tax collected as source on foreign travel to a flat 2%. TCS on money sent abroad for educational or medical expenses to also be at 2%. The finance minister moves to further curtail any improper use of buybacks, proposes to tax buyback for all types of shareholders as capital gains, also proposes introducing an additional buyback tax on promoters to disincentivize the misuse of tax arbitrage, says the tax will make the effective tax rate 22% for corporate promoters and 30% for non-corporate promoters. Finance Minister looks to help the government companies raise funds. Budget proposes accelerating the recycling of significant real estate assets of CPSEs through dedicated REITs. The finance minister moves to offset the impact of 50% US tariffs, allocates 40,000 crore rupees to boost electronic manufacturing, announces 10,000 crores dedicated fund for MSMEs, and also plans to set up mega textile parks, eases export norms for seafood and leather sectors. The finance minister looks to tap more foreign investment for India's AI ecosystem. The budget proposes a 20-year tax holiday to any foreign company that provides cloud services using data centers in India, but the holiday can be availed only if this is done through an Indian reseller entity. Also proposes providing a safe harbor of 15% on the cost of the company, providing the service is a related entity. The finance minister acknowledges the role of emerging orange economy in nation building. Budget 2026 proposes supporting the Indian Institute of Creative Technologies in Mumbai to nurture talent in India's fast-growing animation, visual effects, and gaming comics industries. Also proposes setting up content creator labs across 15,000 secondary schools and 500 colleges. A modest capex hike, more firepower for India's defense arsenal, and a tax shocker for the stock markets. Finance Minister Nirmala Sitharaman's 9th consecutive budget is aimed at providing a thrust to manufacturing and offset the impact of 50% US tariffs. Let's quickly take you through some of the top highlights. First of all, the stock markets were rattled after the finance minister proposed hiking the securities transaction tax, or STT, on equity futures and option contracts. The market saw their biggest budget day fall in 6 years. The finance minister added more firepower to India's defense arsenal. Defense allocation has been hiked by 21% to 5.9 lakh crore rupees. The budget for defense modernization is up 24% overall. Capex also saw a modest growth of 9%. As expected, there are no changes to personal income tax, but the budget did propose measures to ease compliance and cut down on litigation, like more time to revise tax returns without penalties. Here are the key snippets of the finance minister's minute budget speech.
In the interest of minority shareholders, I propose to tax buyback for all types of shareholders as capital gains. However, to disincentivize misuse of tax arbitrage, promoters will pay an additional buyback tax. This will make effective tax 22% for corporate promoters. For non-corporate promoters, the effective tax will be 30%. I propose to raise the STT on futures to 0.05% from the present 0.02%. STT on options premium and exercise of options are both proposed to be raised to 0.15% from the present rate of 0.1% and 0.125% respectively.
ये बजट भारत की वैश्विक भूमिका को नए सिरे से सशक्त करता है। भारत के 140 करोड़ नागरिक फास्टेस्ट ग्रोइंग इकोनॉमी बनकर ही संतुष्ट नहीं है। हम जल्द से जल्द दुनिया की तीसरी सबसे बड़ी अर्थव्यवस्था बनना चाहते हैं।
All right, let's go across to Shireen Bhan, who is in conversation with some special guests to decode Budget 2026. Shireen, over to you.
Well, thanks very much. Yes, those are some of the key budget highlights that we're presenting to you here on CNBC TV 18, your budget headquarters. Let's bring in more big voices. As we've been pointing out, while the focus and the attention has been on the union budget, another very important document being tabled today, and that is the report of the 16th Finance Commission. Joining us now is a member of the 16th Finance Commission, Mr. Manoj Panda. The chairman, of course, of the Finance Commission is Dr. Arvind Panagaria. Also with us, former member of the CBDT, Akhilesh Ranjan. Mr. Panda and Mr. Ranjan, many thanks for joining us. Mr. Panda, to you first. The big headline, of course, is that devolution number, status quo there, 41%, as was expected. But take us through the rationale behind that and some of the other important measures that the Finance Commission has proposed in its recommendations. Mr. Panda, can you hear? Well, We'll come to that in just a second, but let's go across to Jyotiraditya Scindia in conversation with my colleague Ashwit Kumar. Here's the Minister of Telecom.
To get an understanding to help us unpack what that translates into, I have with me the Honorable Minister, Mr. Jyotiraditya Scindia. Mr. Scindia, thank you so much for taking out time. Firstly, the big message that the Finance Minister is looking to send out via this message, there was a very clear thrust towards infrastructure spend. There was a very clear thrust towards newer technologies. Your key takeaways?
So, the Prime Minister and the Finance Minister both have set the tone for Vikasit Bharat 2047. There has been a tremendous amount of momentum over the last 12 years from 2014-15 till date. The economy is on a very, very strong footing. With that in mind, setting ourselves up for ensuring greater momentum on our route to 2047. The years that we're talking about. We're talking about sustained economic growth. We're talking about a Vikas model that looks at assimilation of every single citizen and unlocks their potential to contribute to that growth, and a concept of fulfilling aspirations of people. And if you look at the sustained thrust on capital expenditure as well as infrastructure, in addition to that, a couple of the main themes that are coming out. First, ease of doing business for every single person across this country. Second, to be able to unlock new potential sectors for India, whether that's the orange economy, whether that is AI, whether that is urbanization, whether that is tourism, across the board. And I'm very glad to note that there has been a very important stress on fiscal performance. Fiscal deficit is now under control. We are looking at 4.4% for this year, 4.3% for the next year. We have maintained a very tight grip on inflation. For the 3 quarters, it's at only 1.7%. And along with that, for my 2 ministries, both for telecom and for donor, a very healthy increase in capex capability, both for telecom and for donor. The Northeast has got special emphasis in this budget, both from a urbanization point of view and the 4,000 e-buses to the...
Well, that is the Telecom Minister Jyotiraditya Scindia in conversation with Ashwit Kumar. Let's go across to the former CBDT member Akhilesh Ranjan. Mr. Ranjan, many thanks for joining us here. As expected, no changes on personal income tax, but what was not expected was that STT hike. What you had said very clearly was you didn't anticipate any changes on LTCG, none of that coming through, changes on safe harbor, specifically for IT services. On balance, on the tax side, Mr. Ranjan, how would you rate the budget and the measures taken?
Well, Shri, thanks for having me here. Well, the STT was a bit of a shocker. There are some very good things which have been announced. You remember I was talking about preventing litigation from happening. I think the measures that have been announced for safe harbor and transfer pricing, various other things on the APA provide transfer pricing agreement. These are steps which are very, very, very welcome. I'm sure they will cut down on the litigation to a large extent. There are also a host of measures which are building trust and confidence in the taxpayers, the decriminalizing provisions, the provisions where where tax defaults are now not criminal really offenses in that sense. I think that's a very, very good move. So those are very well received. And the only thing is, I'm a bit surprised at the STT increase. As I had said on that day, I think the STT is no longer a legitimate tax. So and then to increase it is a bit of very strange. I'm told that the reason is to curb excessive speculation. I'm not so sure whether this sort of an increase in STT does anything to curb speculation amongst the investors. It might just hit the margins of large players who are active in the futures and options market. But let's see, I'm not an expert on this. Let's hope it doesn't really impact the market to that extent.
Yes, the market is going to have to live with that. But Mr. Ranjan, a couple of other issues that I want to point out to you. And we've seen a lot of actually in the fine print, a lot of retrospective, a lot of amendments coming in to retrospectively react to court orders, especially when it comes to the DIN amendment and so on and so forth. What do you make of that?
Well, actually, I think we should view that in a positive light. I think there are attempts to try and resolve issues which are creating a lot of uncertainty in the minds of taxpayers. Both of these major retrospective amendments you're talking about, they concern an issue which is going on in the courts for a very long time, and it's not a very substantive issue. It's a technical issue, but it is throwing the whole system into confusion. So I think it's good that that the view has been made clear, that the law has been resolved, clarified, and resolved, and I think we should be viewed in that light, not as a retrospective, as something coming as a surprise, but something done to really remove ambiguities and to prevent litigation from happening or stop the litigation from happening. So I think that we should look at it in that way.
That's a welcome move, you're saying. I'll come back to you in just a second, but let me get Mr. Manoj Panda in, member of the 16th Finance Commission. As I was pointing out, the budget, of course, in itself a big event, but it's also the 16th Finance Commission's recommendations that have been tabled today and accepted by the government. Mr. Panda, many thanks for joining us. The headline that we've got, of course, is on the devolution, which stays at 41%, and that is the formula that the Finance Commission has stuck with. But if I could ask you to explain to us the rationale behind sticking with that number and some of the key recommendations that the Finance Commission has made this time around.
Yeah, thank you. Basically, the 41-42% has continued for the last two commissions. And particularly during the 14th commission, there was a big rise in the devolution from 32 to 42. 15th broadly continued that, except for some adjustment for Jammu and Kashmir being made union territories. So, and our overall assessment is that the central financial position is as good or as bad as that of those of the states. And when we talk of a developed India or movement towards that, the center cannot be made fiscally weak. They have to be fiscally as strong as those of the states. The responsibility of a developed India contributing more towards GDP lies both with the center as well as with the states. So because of that, we decided that it is not the time to change the 41%. We should stick to it, and center should feel as much comfortable as in the past couple of years.
Right. Mr. Panda, some of the other key recommendations, to do with grants, to do perhaps with centrally sponsored schemes, etc. We haven't been able to go through the fine print of the Finance Commission's recommendations yet. We've been busy with the budget. If you can take us through some of the key recommendations you've made.
Yeah, no, the centrally sponsored schemes, that doesn't come under the purview of the Finance Commission. But what also comes apart from the 41% is how the 41% will be divided among each of the states. And that's a major part of the recommendation. What we have done this time is basically introduce a new variable called contribution to GDP. And it is given 10% weight by taking out some weight from area, some from the forest, and also tax effort. Now, the rationale for that is the states must be nudged towards their own contributions to GDP. If we see the states' developments, some of them are developing fairly well, but some of them are not able to catch up. They must be nudged to catch up with the rest, at least to some minimum level. And that is the major reason why we have gone for contributions to GDP. Along with that,
which means what? Mr. Panda, just for the benefit of all our viewers, which means that the states that are doing better, what is the impact on them? And the states that are contributing less to GDP, what is the impact on them?
Oh, I think the overall impact will be, as a percentage of devaluation, it will not be large. It will be only 0.2, 0.3% of the total. For most of the states, for 1 or 2 states, it might go to 0.4%. But the developed states were always complaining that they are being penalized for their contributions to national growth, contributions to national revenue. And that is the reason why we thought it is time to change the direction, at least nominally, so that even if there is a small change, that will send a message. The other major...
So the finance... yeah, go ahead, sir.
Yeah, the other major recommendation is, earlier where states were being given quite large revenue deficit grants to begin with, and they were being asked to reduce it substantially or even eliminate by the end of the Finance Commission's recommendation period at the end of the 5th year. Now, our analysis says that the normative assessment that the Finance Commissions used to do and the actual revenue deficit that actually took place, they are very widely different. And a cycle of high deficit slowly going down to low deficit by the 5th year, and again coming back to high deficit, that cycle continued for the last 3-4 commissions. And last year, the 15th Finance Commission's last year recommendation, it brought it down to as low as 13,000 crores for only for 6 or 7 states. All other states, they did not get any revenue deficit. We have decided to recommend that no state should get any revenue deficit during our award period. Now it is for the government to take a decision on that. I think 2 other recommendations
measure that no state should have a revenue deficit. What does that mean, sir? How do you ensure that?
No, we didn't. We recommended that no states should get it. The 15th Finance Commission, they had awarded to 6 states 13,000 crores, bringing it down from more than 1 lakh crores. Then we thought it is almost negligible now. It is time to eliminate the deficit altogether. And revenue deficit, if it is eliminated, then that will give incentive for investment. And in the process, again, states can contribute towards GDP.
Well, Mr. Panda, we will have to go through the fine print of your recommendations and then perhaps have a more nuanced conversation with you. But thanks so much for joining us with your first take on the recommendations made by the Finance Commission. Mr. Ranjan, a quick final word from you on the proposal for that tax-free proposal that the Finance Minister has announced for data centers to be able to service foreign companies out of India. 22-year tax-free period. What do you make of that?
Yes, actually, this is in view of the new data center policy which is coming out from the Ministry of Information Technology. It is an attempt really to assuage the apprehensions of the foreign companies which are going to spend billions of dollars in setting up these data centers. One apprehension of these companies was that since they are using a server installed in India, their income that they earn out overseas might become taxable in India to some extent. And I think this exemption, this outright exemption, of course, it is not something that would have been very clear in the law. The taxability itself was in doubt, but then there was an apprehension. And I think the government has tried to just remove that apprehension very clearly by giving a very blanket sort of exemption. The only condition being that if you are earning income by providing services to Indian residents, then that must go to an Indian company, and the server must be under the control of the Indian company. I think it's a measure which is trying to give tax serenity again. So one more measure in the area of serenity, which I think is quite welcome.
a welcome move there. Mr. Ranjan, we will, of course, continue to speak with you through the course of the next few days as we unravel more of the fine print. But don't go anywhere, sir. Don't go anywhere to our viewers. So thank you, Mr. Ranjan, for joining us. We're going to take a quick break and return with a lot more. Stay tuned to CNBC TV 18. We're back in a moment.
Reform Express. Our government has undertaken comprehensive reforms towards creating employment, boosting productivity, and accelerating growth. After the Prime Minister's announcement on Independence Day in 2025,
Reform, not rhetoric, ambition, not ambivalence. With that, Finance Minister Nirmala Sitharaman rose to present her record-breaking 9th budget, holding out hope for India in the medium to long term and ensuring that some of the pain points, some of the friction areas are addressed, be it on taxation or predictability and certainty. What didn't go down well was the hike as far as the STT on options and futures were concerned. That weighed on market sentiment, but that apart, there is plenty of continuity that Finance Minister Nirmala Sitharaman has stuck to, whether it is on the fiscal glide path or it is on the reform agenda. Joining me now is the top team from FICCI to take us through what they make of Budget 2026. With us, Anand Goenka, Puneet Dalmia, Harshpati Singhania, Shubhrakant Panda, and Sandeep Samani. Gentlemen, many thanks for joining us. Ananta, I'll start by talking to you. The big focus you expected was manufacturing. There's plenty there for manufacturing, but equally, there is plenty there for services. In fact, the Niti Aayog CEO BVR Subramaniam telling me this is a services budget. Your take on Budget 2026?
I think the budget focuses on growth, inclusivity, and youth. I think the most exciting part is that it is a budget of continuity and stability, and the focus on Reform Express continues. Focus on infrastructure has continued and only increased. And finally, on the manufacturing side, a very good balance of future industries where we need to be indispensable, and present industries which are very employment focused, such as textiles, leather, apparel. So a very well balanced budget which takes into account a macroeconomic or a macro view into the future, as well as the micros of taking care of the initial challenges that we are seeing.
Puneet Dalmia, capex number is now out 12.2 lakh crore rupees, and it goes in line with what the government has been saying, that look, we can't keep doing double-digit kind of capex numbers year after year. On balance, what do you take away from what the government has said on capex, the larger infrastructure thrust in the budget?
Well, I think I think India is the most credible large economy growth story in the world today, and it is because it offers certainty in an era of unprecedented global chaos and uncertainty. I think this is driven by the fact that there is continuity on infrastructure spend, as you said, 12 lakh crores. I think there is also a very stable tax regime, and there is also more ease of compliance on regulation. So I think we are seeing all of this play out as a larger vision of how to create a Vikasit Bharat by 2047 and an Atmanirbhar Bharat. So I think the building blocks keep getting put in place every year, and it strengthens the foundation to create a vision, and we move forward one step every year. So there's a 9th budget for the Honorable Finance Minister, which is a record, and it's the first budget from the Kartavya Bhavan. And as I was saying, that it's from a bhav of kartavya, which is good intentions, lead to good policies, will lead to good outcomes. And I think they've also said that it will be a budget which will continue growth, 7% GDP growth, build capacity for the future to fulfill aspirations of India. And also, finally, it is Sabka Saath, Sabka Vikas for all families, for all communities, and for all regions. So apart from the big picture, there is a lot of micro detailing on which sectors, which areas, what is their strengths, and it allocates capital very thoughtfully to ensure that we can leverage strengths of each area and each community to further the vision that the Honorable Prime Minister has created.
Yes, absolutely. To take forward the point that you were making, whether it was MSMEs, whether it's a 10,000 crore rupee outlay, the electronic component manufacturing scheme, where the outlay has now been enhanced to 40,000 crores, or it is benefits, basic customs duty benefits to the nuclear power sector, and so on and so forth. Mrs. Singhania, if you were to look at the fine print and the minutiae, what stands out for you in terms of impact?
No, I think it's a very important budget from the point of view that we are operating from a space where our debt to GDP ratio is coming down continuously. So there is certainty, there is clarity in the direction, and that is very important. In today's turmoil globally, there are very few, and those particularly, nobody is growing at the rate that we are growing, which have these kinds of numbers. So this is very important, and as the Finance Minister herself said, this provides fiscal space. So this is extremely important to look at. Along with this, the Finance Minister has also talked about trying to invite foreign investments into India, be they through the data centers, be they through even people of Indian origin living overseas, because I think the rupee depreciation is also predicated on the fact that we are seeing large capital outflows. So besides looking at the domestic side growth alone, we are trying to invite foreign capital, which to me is a welcome move.
Shubhakant Panda, plenty there for the medical space, medical hubs for high-speed rail, defense corridors, and of course tourism as well. But on balance, what do you believe the budget is likely to deliver on in the near term? The medium to long term is a different story altogether.
Well, I would expect that the focus, as always, has to be on execution, because announcements are great. But in all fairness, I must also mention that this government and this finance minister has had a sharp focus on execution, as has been seen from previous budgets. Shireen, the point I wanted to add here is, I think what stood out for me was the multiple references to ease of living and many proposals which were connected, to that concept. So I think it's a citizen-centric budget, which is very welcome. And also from an inclusivity point of view, not just as Puneet mentioned about opportunities and resources for all sections of society, but the fact that even within the emphasis on manufacturing, there is also specific schemes and support for MSMEs, which is very important because that's the real job creation machine in the country, in any economy for that matter. And I think that focus will stand us in very good stead.
Okay, yes, a whole bunch of sectors there being mentioned by the finance minister. And the defense, while she didn't talk about it in her speech, the defense allocation has seen an increase B2B of about 21%. So that's been a significant change there and a significant capital allocation for the government as well. But Anand Goenka, coming back to you now, specifically, for the electronic manufacturing sector, because that was something that you had spoken about. She didn't announce a park, but, the component manufacturing scheme has got a significant uptick. There was a park announcement, but that was more to do with textiles and technical textiles to be specific. But, the point that you were making, that continue to accelerate growth for that sector, enough done?
Yes, so on the electronic manufacturing scheme, she has only increased the outlay, which is exemplifies enough focus on EMS. She has also added the semiconductor mission to continue with ISM 2.0. So both put together, there's a fair amount of focus on semiconductor sector.
Yes, and ISM 2.0, the allocation was not provided in the budget, and that's probably because it is waiting for cabinet approval. So we'll probably see an allocation coming in for ISM 2.0 later. But Puneet, coming back to you, high-speed rail, freight corridors, container shipping, an allocation for that as well. Ship repair, civil aviation sector, components being exempt from basic customs duty. So a lot in the infrastructure and allied infrastructure spaces linked to manufacturing also being mentioned there by the finance minister.
Look, India is building massive physical infrastructure and digital infrastructure. And this is intended to create inclusion and to boost productivity. And I think we are moving from a, just a domestic growth economy to being globally more competitive as an economy. So I think this will ensure all this investment in infrastructure will ensure that our logistics costs come down, mobility increases, people are more connected, and it just unlocks productivity across the people across various segments of society. So I think this is a very welcome move, and the beauty is it's done with a long-term vision. And the execution momentum just continues every year. So, and it's also done very thoughtfully. So the capital allocation is not, done, it's done with a lot of micro detailing, which cities should be connected where, what hubs should be created depending upon the strength of that area. So I think the capital allocation is also very thoughtful. And lastly, some of the investments in softer aspects of infrastructure like healthcare, education, tourism, etc., is being done on a challenge basis. So they're also very mindful of, getting states to compete with each other so that efficiencies can be unlocked. So I think I really like the fact that this will create global competitiveness for India and create inclusion because more people can get connected and be more mobile.
Right. Sandeep Samani, let me get your take on what you liked in the budget, the big highlights for you.
So I think for industry, the downside is always when there is a policy change suddenly. And I think this finance minister laid out a roadmap a few years ago, and she has stuck to the roadmap, improving on the roadmap year on year. So there is no unpleasant surprise. Focus continues to be on making India more competitive, which was one of her opening statements. And also, I think the important thing is continued focus on infrastructure. Infrastructure will help us. Better infrastructure will always help India improve its logistics costs, where we are higher than the rest of the world, therefore improving competitiveness. Also, a lot of focus on capital goods. SOPs being given to various industries to promote capital goods manufacturing in India. Labor-intensive industries being given SOPs, textiles, fisheries, shoes, leather. So I think focus in the right areas to use the money in a more efficient manner that the government has allocated. I was pleased to see the disinvestment budget being significantly raised to some 80,000 crores. So all the right focuses, including MSMEs, which are job creating. First time the government has said that they will create a 10,000 crore fund to actually invest equity in MSMEs. And I think that's a very bold step and a very good step. It improves in scaling up and giving the financial muscle to MSMEs that can really grow into larger companies. So overall, I think a good, directionally very good budget in terms of hitting all the sweet spots and making sure that we continue to focus on growth in India in a very volatile environment. Global environment is extremely volatile and uncertain. So India is I would say, an island of paradise in a very turbulent world.
It is a turbulent world, and it's turbulent for our stock markets today as well. We've seen the markets being very volatile through the course of the budget day. But gentlemen, we will, of course, continue to speak with you over the course of the next few weeks and months as many of these announcements come to fruition by way of execution. But today, for your first reactions post the Finance Minister's budget, thanks very much for joining us here on CNBC TV 18. We're going to take a quick break. There's plenty more that's coming up as we highlight the fine print of Budget 2026. Stay with us.
$350 reforms.
In the heart of the jungle roams the finest creature, and through the chaos of the sparkling city lights, I am reminded of the timeless valor of the majestic tiger. In life's wild journey, we have one shot to thrill. And when done flawlessly, we unwind and allow our spirits to rejuvenate. Royal Ranthambore, India's finest, yet.
This is Network 18, and you're watching CNBC TV 18.
Welcome back to the special broadcast on Budget 2026. Now, markets reversed their early gains to post the biggest budget day decline that we've seen in 6 years. Nigel D'Souza has all the market action and is joining in now. Nigel, what a tough Saturday or Sunday for the markets it's been.
A very, very difficult day of trade. As you can see, all the indices, the Nifty ending down close to around 500 points. At one point of time, we were down close to around 700 points. The biggest hit really today came in terms of sentiment. No one was factoring in, or at least the buzz was not very, very loud, that an STT hike could come about. That's precisely what the finance minister did announce. And because of that, you had all these market players, whether you're looking at Angel One, BSE, CDSL, all of them took a sharp knock in today's trading session. There was an expectation that the defense-related names, they'll see a higher allocation. To be fair, actually, the allocation is quite high. However, those stocks had already run up in anticipation, and that's why those stocks had come in for profit-taking. BEL, Bharat Dynamics, as well as HAL, all of them sharply lower in today's trading session. Bharat Dynamics, in fact, had put on a good amount of weight getting into this event, And all that got sold into, so those stocks were under pressure. The other problem was the gross market borrowing. That number came higher than expected at around 17 lakh crore, or the street was bracing for a number of around 16 to around 16.5 lakh crore. And because of that, the PSU banking names, after seeing a good run up in the last few trading sessions, they did come in for profit taking. Even Big Boy, SBI did see some selling. PNB as well did end lower in today's trade. The other couple of names, though, did pretty well. So let's highlight a couple of winners. Data center players, there was a bit of a booster shot that came in for them. So Anant Raj, E2E Networks. Remember, these are stocks that have already seen a sharp correction. You have NetWeb Technologies as well. That was higher. Let's get some of those stocks running for you on the screen. And Orient Pro, some kind of play with regard to data center. We'll have to see how it actually plays out. For the time being, though, these stocks did pretty well. Precious metal stocks, though, they did correct over the weekend. And today, some of those stocks that are direct play in terms of precious metals, they came in for profit taking. MCX was down close to around 10% in trade. You had Muthoot Finance as well. That was lower because, that in the entire up move that we saw on gold, Muthoot Finance as well did play out. And Hindustan Zinc, Vedanta just sold a % stake in the company at much higher levels. And today, post that correction that we saw on silver, well, those stocks, in fact, were lower. The AMS companies, though, there was a hike in terms of the PLI component. And because of that, those stocks did well. So Amber, Keynes, both of them, they outperformed in today's trading session. Moving to some of those IT sector names, there was some kind of relief that came because of the harbor turnover threshold for IT services. That was increased. Some kind of booster shot coming in with simplification of buyback rules as well. That's what pushed these stocks up. So you had Wipro that was higher in today's trading session.
Nigel, thanks very much for taking us through that action. Now, in what was a surprise move, the finance minister proposed hiking the securities transaction tax, or STT, on equity futures and option contracts. Now, the STT on futures will be hiked by 150% and by 50% on options. Here's what market experts made of that surprising move.
STT increases beyond expectations of the market. But in some sense, it is the syntax of the market. 9 out of 10 retail investors were losing money. The benefits was mostly going to the HFTs. Undoubtedly, government had to take some step. We can only pay that STT and capital gain. STT was introduced in lieu of capital gain. With increased STT, the Honorable Finance Minister may look to reconsider capital gains taxation.
Don't go by the immediate reaction. Markets are spooked because of the STT, but I think overall, what she mentioned in the first paragraph, reform over rhetoric, action over ambivalence, and people over populism, I think I would have summarized in a similar manner, but she herself said before presenting the budget. So I'm in a glide path towards lower debt to GDP, continued focus on infrastructure, which includes digital, physical, social, continue to, the ease of doing business, improving the quality of life to make the most of the demographic dividend. I think all of them are structurally positive, and particularly on the buyback, because all of us, we have been discussing that the cash is getting piled up in the corporate balance sheet. So either they do the capex, which I think some of the tax incentives on data center and few other things should spur that.
FIs are definitely out of the market today. So real impact of this will be seen tomorrow in terms of how are they thinking about this particular thing, because a lot of marginal trades will become unviable. So the high frequency traders, for them it will be unviable. A lot of it will be unviable. Second, there are a lot of products, arbitrage products, where a lot of money is there. Those will become unviable, and hence there will be a lot of redemption in those products whenever this new regime comes in. So the market will get less leverage and less liquid. So the impact on the market will be a little more bearish because of this particular provision.
The increase on STT on derivatives, I look at it as a move from the government to oriental and align people towards trading and investing long-term in equities. Today, the equity STT, it will be lower than F&O STT, which encourages them to get into the equities market. That is totally in alignment with the capital formation requirement of Vikasit Bharat. The STT increase, this is not the first time it has happened. Every time when it happens, the reaction is exactly like what you said. The market feels worried and concerned whether it will impact volumes, will impact revenues, etc. India is a growing economy and fast growing in a big way. And in that process, what we have always seen is the market growth is so much, and the depth of the market grows so much. The initial concerns go away soon, and the market starts developing.
Now, Budget 2026 has also proposed a 20-year tax holiday to any foreign company that is providing cloud services using data centers in India. Rachna Dhanrajani is here with the details of that and the significance of this move. Rachna?
That's right. Budget 2026 puts data centers firmly in focus with clear tax incentives aimed at pulling global cloud companies into India. The finance minister has announced a tax holiday till 2047 for foreign companies offering global cloud services from data centers located in India. Any services sold to Indian businesses, however, will be routed through an Indian reseller and they will be taxed locally. But to reduce tax uncertainty, the government has fixed a 15% safe harbor margin for related party data center services. This is a move aimed at cutting long-running transfer pricing disputes for global cloud firms. But there's also a supply chain push. Non-residents warehousing electronic components in bonded warehouses will be taxed on a 2% profit margin, translating into an effective tax of about 0.7%. So who benefits globally? Well, large cloud providers running global workloads from India stand to gain definitely. This includes Amazon Web Services, Microsoft Azure, and Google Cloud. Now, global electronics manufacturers using bonded warehousing in India also benefit, as do the multinational tech firms looking for long-term tax certainty till 2047. On the Indian side, however, several companies are positioned as key partners given that they have a joint venture. First up is Adani Enterprises, who's in a joint venture with EdgeConneX under Adani Connex. There's Reliance Industries, who's building large hyperscale data centers, campuses in partnership with Brookfield and Digital Realty. Then there's Bharti Airtel. Through Nextra Data, this works with global cloud and enterprise clients. Then there's also Tata Communications that's providing data centers and cloud infrastructure to global enterprises while being located in India. And then there's ST Telemedia Global Data Centers that runs a large India presence and is backed by the parent company that also has ownership from KKR. So put together, these measures show how the budget is using tax certainty, lower logistics costs, and clear rules to position India as a base for global cloud and data center operations. Back to you.
All right, Rachna, thanks very much for taking us through that. Now we'll move on because the budget also saw a slew of initiatives to boost the textile and the seafood industries. But are these measures going to help offset the impact of US tariffs? That's the question we're asking, and Shilpa Ranipeta has the answer. Shilpa, are these measures enough to offset a 50% potential tariff hike?
Well, that's the hope. But let's look at what the announcements were. Now, the government has announced a series of relief measures for India's textile, leather, and seafood industries. All labor-intensive sectors, all currently under pressure due to high US tariffs and weak global demand. Now, starting with seafood. Now, seafood, the duty-free import limit for inputs used in seafood processing